Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachajani. Mahima, hi.
Hi, good morning.
Did you buy anything yesterday?
Not really.
But we went to the electronics store. The way that you were looking at those flat screen TVs, I thought definitely you're going to buy something.
I was probably looking at an iPhone Air, but let's see.
Yeah, I saw that you were looking at, but your phone is new.
Yeah, so that's why
There you go. There you go. I think she's trying to send a message to a certain someone. Let's see if they listen. But having said that, let's talk about where the markets are right now. And you have declines of about 1/3% right now for the Nifty 50. And we started off in the green. We were anticipating that there would be cuts of about 30 points or thereabouts. And we start in the green. We've given up some of that ground. And of course, IT was in the green. It now currently is in the red and contributing to the most at this point of the declines. And I'm looking at the Nifty 50. Even the FMCG basket as a whole is losing a little bit of ground, in fact, at this point. It is contributing the most of the decline sectorally right now. And you have oil and gas as well because of Reliance Industries, which is trading in the red. Let's pull up the contributors on the Nifty 50 and you'll see HDFC Bank and Reliance Industries among the losers for the benchmark. And that's resulting in the declines that you're seeing. In fact, just about 30 points or thereabouts off that 120 points just by those two counters, and not too many gainers. Bajaj Finance up and about. The automotive back is doing particularly well. In terms of sectoral contribution on the Nifty 50, it's accounting for about 22, 23 points or thereabouts. So the likes of Maruti Suzuki, M&M doing particularly well. Eicher also in that list. And the reason for that is that quite a few of these stocks have perked up because Maruti Suzuki, for one, shared an update on Navratri sales. You had Hyundai that also shared an update on Navratri sales. Quite considerable is the sales that they're getting. Of course, Hyundai is off the high point of the day. It was trading at one point with gains of over 3%, and that's bouncing back from yesterday's declines, but it's off the high point now about 1.3% higher. But you know, KEC International also is doing particularly well, or at least it was. I wonder if it's holding up. It is indeed. And that's on the back of that order win. We spoke with the management as well. 2,300 crore, another transmission and distribution order.
Interesting one. And because of that, we're seeing the up move in the stock as well, up 7.6%. Again, a very stock-specific market. You know, in the broader end of spectrum, some counters that are not doing well include something like a Hariom Pipe, Dreamfolks, yet again, lower circuit, Kesoram Industries down 4%, STC, Adani Power seeing some profit booking today. Nahar Capital is also seeing some profit booking. Godrej Phillips continues to be under pressure since the past 5 odd days now. But some counters, if we can try to pull up the BSE 500, that are in fact doing well. And, you know, keeping that advanced decline ratio in check includes something like a GSPL, AU Small Finance Bank. With that, the agreement with Zaggle is kind of boosting the counter. TCI Express, Jamna Auto, JBM Auto, a lot of auto names in focus. And something like a Varroc Engineering is also doing well. But with that, let's also welcome in our guest for the day, Asta Jain, Senior Research Analyst at Hem Securities, and we'll also be joined by Swati Hotkar, VP Technical Research at Nirmal Bang soon. Asta, I'll take up the first question with you, which is on, this is from Niva, who's writing us from Chennai and asking about trend. But I'll come back to you. I'll circle back to you, Asta, with regards to where trends stand. Right now, we're joined by Mr. Prateek Gunwant Raj, who is the CMT of Europatheek Sales, and Jay Gunwant Raj, who is the CFO of Prateek Sales, joining us now. And Agni is taking this interview. Agni, over to you.
Prateek, I'll start with you first. So you are, as the CMD of the company, best placed, I think, to tell us more about how the company plans to take its growth ahead from here on.
So yeah, we are into this decorative wall panel and premium laminates. We'll continue to do so. This market is growing. It's a new sunrise sector. We feel there is a lot of scope to grow from here, and our endeavor would be to grow this and focus on this market.
Right. And Jay, I would like to come to you after that. So this was a pure offer for sale, and there is very little immediate capital available with the company now through an IPO, which usually other companies enjoy because they come up with a primary issuance also. So how do you plan on carrying forward this growth that you plan? How do you plan on expanding, say, your distributor networks without the availability of an immediate fresh capital?
So as we have grown since last few years with our internal accruals, so we have we have a continuous cash flow with our internal accruals. So we don't need growth capital currently for our expansions. We can do with our profits and everything. We have a run rate of 7-8 crores after PAT every month. So we have good amount of cash also in our hand. So for the growth capital, we can plan with our internal accruals itself.
So how much has your distribution network expanded, say, in the last 3 to 4 years on an annual basis?
So our endeavor is to expand around 10 to 15% every year.
That is now, right? Like I'm saying, before listing, how much had you grown on an annual basis?
Yeah, same 8 to 10%.
Same 8 to
yeah,
10%.
maybe 12% on an average every year. We plan to expand, go deeper into the Indian markets.
So, like you said, gentlemen, this is a sunrise sector. The first customers will always be the affluent who will be ready to take on the experiment of a decorative wall panel. And you're saying you're planning on expanding into areas like the rural economies and all. So, can I understand what kind of a market penetration that entails? If suppose a geography for you has 100 households, how many of those 100 households actually end up using a decorative wall panel for their house?
So people, if they want to use a substitute for paint, there are very few products. So I feel each and every home can afford at least a wall with a decorative wall panel. So the market is expanding, and we are hopeful that people will welcome it and use it in their homes, in their commercial spaces. So it's very easy and quick installation. It gives a look of a wood or a marble. So we are substituting a natural product with an environment friendly product as well. So keeping all these factors in mind, the young people who are making their homes, their workplaces, they would prefer using these in their coming sites.
Right, and that brings you on to what kind of products you have to offer. So, can you take us through which is the most revenue-driving product in your lineup right now, and how do you plan on expanding that?
So, as you know, we are into fast fashion. We launch a lot of new products. Last 4 years, we have launched 113 catalogs. So, every year we bring around 1,000 to 1,100 designs. Innovation is the key to our business. We want to remain that way. Product wise, we have a good mix. There is not a single product which dominates the sales. We have polystyrene, we have PVC, we have acrylic, we have aluminium, clay, various substrates. So not a single product that the company is dependent on to grow from here.
Right. Jay, I'd like to direct my...
All right. Well, that was the management of the newly listed Euro Pratik sales. It's up and about in trade, at least it listed with a premium. Let's go back to the questions. And by the way, if you're tuning in for the first time, the way that you can get in touch with us, 2 ways. In fact, you can send us a message on the WhatsApp number that will flash on your screen. There it is. Or you can call us on the number at the bottom of the screen. The first question we're taking is from Chandra, who's writing in from Bengaluru. And Asa, this one's for you. Hi, good morning to you, first of all. He's got a 5-star shares at a level of 540. He's looking for a slightly shorter term view, 5-star finance. And what's your opinion on this one?
Hi, good morning to everyone out there. Talking about this counter, we were positive on this counter since the IPO came. And now if I talk about the recent, fundamentals of this counter, we feel that asset quality is weakened little. But I think going ahead in the H2 of FY26, definitely this asset quality will going to improve. So we are positive in the H2 of FY26 for this counter. And hence we believe that in the longer term, it can be a good counter to stay invested in. Our idea here is maybe in the short term, some sort of a stress can be witnessed, but in the long term, because management is quite cognizant of the fact that there is a issue in the asset quality, and they are taking all the initiatives and serious measures to make it better in coming time. So my idea here is to stay invested in this counter and hold it for the longer term. Price target which can be set for this counter, I think it can be 600 to 620 in the medium to long term.
Okay, all right. We've got our next question from Siva Chaitanya, who's writing us all the way from Toronto. And holding 15 odd shares of Vikran Engineering at a price of 106 rupees. Wants to know if you can accumulate more at this point, and from a longer term perspective, what's the view on this? Asta, I'll stick with you for this one. Vikran Engineering, what's the view like?
So view is positive. Now talking about the fundamentals of this counter, we all know that this is a recent IPO, and in that IPO also we have recommended our clients to go for this. Vikran Engineering is looking a very strong counter because this is the company which is like, into the engineering space, and they are like fast growing EPC company in the terms of the revenue growth, if I particularly highlight on. And in fact, they have outpaced the industry growth. In fact, if I'm talking about their, contracts also, they are into the water infrastructure, and they are into the transmission and distribution of the water infrastructure as well as the power infrastructure. They came out with the IPO at the price point of 97, and the price to earning ratio was 32 at that point of a time, which looks to be, which was a reasonable one. But still, we are positive on the prospect of this counter. So I'm recommending a hold on this counter for a price target of somewhere at around 10% above from the current levels.
And the stock is seeing a little bit of pressure in trade today, 3.5% lower and trading above that 100 mark, just about. We've got a question from Niva from Chennai, and Niva is really kind. She says that Mahima absolutely rocks. And
She said both of us rock. She's not said
I can pick and choose. All right. But having said that, she's asking for a fundamental view on Trent, and she's looking for a fresh entry for a period of 3 years. Asta, what's the view? Would you be bullish?
So talking about Trent, yes, we are bullish on this counter with a price target of more than 5,000 in the medium term. In the shorter term, I think the kind of valuation it is catering right now, that can be, spoil spot, and that is why we are not seeing the counter to perform so strongly. But going ahead, what we believe that there is expansion of the west side and the Zudio, and there is an increased penetration in the core consumption market for this company. And the most important point is that the private label part, which is always a margin garner. So I think the private label categories is also gaining traction. My idea here is to stay invested in this counter for the price target of 5,000. Now for the fresh entry, I would recommend that just wait for some more downfall to come. Maybe at around 4,800 to 4,750 are the right levels to make a fresh entry also in this counter.
Okay, all right. So that's with regards to where Trent stands. We've got our next question from Rita, who's writing us from Delhi. Rita is asking about Tata Steel. She's bought at the levels of 63. The quantity is not known, but wants to know a view with regards to this counter from a longer term perspective. Asta, your view with regards to Tata Steel?
So Tata Steel is looking good from the longer term perspective, as we know that the steel counter, especially the industry, is all set to boom from the, as we are seeing that the metal counter is looking very, very strong. So Tata Steel from that per se is looking good. And in fact, whatever they have shown in their Q1 FY26 performance, it was ahead of the expectation. Although there was a decline in the revenue, but the decline was not that strong as what we were expecting. And now going ahead, we believe that there will be an improved, profitability in their India operations, and definitely the European operations will see some sort of turnaround. So a good counter to stay invested in. So, and price target can be set at around 210 at the current levels.
I understand. Swati Hotkar is joining us now, AVP Technical Research at Nirmal Bang. Swati, very good morning to you, and glad that you can join us. I'll come back to you in just a bit. Tarun has got a question which is extending what you just said, Asta, with regard to Tata Steel, and it's expanding on that. He's asking, would this be the better pick in the steel space, or would you pick another one for a period of 1 to 2 years, based on fundamentals, based on valuations?
So I think Tata Steel is also looking good to us, and it can be a good bet in the steel space. Otherwise, we find Hindalco and SAIL are also good contenders to go, in the longer term. But top pick can be Tata Steel.
All right, so that's with regards to where Tata Steel stands. We've got our next question from Ram, who's writing us from Chennai. He's got around 40 odd shares of HDFC AMC with an average price of 2,000 rupees and wants to know as to what's the efficient way to accumulate this particular counter. Swati, do you think the charts are attractive enough to average out right now, or should he wait for a while?
Definitely, the charts are really doing very well. But if you want to take the accumulation positions, I will suggest to wait some more time. 5750, 5800 are the good levels to take a buy call on the dips, because 56 acting as a very crucial support levels. If you don't want to miss the rally on the higher side, definitely 20-30% can be taken as a fresh positions at the current market price. I believe that the stock has a very strong potential to reach up to 6,000 to 6050 levels. The view is definitely positive.
Okay. All right. Ravi is calling us from Patna. Ravi, very good morning to you, and thanks so much for calling us. How can we help you today?
Yeah, good morning, Alex, and Shubh Navratri to all of you.
Shubh Navratri to you as well, and your family.
Yeah, thank you. Actually, I'm having Vodafone shares quantity 5,50,000 at the rate of 8 rupees 78 paise. Fine. I just bought it in recent, surge. So a very short-term view I have for the next one month or 2 months only. So I just want to know that what could be the possibility. Should I hold or should I exit from this stock?
I'm just wondering, and this is out of curiosity, Ravi, 2 questions. One, since it's a trading idea, I'm just wondering, is this a very large percentage of your shareholding?
I mean, you can say more than 80% of my entire capital is in this Vodafone stock only.
Okay, and so therefore, follow up to that, why did you decide to take such a concentrated bet? And if you're thinking about the short term, you're thinking about one to 2 months?
Yeah, actually, I watch your show regularly, and past 2 or 3 months before, there was a show where Tamanna was, speaking with some of the guests who were like, who were talking in favor of Vodafone, like government is not in favoring of duopoly in this market, and a couple of those news which came into the market, which through which I gained the confidence to buy this stock.
Okay.
So I was.
But Ravi, is this the first time you're tuning in to Ask Profit?
Yeah. This is the first time.
Because on an ongoing basis, I'm sure that conversation was talking about an update that took place and the relief that they have sought and various other factors. But then it is repeated consistently on this program and other programs that this is a high-risk investment that you might make. So there is a potential, and you've put 80% of your capital, which is why I'm wondering. I would caution you. I would ask you to maybe take some money off the table. Of course, that's not my recommendation. I can't do that. Let me go across to an expert and find out what they have to say. In fact, what I'm going to do is I'm going to ask both of them. On the technical side, of course, Swati, since this is a short-term question, he's bought a significant quantity, 5.5 lakh shares at a price of 8.78. And though it's not too far away from the current market price, he's losing a significant amount of value. What should he do?
Yes, Alex, you have rightly pointed out at the nearby rate, he is having a buying quantity and very huge quantity. And this month we have already seen a very good amount of a momentum. At least the stock has given almost 30-31%. And I believe we might witness some sort of a profit bookings nearby 9 levels. 9 is acting as a very crucial support levels, and already the counter has shown a very smart rally from 6 to 9 levels. If it doesn't give the breakout of 9 rupees on the higher side, then we are likely to witness some sort of a profit booking. If you want to keep a profits, stop losses, 7.9 is acting as a very crucial support levels. A tight stop loss is there. Since you have a huge quantity, you might face a huge losses as well. To keep as a tight stop loss of 7.9 rupees, and if you're getting any momentum towards to 9.50, I would suggest to book your profits. No need to carry for a longer term duration this particular stock.
Ravi, the limited point is that if you are putting 80% of your capital to work, do you want to put it in a stock that might give you returns over the short term, or do you want to put it in a stock that will give you returns in all likelihood or will earn a significant amount of revenue and profitability over the course of the next 5 to 10 years? That is a question that I'm asking, and so therefore from that lens, Asta, if you were to take money off the table from Vodafone Idea and you were to invest in a long-term growth strategy, where would you invest?
Sure. So first of all, I would like to say, and I would like to request to Ravi that please don't put your, large amount in any of the stock which is under uncertainties, because there something is going on. The court, Supreme Court is also addressing their plea now. The September 26th, they have deferred the plea. Now government is also coming in the support of that. But there are various uncertainties. Now, along with the uncertainties, fundamentals are also not very supportive. Why? Because the other peers like Bharti Airtel, like Reliance, their ARPUs are high than this company's ARPUs average revenue, per user. So we have to see fundamentals also along with the kind of uncertainties which is hovering around the counter. So in such a case, please don't put your huge amount or huge hard-earned money in such type of counter. Now, talking about this counter, let's wait, because I think Friday, September 26th is the date when the Supreme Court will again listen to the plea. And what is the comforting part is now that government is also, in a support of this company. However, fundamentals are not so attractive. Their fundamentals like ARPU rose just 0.6% if I compare to the other peers like Bharti Airtel, etc. So just wait for some more time and let's see how the verdict comes. Meanwhile, I would recommend that if you get some higher price, try to exit from this counter and now look after
Would
the
you
other
agree?
peers.
Would you agree that this is a hope trade? Would you agree that this is a hope trade?
Yes.
So,
This
so
is a hope trade. Yes, because I don't want him to fetch huge losses before the final verdict comes. Maybe if verdict comes in the favor of a company, we might see some
Yes.
some sort of upside. So the loss can be reduced. So here it is the whole game of high risk.
high
And if
reward.
he can
Yes.
take
So
yes, high
therefore,
risk and high reward.
no. So
Yes.
so to both of you, just to close out this conversation, in the case of a hope trade, how much of your capital would you allocate, in your opinion, to a hope trade? Asta, you first.
See, I do never
I know, but I'm
allocate
saying
and
if you had to allocate to a high risk strategy which has a chance of you losing your capital entirely, how much would you allocate?
hardly 10 to 20%,
Okay.
not more than that.
Okay, and you,
Not more
Swati?
than-
Sorry, you're on mute.
I'm really sorry, Alex. Yes, definitely. If we do the comparative analysis and if the risk reward ratio is really not favorable, 10 to 15% is sufficient amount to take a risk.
All right, I just want to make that point. And by the way, we discuss stocks, we discuss fundamentals on an ongoing basis. Of course, we have to react to news and developments. And the fundamental analysts that come onto the channel at that moment will talk about the prospects as they see it at that point. Ultimately, when you put your money to work, make sure that you're looking at the overarching strategy and build your portfolio accordingly. A diversified portfolio is almost always a better idea.
And also there's a if and but situation, right?
Absolutely.
When a fundamental analyst comes and gives a view, there's always a situational answer that he or she gives. So one needs to keep that in mind and listen to the whole thing that the fundamental analyst is trying to convey. But with that, viewers, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड आईपीओ।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. You're joining us on this special conversation around the IPO of Anand Rathi Stock and Brokers Limited. Of course, this issue is set to open on the 23rd of September and will close on the 25th. The price band has been set about 394 to 414. Apologies. I have with me the management of the company, of course, Pradeep Gupta, the co-founder and vice chairman of the company, as well as Mr. Roop Bhutra, the CEO of Investments. Gentlemen, welcome to this conversation. I wanted to start with the conversation on the IPO itself. What is it that you're bringing to the market? This company is known amongst investors as a broking firm. You also have a margin trading facility that you run, both of which contribute a majority of your revenue. But for an average investor, what are you bringing to the company?
See, this is the second company which is coming in public from our group. Basically, earlier, about 3.5 years back, we came with a wealth company which is listed in a market site. So this is a purely broking and distribution company. This is one of the oldest company. We started our capital market journey 30 years back. Sure. way back in 1994, and since then we kept on adding various different businesses, various different verticals. In this company, what we are doing, we are catering to almost all category of customer, from retail to MNI, HNI, NRI, corporate, and institutional. So all kind of a category of customers, we are satisfying the need of investments of any individual investors who are dealing with this company. And primary idea is how investments need of a specific customer should be satisfied. And having said that, it's not only through equity, but various other asset class and product from a distribution point of view, which is mutual fund, AIF, PMS, and corporate bonds, and so on and so forth. And we are trying to see how a customer really, from a long-term perspective, create wealth, generate wealth, and constantly get a return on investments on a positive side. So that's the overall theme of this particular company. Since these days now, in this company, you need, it's more capital intensive, you need capital to grow. Margin trading facility is one of the major requirement by most of these customers because of a simple reason. How a person can increase his return on investments by investing less and taking certain amount of funding on the book they have got. So that's what we are trying to do. So for satisfying the need of our company of working capital, we have come in the public and asking for our help. So this issue size is about 745 crore. Out of that, large portion, complete portion is for working capital, and major portion is going to be attributed towards margin trading fund.
Okay, understood. I'm trying to understand the current lay of the land in terms of the industry that you operate in. You've got a few other players who are listed, who currently operate in the public markets. Compared to them, where does Anand Rathi Stock and Brokers, your valuation and your position lie? If you can tell us a little bit.
So in this space, every single person is following certain amount of business rules and business guidance, and they are following that. In my opinion, there are two kind of businesses or business rules which are being followed. One kind of a company who are purely dedicated looking at market share, looking at volumes, and the second set of companies who are looking at and addressing and trying to address the investment needs of a customer. We fall in a second category. And by and large, if you really see, our company is more dedicated towards look after the investment side of any single investor. Whatever investment need by way of looking at various different product of investments, we are trying to provide, we are trying to help customers to understand the nitty-gritty of that particular product, trying to give all the input on that particular investment product, and try to bring the best basket of product before the customer.
Right, so that was the management of Anand Rathi. The IPO opens today in case you're planning to subscribe. All right, we've got our next question from Sushila, who's writing us from Bellary and asking about Adani Power. She's bought at the levels of 164 and 1,515 shares is what she has in her portfolio and wants to know the targets for this counter. Swati, I'll come to you on this one. Your view with regards to where charts are concerned. What is the support and resistance that you're seeing? Swati, I think you're on mute.
The view on the Adani Power is definitely positive. We are witnessing very strong momentum rally from the last few trading sessions. On the higher side, the resistance is placed at around 180. Beyond that level, 200 levels can be tested. If you want to keep any profit stop losses, I believe that 155 is acting as a crucial support levels. By keeping that as your profit stop loss, you can carry your long positions for immediate target of 180 to 200 rupees.
Okay, standard disclosure and disclaimer, this is NDTV Profit, which is part of the NDTV group and owned by Adani, and so is Adani Power, as the name suggests. Nagaraju is writing in from Hyderabad and asking about HDB Financial. Should he hold? I think he got allocation during the IPO. What's the view, Asta?
Yeah, definitely our hold is recommended on this counter for the HDB financials because in fact we have recommended it at the IPO time also. Now what we are seeing is the NBFC space is looking very, very strong to us. And in fact, if I talk about the HDB financials, they are looking because good because they are highly diversified geographically. If I talk about, then also they are diversified product wise. Also, they are quite a diversified company. And now the interest rate is also acting in the favor. So I think this is all making a platform for this company to move higher from the above levels, and hence we are recommending hold on. This counter price target can be set at somewhere at around 820 to 850 odd levels.
Got it. All right. By the way, if you've got a question for us, you'd like to speak to us, which we would love, because we'd love to hear your voice, you can call us on a number at the bottom of the screen. Suddenly today, after quite a while, the phone lines are open. We've got IOC that we're talking about next, and this is a question all the way from Dubai. Shivakumar is asking this. He's bought levels of 69 rupees, 3,750 shares, and it's currently trading, as he points out, at very close to the 150 level. So he's made quite a bit of gains. He's wondering whether to sell or hold on for further gains. Swati, what's the view on the charts?
View is definitely positive, Alex, because from the this month is really doing very well for this particular stock. We have already seen a very strong rally from 135 to now almost 150. I believe it has a potential to reach up to 155 to 160 levels. So you can definitely hold on the long positions because your buying price is at a lower levels. I would suggest to keep a profit stop loss of 142 rupees, and you can carry your long positions for immediate target of 155 to 160.
Okay. All right, okay. We've got our next question from Ramesh, who's writing us from Hyderabad and asking about Aptus Value Housing Finance from a longer term perspective, and wants to know if this is the right time to make an entry. Astha, your view with regards to this counter?
This housing finance, which is quoting at around 322 odd levels, I believe that one should, wait for some more downfall to come in and then make an entry into this counter. Although this counter is looking strong to us because this is one of the very, strong AMCs. And in fact, they have reached the AUM mix of greater than, 20% in this NBFC if I talk about. And their yields are also very, very strong, 18 to 20% yield they are garnering right now in the non-housing, portfolio. And in fact, their AUM growth from the past few quarters is a strong or a decent one, we should say, because it is above 10%. But I would suggest that buying at the lower level is a better choice. However, price target can be set at around 380 to 400 odd levels.
Okay. All right. So that's with regards to where Aptus Value Housing stands. We've got our next caller. Sharja is calling us from Hyderabad. Sharja, hi. A very good morning to you. How can we help you today?
Yeah, good morning, Mahima. And happy Navratri to all the NDTV team.
Thank you so much. Happy Navratri to you too and your family.
Thank you. Today I have query on Urban Company. So I hold 40 shares at price of 168.2.
Okay.
So I took the share for upcoming festivals, which we may use more of services of the Urban Company. So I have invested a small quantity in that. So I want to know the view of next 3 to 6 months, and whether I can add more to more stocks.
Okay. Okay, Sharja, got your question. Since
Can I have this? I want a query from a suggestion from Asta ma'am.
Asta ma'am, yes, I'll take it up with Asta only because we'll not have enough data on the charts for Urban Company to go to Swati. So, Asta, the only concern right now for Urban Company is with regards to where valuation stands. Generally, platform companies trade at around 8 to 9 price to sales. Urban Company is now trading almost 17 odd times right now, considering the 77% uptick that we've seen versus its issue price. Do you think next 6 months the rally or the momentum that's there on the counter right now will continue, or do you think this will slow down?
Yes, of course, because what happened, it has come in the price to book value multiple of around 6. Now it is quoting price to book multiple of around 10. So we have seen a huge jump. But I was positive on this counter since the IPO came because we were very much liking the urbanization concept. As we all know, with the, more and more husband and wife, they all working. So definitely this counter and this concept is gaining traction not only in the urban areas, but in fact, they have an exposure in out of India also in the countries like UK, and there such type of concept really works. So we were positive on this counter since the IPO came, and I'm still positive on this counter. Let it fall more, maybe at around the level of 157 to 160. Then accumulate this counter because we are positive on this space, and we are recommending it to hold for a longer term with a price target of more than 200. So stay invested in this counter and buy it at the lower price of around 159 to 160.
All right, our next caller is from Hyderabad. Narendra is calling us. Actually, you know what? I promised that I would take the next question from WhatsApp. I'm going to do that. And Scient is the name of the counter that we're talking about next. And Vikram is writing in, asking about this. He says that he feels that the fundamentals look reasonably good. The valuations look attractive. Is this a good time to accumulate more at this current price of 1,187? He's bought at an average price of 1,171. So very close to the current market price. What's the view, Asta, on this one? I know that a few of our other fundamental analysts like this one.
Yes, because it is one of the leading counter in the IT-enabled services, providing engineering, research, and development also, and they have got a very good focus on that segment. Now, talking about this company's fundamental, I think the company is now moving towards semiconductor business, and they are launching some GCC-focused unit also. So, I mean, all these launch will help the company in the long-term, growth story. And in fact, the leadership is also very strong because it is a new leadership, and now the company is prioritizing its execution efficiency part in this new leadership. So, we are positive on this counter. The only problem is right now the kind of news flow which is going around in the industry is one of the concern, and hence buying at the lower level or accumulating at the lower level is preferable for this counter. Although our price target is more than 1,300, but I would suggest that buy at the lower level of around 1,100.
All right. So that's with regards to where Scient stands. We've got our next caller. Narendra is calling us from Hyderabad. Narendra, hi, a very good morning to you. How can we help you today?
Yeah, good morning, everyone. Happy Navaratri, everyone.
Happy Navaratri to you too and your family.
Thank you, madam. Thank you, sir. Actually, regarding the, I have the shares like around 100 shares that Access gets. I bought around 860 rupees. It's currently it's 100% profit. So can I book the profit or can I hold for the 1 year? So.
Okay. All right. Got your question, Narendra. I'll take this up with Asta quickly. Asta, your view with regards to where Access stands and 1 year point of view, is it a good counter to continue to hold, especially when he's sitting on profits of almost 87,000 rupees?
So I would like to highlight that we have, covered this counter in December 24 when the price was at around 586. I still remember we had come out with a note with a price target of 700, although we have already achieved those targets. But this counter was looking very, very strong to us. And now I think some profit booking is always recommended because here, the percentage of profit is quite high. So yes, I would suggest to book partial profit because the valuation are also seems to be on the higher side, but fundamentals are still intact. So partial profit booking is recommended from our side for this counter.
Partial profit booking in Access is the view. We've got a quick question on Bell Rise, which I'm going to take to Swati. Swati, on the charts, Shastri wants to know, he's writing in from Chennai. He's bought at levels of 131. That's his average price. What should be done at this point? He's in the green. Should he book out or hold?
No, definitely. As of now, the momentum is really doing very well, and the stock has given in such kind of a market also. It has given the breakouts of the previous swing high, which was at around 156 levels. I believe the strength is intact. As of now, the stock has not entered into the overbought zone as well. So upside 170, 175 levels up to that level, the rally is likely to be continued. If you want to keep a profit stop loss, 155 will be the profit stop loss, and you can carry your long positions for immediate target of 170 to 175 levels.
Okay, and significant amount of profits that he's making right now, around 6.5 lakh rupees. That's an interesting one. And, our director also pointed out that that's a significant amount, in fact, in terms of quantity also to invest in. So I'm just wondering as to what percentage of his portfolio is this entire holding. But moving on to the next question, Pakshal is writing us from Bellary and asking about capital market segment. If this is a good theme to enter right now from a longer term perspective, that includes AMCs, Rajasthan Transfer Broker and depositories as well. Asta, your view with regards to this segment and your picks in that segment?
So this segment is looking good to us, but I think some lower levels are always welcome to enter into this segment because the kind of market volatility right now going on, maybe it will take another 1 month to understand the things from both the perspective global as well as local, because our result season will start kicking in. So I think in fact from there also we'll start getting the clues how the company's earnings are going on. So lower level buying is always recommended, and in that space, HDFC MC is our topic.
All right, so in the AMC space, and I believe that somebody else also had a question on the asset management company space, and this is indeed something that you can look at. Suresh is calling us from Hyderabad next, and Suresh, very good morning to you. How can we help you today?
Very good morning, Alex. And currently I'm holding the BPCL.
Okay.
Shares, 250 shares at 333 price. So I am planning to add the 250 more shares for short term within next 2 to 3 months. Is it a good decision where I'm taking, and what is the price target where I can see in next 2 to 3 months?
Okay, let me get you a technical check on that. Swati, I'll come to you on this one. BPCL bought at levels of 333, which is not too far away from the current market price. What's the view for the next short term?
The short-term view is a little bit cautious because we are witnessing a very sideways momentum rally into this particular counters. Upside, the breakout levels comes at around 335. If it manages to keep the breakout of 335 levels on the closing basis, then the rally is likely to be extended towards to 350 to 360 levels. So for a short period of time, consolidation phase we are likely to witness. But if you are holding period of at least 6 to 7 months, then definitely view is positive. 375, 380 targets can be seen. So you can hold on the current buying positions at the current market price by keeping the tight stop loss of 315. 315 will act as a very crucial support levels. By keeping that as a stop loss, you can definitely carry your long positions.
Okay, all right. So that's with regards to where BPCL stands. We've got our next caller. Yes, Divya is calling us from Chennai. And Divya, hi, very good morning to you. How can we help you today?
Good morning. Happy Navratri to you all.
Happy Navratri to you too, Divya.
The question is IDFC First Bank. I've been holding it for more than a year now. Bought it at 82 rupees, 500 shares.
Okay.
It dipped and then there were news that it will come up, but it's still sitting on the loss, though it's minimal. Should I exit this and invest that in another positive account?
Okay. And if you want to continue to hold, how long can you continue to hold, Divya?
I can go on for 6 months, 1 year also.
Okay, then I'll get your technical view on this one particularly. Swati, your view with regards to where IDFC First Bank stands for the next 6 to 1 year, are the charts looking attractive enough?
I'm not that much bullish onto this particular bank if we compare to the another PSU banks. I will suggest on every rate you should exit the long positions because we are not likely to witness a much very strong momentum rally in this particular stock. So I will suggest to sell on rise. Apart from that, you can invest those capital into the Bank of Baroda is good. Canara Bank is really doing very good from the last few trading sessions. SBI, those three counters are the really will be act as a leader for the bank nifty to going up on the higher sides. So these are the three counters where you can spread your capitals and you can invest into those kind of counters.
Okay, and by the way, you should have a look at the earnings as well. The last quarter was a bit of a disappointment, which is what had a bearing on the stock prices. You probably well know if you've been holding for some time, and the earnings season is just around the corner. We've got our next question. It's a fundamental question on Indian hotels, and this is from Ashok Pai, who's writing in from Mangalore. And he's asking whether he can buy for a period of 5 years. Asta, on the fundamentals, would this be your pick in the hotel space?
Indian hotel is looking good to us, but I think buying not at the current level or buying at the lower level is mostly recommended for this counter. Now, talking about the fundamentals of this counter, fundamental seems to be quite okay. We are believing that going ahead, the average revenue, per occupied room is definitely going to see an increase. In fact, the coming season, that is the vacation season, especially the winter breaks, etc. Definitely, these are the time for the hotel company to see a strong momentum. So we believe that this company is going to post a very strong set of numbers going ahead. However, the results were also in the line. So yes, buying is recommended, but not at the current point of time, maybe at the lower level. And we can see the robust performance in the coming quarters from this counter.
Okay, all right. So that's with regards to where Indian Hotel stands. We've got our next caller. Ram is calling us from Hyderabad. Ram, hi, a very good morning to you. How can we help you today?
Good morning, madam.
Good morning. Go ahead with your query.
IRB Infra Developers, madam.
Okay.
Buy price 67 rupees, 439 shares, madam.
Okay, and you want this from a shorter term perspective or a longer term perspective?
A long-term perspective.
Okay.
Add more.
Okay, got your question. I'll take this up with Astha quickly. Astha, your view with regards to where IRB Infra stands, very quick.
View is positive because what we have seen is the decent operating performance from the management perspective, and I feel there is a steady execution, and we can see a strong total growth also. So it is a good counter to buy on at the lower levels.
All right, it is now time for the rapid fire round, and this is where we take as many questions as possible over the course of 2 minutes. Let me start things off with a question on L&T Finance, and this is a technical question that is being asked by Carol from Mumbai. She's bought at levels of 130. She's asking whether to sell it at this point. Should she? Swati?
No, you can definitely hold on the long positions. 230 is acting as a crucial support level, so you can hold on for a target of 260 to 265 levels.
Okay, Thyrocare is the next one. Atul Kaushik from Meerut is writing in, wants to know a 6 months view on this one. He's got 1800 shares bought at the levels of 1245. Your view, Swati?
My view is a little bit cautious because counter is playing low top, slow bottom formation. You can hold on the long positions by keeping a tight stop loss of 1180. If you're getting any rise towards to 1270, 1280, you can exit the loss.
Okay, Praj Industries for the long term, would you hold if you've bought at levels of 510? Raju wants to know. Astha?
Yes, definitely a hold from my side with a price target of 450 at the current levels.
Okay, Taj GVK is the next one. Balaji from Chennai is holding this counter at the levels of 504. 100 shares is what he has. Your view on the chart, Swati, for the next 6 months?
My view is positive for the next 3 to 6 months. Upside can be seen up to 480 to 500, so you can hold on the long position.
Any IPOs that are currently open that you would subscribe to for short-term gains, that is listing gains? Astha, I know you normally don't say that, but Vishakha wants to know.
I think GK Energy is looking very, very strong to us. So GK Energy is one of the IPO. I feel their listing gain should be decent.
Okay, Ease My Trip is the next one. Venugopal Mani Balaji is asking this question. He's got 1,000 odd shares at an average price of 16.44. Whether to wait or start accumulating. Your view on the chart, Swati?
No need to accumulate at the current market price. If you're getting any dips towards to 7.5, that will be the attractive levels to take a buy.
Tata Teleservices, coming back to you, Swati, on this one. Bought at levels of 75. Would you hold or exit at this point? Balaji wants to know.
I will suggest to hold on for a longer term durations. 57.50 to 59 levels can be seen, so you can hold on at the current market.
Okay, well, on that note, we are at the end of this particular edition of Ask Profit. Swati, as well as Astha, thanks so much for taking the time and for answering all the questions that you did. Well, like I said, that brings us to the end of Ask Profit, but up next is Know Your Company, and aren't you doing it?
Yes, we're doing Shopper Stop today.
So Mahima, we'll see you on the other side. We're going to be talking about Shopper Stop. Make sure you stay tuned and let us know what you think. This is NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves
NDTV Profit. A very good morning to all the viewers. You're watching Know Your Company, that is KYC. I'm Hiral Dadia, and with me is Mahima Vachajani. Good morning, Mahima. Interesting company that we're talking about today, which will actually see benefits of GST also trickling in. Yes, we're talking about ShopperStop. Let's first understand why are we talking to ShopperStop today. First up, to understand the GST benefits and the kind of demand surge that probably could be coming in as well for the company, and what's that demand outlook looking like. On number two, on the back of GST benefits, is there a margin improvement trajectory that we should be watching out for from here on? So these are the two main questions that we're looking at, and others I think Mahima will also take us through.
Right, so the aspect that I would be looking at would be competitive intensity, you know, because the competition in this particular space is rising, especially big players coming in with big expansion plans also on cards. And as to what competitive edge strategy that ShopperStop is adopting to distinguish them from the big players that are already there or coming in the markets. The other part is the debt reduction plans. What are they looking like, both in terms of long-term and short-term borrowing? And lastly, in terms of store expansion, what are the plans going in? How is that going to pan out in terms of being capex heavy or asset light? And what is the kind of course, capex amount that they'll be watching out also for?
Absolutely. So these are the key questions that we are looking at, but let's quickly understand about what ShopperStop does. I know all of us are aware because people and all of us are used to shopping at a ShopperStop. But firstly, established in 1991, it's a retailer of fashion and beauty products as well. And clearly, it's got international and national luxury prestige with premium brands that are being sold at their stores. If you see in terms of the segments that they cater to, from shoes to watches, bags, beauty, home decor, a one-stop solution that you're looking at in terms of where the various segments go.
Right. So even in terms of product portfolio, they've got a basket, a variety of portfolio under their umbrella that includes your fashion apparel, accessories, beauty and skincare, and home essentials. With regards to where the overall network stands for ShopperStop, around 299 stores across India is what they're holding right now. 800 plus brands they're catering to in their shops. 70 plus cities is where their presence also stands right now. And right now, the overall area that they cater to is around 4.5 million square feet in terms of where all of their stores stand, be it Intune, be it their departmental stores or whatever. All of these 299 stores is filled into this area of 4.5 million.
And I think what's interesting over here is in the previous quarter itself, I don't think so they did any store addition. And from here on, I think what that expansion plan looks like is going to be key. From 299, what's that aim that they look at? So that's going to be an interesting point to watch out for. But let's quickly understand their strategic pillars now. Now, First Citizen, this is very interesting because the First Citizen members itself contribute nearly 80 to 85% of the sales. And this is actually underscoring the continued loyalty-led strength in terms of where ShopperStop goes. Then you're talking about beauty, the private brands that they hold, and the infant wear. But First Citizen, absolutely key over here that we should be watching out for. So that's with regards to what the company is all about is what we're talking of. But let's quickly look at the rating parameters from here on. We will be looking at the income statement check, balance sheet, return ratios, cash flows. Then we will also look at the shareholding pattern of the company, the street credentials, the street coverage, and the valuation picture. To be noted that the valuation is going to look slightly skewed, taking into consideration some bit of inconsistencies that we've seen. So the price to earnings is what we are considering over here, but we will come back to that as well. But let's first start with the income statement. Now, overall, if you see, it's a very interesting story because it shows a strong recovery, and this is starting from FY22. If you see the numbers from 24-25, the 3-year compounded growth is around 22% in terms of the gross revenues. Margins have remained at that 15 to 17% bracket, though it's seen a dip in last year. And if you talk about the net profit as well, that saw a sharp decline in FY25. But the transition from loss to profit is the key for a ShopperStop because in FY21 on the back of COVID, it saw a sharp decline, a strong rebound that did come in FY22-23, and the sustainability is what we are seeing between FY24 to 25. So that's the overall picture that you're talking about. And if you talk about just the previous quarter, that's the first quarter, it's delivered a strong top line performance, but it was mainly aided by sustained premiumization trends is what we saw, and the customer engagement was very much stronger. Now, there were no new departmental stores that the company actually added during this quarter. If you talk about their average ticket value as well, which is the transaction cost, that grew by nearly 6% on a year-on-year basis. And if you talk about the selling price, that saw an increase of around 3%. And that is actually reflecting a healthy shift when you talk about customer behavior and the category mix that you can talk about. In fact, the company's value fashion vertical, Intune, that also delivered some bit of a robust momentum with sales actually doubling on a year-on-year basis. And 4 new stores were added on that front, which is actually probably reaffirming its, relevance in a value-conscious consumer environment.
Absolutely.
So that's what you're talking about from an income statement, and that's why a thumbs up right now.
And that's what, is going to benefit them in terms of where the GST stands, because below that 2,500 mark for apparel, the GST rate has come down and set to benefit a counter like Shoppers Stop. But with regards to where balance sheet is concerned, in terms of where, of course, the overall equity and other equity stands, it's been stable. The other equity profit plus reserves growth has been growing, mostly because it's a cash business. But with regards to where borrowing stand, there have been, an increasing trend in terms of where both the long-term plus short-term borrowing stands. This does not include the lease payments, but from a 126 crore in FY23 to a 340 crore is what the increase in borrowing has been like. But in comparison to that, something like a cash and bank has, come down in terms of where the trajectory stands, from a 31 crore in FY23 to almost 14 crore in FY25. So the question really here is whether they'll be able to reduce their debt position in the near future. Are they actually planning to reduce their debt position? And this all depends on how they're also planning to expand their store. If they're planning to borrow more money, then the company will see an increase in debt also. And because right now the cash is not enough to pay off the debts that's there on the balance sheet, we've taken a conservative approach here and given it a thumbs down.
Right, now, let's actually link this to the cash flow. Now, if you see the most recent years, that's FY23, 24 and 25, the cash flow from operating activities, that has remained consistently positive, and that actually has become the primary source of cash for the company as well. While there might be slight fluctuations, the overall trend is one of stability and growth, which is a positive sign for investors. It also shows that the company's increased revenue is actually translating into actual cash flow and not just accounting profits. In fact, it has transitioned from a cash-burning entity during the pandemic to a business that is consistently generating positive cash flow from its operations. In fact, this positive cash flow from operating activities is being strategically deployed to fund capex for future growth, which was actually negative, earlier, and to pay down the debt and strengthen the balance sheet. Now, the debt becomes a concern over here, as Mahima was also pointing out, but this is a positive factor right now that we are considering, so hence a thumbs up.
Right. Okay. So the next one is the return ratios that we're looking at now. If we take a look at the ROC numbers, the trajectory has been declining. There was a point of time in FY23 where it reached to that 15% mark, but since then the return on capital employed has been coming down from a 15% to that 12% and 8% in FY25. So from here on, whether the return on capital employed will increase is the question right now, and hence we're again being conservative here and given it a neutral rating right now.
Right. Let's look at the shareholding pattern. Slightly neutral, because one aspect is that the promoter stake has remained stable. In fact, over the last 3 years, it's consistently in that range of 65.5 to around 65.6 kind of range. Institutional investors is a pretty mixed signal that you're picking up, because the mutual fund holding has actually shown a general upward trend, although there have been some recent fluctuations. The recent quarters have seen a slight decline in the mutual fund holding, but this is mainly probably a result of profit booking after the stock's significant run-up, or a shift in investment strategy, or even the profitability decline that we've seen that could have impacted. FIs, though, have shown a very volatile trend, and that is what you can see over here as well. From a 7.43%, it's actually come down to 3.09 now. So there is a notable decline in their stake, and hence again, a very neutral rating on this one.
All right, the next one is Street Cred. Now here, in the past 1 year, the stock's not done much. In fact, has given a negative return of 35% to its shareholder. Year to date also a negative 8% return. But for the past 5 years, the stock has seen a growth of around 252%. So because the 5-year performance has been decent, considering the 1-year performance, we've seen the underperformance of markets itself, we've given it a neutral rating for now.
Okay, let's look at the valuations over here. It's going to be interesting to see the valuations because it looks really exorbitant if you see the trailing 12-month right now. It is the most expensive as compared to peers as well, but this is mainly on the back of that volatility, that inconsistency that we are seeing in terms of where the earnings go. I mean, the EPS is the key over here, and that's what is reflected in the price to earnings ratio as well. So hence a thumbs down here on this one.
All right, the last one is the guidance and analyst recommendations. There are right now 4 buy calls, 2 sell calls and 2 hold calls. So it's even Stevens when it comes to your buy, sell and hold, an average upside of around 6.2%. In terms of where management commentary is concerned, they've said that premiumization, loyalty and customer experience will be the central to the growth strategy. Premiumization to improve share to almost 70% by FY26. Intune and Beauty remains their key growth engines, and focus on larger, more premium departmental stores is something that they're aiming at from here on. And lastly, ongoing cost optimization, working capital reduction and omni-channel integration will support profitability from here on. So this is the management commentary coming in quite positive in nature, but since the analyst recommendations as per Bloomberg do not suggest a significant upside potential in terms of where the return stands, we've given it a neutral rating.
So that's a neutral one on that one. Let's quickly look at the overall ratings, where it stands now, because that is going to be key. 2, that's income statement and cash flow is a thumbs up. You have a balance sheet, which is a thumbs down. You have the return ratios, which is again a neutral. Shareholding, street credentials, street coverage, again a neutral. And your valuations are a thumbs down on the back of the way it is, you know, expensive, and on the back of which a 4 on 8 is the KYC rating that NDTV Profit has given a sharper stop. But on the back of this, let's get in our guest. Kavindra Mishra, Managing Director and CEO at Sharper Stop, joins in. Kavindra, good morning and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Let's start off with GST, the benefits that you're seeing from here on, and the kind of demand surge that is expected, because you have the festive season that has already come in. Your auto dealers are already talking about huge numbers. Is that the situation at a Sharper Stop outlet as well?
So I think the GST Bachat Utsav, which started from yesterday, obviously it's only 1 day. But to give you a sense, the markets have been quite good. So we had a very good July and August. We have seen a much better tracking in terms of the like-for-like for our stores over the last 2 months, and we feel that with the coming up of the GST Utsav, and it's only 1 day, but we saw some very good signs yesterday in terms of the footfalls in the store. So we believe that we should all have a bumper Q3 and a festive and H2 going forward. And the demand has been quite good, by the way, in fashion and apparel lifestyle space. It has not gone down. It has been very positive for us for the last 2 months.
Right. Mr. Mishra, hi, Mahima also joining in. Just want to understand with regards to the kind of demand uptick that you're expecting because of this GST 2.0 and Bachat Utsav and festivities also kicking in. Can you give us a rough idea as to how much of a growth are you expecting from the last year's base?
So, Q1 for us was around 6% like for like. We should be a high single digit in Q2, and it should bump up from there. Exact numbers, it's very difficult to make an estimate, but I think it should be a higher single or a low double digit going forward. That's what my sense is.
Okay. With regards to the kind of margin trajectory that you've seen so far, just want to understand that because of GST 2.0 coming in, of course, this is on apparel that is below that 2,500 mark for you. My first question to that is that how much of your portfolio is covered under that? And secondly, if this is a large chunk of your portfolio, do you think from here on for you, you'll of course be passing on everything to the customer, but overall in terms of margin trajectory, any improvement that you're expecting from here on?
So if I look at our portfolio, see, out of 100, if 100 is the pie, 40% of our business comes through non-apparel, which is basically not touched with the GST changes. If I talk about the apparel part of it, the 60% part of it, around 15% of that is anyway lower than 1,000. So that also doesn't get touched because that primarily are private brands and some of the categories which we have. For us, we feel that overall, while it will be margin accretive, few of the brands will be increasing their prices because the MRP goes more than 2,500. Few of the brands are obviously reducing it as well as us. For example, for our brands, we are also reducing the MRPs and passing on the benefit to the consumer. I think it will be net very, it will be neutral in that sense, but the demand will pick up.
Okay. Kavinder, this takes me to my next question. You spoke about the way the portfolio is split right now. Do you see a shift happening on the back of higher disposable income in the hands of the people to the premium category? And if that happens, any margin benefits that could start coming in? And not only for a Shoppers Stop, is that the trend that could emerge from this?
So I think it's a great question. So what we are experiencing is that, and we have been talking about this quarter on quarter in our commentary, is that we are seeing premiumization really take an upswing, right? And premiumization is driven by categories. So categories like watches, for example, or fragrances or higher priced apparel are doing really well. So when I say that 6% is our like-for-like for Q1, our premium categories actually grew by 9%, and which is helping us in taking the whole pie forward. What happens is when you start selling more premium merchandise, the return on the space is much higher because the throughputs from the stores are much higher. So we typically see that premium to a non-premium, the upsurge in our GMROFs or our gross margins are around 1.3x. And we see that as we move in this journey going forward, we will see this interest, this coming in. We also see that besides apparel, I think there are certain categories like watches or fragrances or in beauty which are seeing a very, very positive surge. And as a strategy, non-apparel is something which differentiates us from a lot of our competition, and that's something which we keep on driving it. And we are seeing the same. And when you speak to our peers across the industry, we see that premiumization is a big trend and will continue to be very, very strong in that.
Mr. Mishra, with regards to the debt that is there on your balance sheet right now, just want to get a sense in terms of any reduction that you're planning this financial year, because you might have certain plans for store expansion as well, and that will also require some kind of funding. What's the overall view here?
So our view is very simple. This year we have decided to ensure that all the new openings are going to happen through internal accruals, and I think we are quite we have planned well for it. And my sense is we will also be paring down our debt. So this would be a year where you will see the debt coming down and all the new openings or renovations, and we are actually renovating quite a few of our marquee stores. We see that happening through internal accruals only.
Kavinder, this takes me to my next question when you talk about renovations of marquee stores as well. A lot of your stores, I would say in Bombay, for example, Bandra, your flagship store, the size has come down, right? What is the strategy on that front? What is the rationale where you're reducing the the area in terms of where Shoppers Stop was existent? And a lot of your brands also are coming down then. So is there a strategy with regards to focusing on particular brands, maybe increasing your sales per square feet? What is that going to look like? And how does it translate into accruals for the business then?
So I would take the example of Inorbit Malad, which is our flagship store. It used to be close to 1.3 lakh square foot in terms of space. We reduced it to around 70,000. We have just opened the renovated store. You would be happy to know that there is no reduction in revenue. In fact, we will be doing better numbers than when we had a larger store. So what we are seeing is you need to redefine your categories. You also need to reduce the number of brands, because as you premiumize, you don't need to carry so many brands. In fact, in our stores, what we are also doing is we are now creating corners for experience. And that's something, again, we talk about a lot in our commentary and actually do on the ground. So there's a kids play area, there is a personal shopper lounge, there are, not in Malad, but we also have coffee shops in our stores, because we believe that that's the kind of experience you need to give to our customers. The idea behind is that you need to right size your stores, and you need to ensure that the stores, you need to keep lesser brands, but give brands a larger space to express themselves well. So that is one part of it. Having said that, in our newer stores, so in between we were opening stores around 20-25,000 square feet. In those cases, we have decided that we will increase the size, and going forward, the new stores which we are opening would be closer to a 40,000, which allows us to express the premiumization and the customer experience accordingly.
Okay, so Kavindra, what's the impact it would have on your average transaction value or your average selling price? And anything with regards to a change with your loyalty program? Because if I'm not mistaken, First Citizen has always contributed nearly 85%, So anything that changes on this front, taking your strategy with regards to stores into consideration?
Yeah, I think there are two impacts. One is when you premiumize, you are able to drive your ATVs higher. So what we are seeing is over the last quarter-on-quarter and maybe last 12 quarters, we have seen an increase in our average transaction value, which is very powerful because, and this is not only driven by increasing the MRP of the product, but we are also able to maintain the items per transaction, which shows a very healthy connection with our customers. That's one. Second, if we talk about our Black Card or we talk about our loyalty program, I think we are on a very, very strong trajectory there. In fact, when we spoke about Q1 in the last call, we said that Q1 is amongst the best ever quarters for us in terms of the Black Card contribution or the loyalty contribution. I'm happy to share that. I think the numbers are only looking up north. But I think the key is that while we are getting a loyalty customers, we are getting a lot of new walk-ins into our stores. So we have been able to increase the funnel by which we are operating. So, a lot of times people have spoken to us that is the departmental store, is that a concept going forward or not? We used to have a lot of challenges in customer entry. We were flattish in Q1, but Q2 sees a very strong mid-single digit like-for-like customer entry increases. So if your funnel increases and you are able to drive more customers to your store, and then through operational excellence and through your loyalty program and your premiumization, you are able to drive the conversion. I think that's something which is working out well for us, and we see that, and we see that we'll keep on doubling down on that piece. That's a very strong piece of execution we are doing as we speak now.
Mr. Mishra, we've talked about the brick and mortar model that you already have. How's the online sales looking like? Is that the part of your portfolio that's seeing some kind of increase, and what are the trends that you're observing there in terms of premiumization as well?
So, I mean, two things. The customer, so we want to be the most premium omni-channel player in the country in the departmental store format. And what we are seeing is that the way we are able to drive higher throughputs and premium brands on our offline thing is the same way we are seeing on our app as well. It would be, in fact, we were quite surprised because some of the most premium watches actually get sold across the country, where we don't have stores. So I think that's something which is very, very powerful. We invested a lot in rebuilding our Shopper Stop app and SS Beauty. SS Beauty has started picking up very well, and that's doing well. In case of Shopper Stop app also, we did the final rollouts by end of August, and we are seeing some good trajectory there as well. So I think we are very committed to that piece because we understand that more and more when we speak to our customers, around 70% of the purchase decision or the brand search is happening online, and then customer comes to the stores and buy, and that's something which we are doubling down on as well.
Okay. Kavindra, a 30-second answer. You've already started passing on the GST benefits. How is the response? Good, bad, ugly so far?
Fantastic.
Okay, super. So that's a fantastic, and I think what's interesting is the way you've showcased the kind of savings and price increases on your website as well is very interesting because it gives a clear picture to a buyer who's an online shopper. And, you know, from apparels to footwear with all the breakup that comes in, where, you know, any discount that you would see on your bill or any increase in price that you would see on the bill as well. But thank you, Kavindra, so much for joining us on the show and sharing an overall outlook with regards to GST benefits and the translation that could be happening from here on. But completely out of time. With that, it's a wrap on this edition of KYC from Mahima, the team that put that show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Sea of red on the Dal Street with a Nifty barely holding on to 25,100. Sensex sheds more than 300 points. Most sectors in the red. Auto, however, bucks the trend. Bumper start to the festive season for automakers. Maruti sees 80,000 inquiries and delivers 30,000 cars. Hyundai expects sustained festive demand. Meanwhile, Tata Motors also records 10,000 deliveries on day 1 of Navratri. KC International gains over 5% in trade after bagging new orders in transmission and distribution projects. Management confidence of meeting order inflow guidance for FY26. Gold prices scale record peak as traders shrug off cautious comments from the Federal Reserve. Silver holds a 3-day rally near $44 an ounce.
जनता में विश्वास होगा कि कर सरकार की इनकम बढ़ाने के लिए नहीं है, देश को चलाने के लिए।
That was Home Minister Amit Shah in an exclusive conversation with NDTV. Hails the new GST structure and framework as a trust-based tax system. Says it will boost production and consumption in the country. The final journey of popular singer Zubin Garg begins in Guwahati. Hundreds of thousands of fans gather to pay their last respects to the lead singer. Assam declares 3 days of mourning. Hello and welcome to Markets at 12. I'm your host Anushi Vakharia. Before we talk about the stock-specific action that's going on, let's take a look at how the markets are doing currently in terms of Nifty 50 and even the broader markets. We see there's some bit of that pressure building on with Nifty 50 down about 0.3%. In fact, let's look at Nifty Bank also. Nifty Bank also seeing some bit of that losses, about flattish moves right now, but that's in terms of Nifty Bank and Nifty 50. In fact, let's point out the point contribution table to get a sense on what's happening and what's leading to this kind of, downtick in terms of whether Nifty 50 is concerned. HDFC Bank, RIL, you have your heavyweights under pressure today. Even Bharti Airtel, ICICI Bank clocking in those losses. Meanwhile, on the other side, you're seeing Bajaj Finance, Maruti, M&M, a lot of these auto names in green, and this is on the back of healthier bookings that we are seeing on the back of GST cuts now being effective. In terms of Nifty 50 heat map also we are pulling up, we'll see all the auto names emerging right on the screen. So that is the impact that's playing in terms of the GST rate cuts that's taken place. Bajaj Finance, Maruti, Adani Enterprises, Eicher up in green. While we are seeing pressure building onto Eternal as well, and IT names continue to in red. In fact, let's see how the sectors are doing in trade today. Most of the sectors are in red, barring the auto index. So what we are looking at is Nifty Auto seeing gains of over 0.8%, while Nifty PSU banks also being up around 0.3%, and Nifty Metal in green. Meanwhile, if you look at the other sectors, it's heavily dominated in the sea of red is what we are seeing. But let's shift focus to the broader markets. Broader markets also, if we are looking at, over there as well, Nifty mid cap 150 down about 0.4%, and small cap 250 also down about 0.53%. So mirroring some of those moves in line with what the benchmark indices are doing. But let's take a quick check at BSE 500 before we move to the important stories of the day. In terms of BSE 500, right at the top, we are seeing Vodafone Idea being up around 5%, while we have GSPL, KC International buzzing in trade today. KC International in focus on the back of a 3,200 crore of an order win, while we are looking at downtick in terms of Adani Total Gas, KRBL, and even something like a AWL Agri in pressure today. So that's the overall in terms of how the markets are doing today. But first things first, let's get you some important commentary when it comes to the India-US trade deal, H1B visa shocker and more. Let's take a closer look at comments from Jamie Dimon on a whole host of these concerns that can shape the trajectory for markets. Hirel, over to you.
Absolutely. Thank you for that. In fact, Jamie Dimon, Chairman and CEO of JP Morgan, has actually given out key commentary as well. Let's quickly look at his rationale and his view with regards to India-US trade deal. What he's indicating is, I quote, I hope President Trump and Prime Minister Modi, who seem to respect each other, can reach an agreement. I see India as a natural friend of America. That's a very strong statement coming in there, which tells you what the mood is looking like. And he says, I don't think we need to ask you to align, which is to India to align. In fact, we should extend our hand and build relationships. That's the quick view coming in on that front. In fact, the Ukraine war has actually created big problems, is what he has indicated. And he says trade will feel the pressure from that as well. But clearly an interesting one in terms of India-US trade deal. Moving on, Trump's H-1B visa shocker that did come in, on the back of which he says, it came out of the blue. So again, he did not really expect the H-1B shocker to come in from Trump, though we'll be engaging with stakeholders and policy makers as well. In fact, for us, visa matters because we move people around globally, experts who get promoted to new jobs in different markets. This is clearly telling you how important it is for a company like JP Morgan as well. And the challenge is that the US still needs to remain an attractive destination, for which, if you talk about immigration, America is an immigrant nation, and that's a part of its core strength. So you really cannot do away with it. Moving on, if you talk about Jamie Dimon's take in terms of tariffs, he thinks they're modestly inflationary and they come in pieces, not all at once. In fact, the tariffs did come in immediately. If they come in immediately, we'll see a quick spike up and then a downtick. They are a little recessionary, but just one straw on the camel's back. So you can understand the way he's looking at tariffs. And secondly, a straw on the camel's back, a very small piece coming in there. He's very optimistic about India's future when he talks about India. And he's saying that with India growing at 6%, it could actually continue like this for the next 20 years. That's a strong statement when it comes to the optimism for India. In fact, India is benefiting from the peaceful global system, and this is even with its local challenges. If you talk about the reforms, India's reforms have been excellent, and it's actually showing you Prime Minister Modi's strong leadership. That is what Jamie Dimon is indicating. And he said that Modi's been a successful Prime Minister also. So that's overall that you're looking at in terms of where India goes. Very lastly, in terms of the biggest worry that Jamie Dimon has as that 30 years from now, we may read a book titled How the West Was Lost. So that's the key question coming in here in terms of his biggest worry. And with free trade, with safeguard, what he says is, I quote, I'm in the free trade camp, except when it comes to national security. That's the only concern he has with national security. But otherwise, he is bullish when it comes to free trade, and that is what he is looking at. And there is also long-standing unfair trade where industries get protected and political forces resist change. So he's absolutely in favor of free trade, but national security becomes utmost important. But key commentary across parameters from US trade. You're talking about the way he looks at India and tariffs and the impact of H-1B visa as well. Over to you.
Well, quite an interesting take that we've heard today, and a whole host of issues being covered in terms of the tariff issues that we are looking at, in terms of how India is positioned. So quite a big voice to have in terms of what's happening with the overall macro side of the world. But coming to the domestic focus, some of key stocks in focus today which are buzzing in trade today as well. Varsha joins us with a detailed list. Varsha, over to you.
Well, thank you so much for that. Let me start with Shilpa Medicare, wherein they've received approval from Europe, the EMA, for its drug which prevents blood clots, and the market size for Europe stands at around $2.5 billion. Well, next on the list is AU Small Finance Bank, wherein Motilal Oswal has maintained buy Now, what they say that the earnings will accelerate from second half, and a risk reward is favorable, and they are expecting loan growth CAGR to be sustained at around 24% over the next few years. Last on the list is KEC International, wherein they've received order of around 3,200 crore across their transmission and distribution sector, wherein a company will supply towers, hardware and poles. And all in all, if you see the year to date order intake for KEC International stand at around 11,500 odd crores.
Okay, well, thanks for that, Varsha. But the question remains that can KEC International sustain its order book momentum? We've seen strong inflows year to date. If you just look at the value, over 11,700 crore. But let's listen into what the management has to say. And that's a word coming in from Vimal Kejriwal himself, the managing director of the company and CEO. Well, KEC International talks about the order pipeline as well. Listen in.
I don't think there are too many orders coming in, and also there's too much of competition in the India part. We have been focusing on the international market, and we have bid for a couple of projects in the Middle East and Africa. In fact, Africa, we are doing 2 projects right now in oil and gas. Middle East, we are hopeful that we should get at least 1 order during this financial year. Cables is doing well. Okay, we have projected a turnover of around 2,400 crores for the year. So I think we should be able to maintain that guidance for the cable business.
Well, that was this overall commentary in terms of, how the oil and gas segment is going to be. But if you look at the overall order book pipeline, that remains on the healthier side. But shifting focus with the onset of the new GST 2.0, auto companies are seeing a massive jump in bookings with almost 50% jump in small car bookings. Now, this is a direct benefit to Maruti and Hyundai. My colleague Danish joins us with all the details on this one.
Well, it was a blockbuster first day of Navratri for a few auto companies. Tata Motors has recently announced that on the first day of Navratri, they delivered 10,000 cars and they received 25,000 inquiries. As far as Maruti is concerned, Maruti delivered somewhere around 30,000 cars on the first day of Navratri. And since 18th of September, that's when Maruti had announced that they will be passing on the GST cuts to its consumers. So from that day itself until 22nd September, the company has received around 80,000 inquiries for new cars. And as far as Hyundai is concerned, Hyundai has done dealer billing of 11,000 dealer billings yesterday, which clearly means that Hyundai is also seeing a huge demand for its cars, and hence a lot of dealer billing has happened. But all in all, if we see since a very long time, from the past few months, we were seeing a slowdown in PVs, especially in small cars. But as per Maruti, there has been a 50% jump in inquiries for small cars. So all in all, if we see, the first day of Navratri has been really blockbuster. And for the remaining 8 days, the auto industry is very positive and very confident of continuing with such great numbers.
That's what we saw today, and in fact, it's the result is quite seen in terms of how the index is doing in trade today. A Nifty Auto, it's up over 0.8%, and we have all the names in green. Ashok Leyland, Samvardhana, MRF, all up over 2% in trade today. But NDTV Profit brings you an exclusive. The government has assured that GST benefits will be passed on to consumers, but ground reality suggests otherwise. Sources tell NDTV Profit that nearly 100 complaints were filed on day 1 of the GST 2.0 rollout, most alleging that businesses failed to pass on the benefits. Danish, talk to us about this as well. What's happening in this scenario?
Well, that's correct. NDTV Profit has exclusively learned from sources in the Ministry of Consumer Affairs that on the first day of new GST rates, there were around 100 complaints that were received across the country, and these complaints were being filed on a specific portal. And now the government has clearly said that they will ensure that the proper GST benefits are rolled on and passed on to the consumers. And a special team has been formed by the Ministry of Consumer Affairs, which is tracking a particular portal. And on this portal, those complaints are also being forwarded to the company. So all in all, if we see, the government has ensured that the GST benefit is fully passed on to the consumers. And just in case if there's any company which is not passing it on, or maybe normal local shopkeepers that are not passing it on, they are telling the public to go on that website, log in and register a complaint. And moreover, whichever company or whichever shopkeeper is found guilty of not passing on the full GST benefits to its consumers, then the government is very likely to take a class action step against these companies.
Okay, well, thank you so much for that. So that's the overall ground report and what's happening with the GST 2.0 rollout. But power sector in focus, and this is after bullish brokerage note by CLSA. Varsha, talk to us about which stocks have been addressed here and what's the note suggesting?
Yes, thank you again for that. You know what CLSA is saying, that the recent correction or rather recent weakness in power stocks is temporary, and this is an opportunity to buy. Now this is temporary because of the climatic changes that we have seen, and the power demand will be back in second half of 2026, and because of that, NTPC, NHPC and CESC are the top pickers. For NTPC, what they're saying that the company will get boost because of their nuclear power project. For NHPC, the company will see good growth on the back of their hydro project, and the CESC is actually going into modules and cells, which will have a good growth when it comes to these companies. They've also upgraded Tata Power as well, but they've downgraded SJVN because of the project delays and of course the higher valuation that the company has seen. So overall, if you see, CLSA is bullish on power sector, considering the second half of FY26 will be good for these companies.
Well, thank you for that, Varsha. That's the overall take on power sector that we are seeing. But the other stock in focus is also Bajaj Finance, and this is after it leads Nifty Finance with a 45% of a year-to-date gain in 2025, outperforming the overall sectoral index. My colleague Vansh joins us with more details on this.
Yes, Anushi, as you rightly mentioned, now the stock has topped the charts in 2025. In fact, the stock is up 45% on a year-to-date basis, which is...
Well, there seems to be some issue about what's happening, in terms of the audio. But what just Vansh was talking about, how Bajaj Finance has done overall a 45% of an uptick is what we are seeing in terms of, year-to-date performance and outperforming the overall sectoral indices as well. In fact, if we look at the 1-month return itself, while Bajaj Finance clocked in about 12% of gains, Nifty Finance was up 1%. But Vansh, talk to us about the different timelines as well, what has happened over 6 months and even year-to-date basis, and what has led to this significant uptick?
Well, yes, so we have seen a strong outperformance in terms of the Nifty financials. Now the stock has given a return of about 220% in the last 5 years in compared to Nifty financials with a return of about 155%. Now if we look at the concerns of FY25, now the management has revised its credit cost guidance upwards in the Q2 of FY25. Now the new range for the credit cost was at in the range of 2 to 2.05% in Q2 FY25 versus 1.75 to 1.85% in Q1 FY25. So what we have seen is an upward increase in the credit cost that the management has given, which led to a 15% downtick in the stock as well in September to October 2024 on the guidance shock. Also, we have seen the Rajiv Jain was to be elevated as to the Bajaj Finance, Bajaj Finserv for the and the role at the Bajaj Finance was to be underdefined for the company as well. And lastly, the asset quality pressure from the two-wheeler and three-wheeler loans continue to persist for the company in terms of FY25. Now let's look at the broader picture for the Bajaj Finance. If we zoom out to the 10-year view, now the stock has given a spectacular performance in terms of stock price, revenue, PAT and AUM. We can see approximately a CAGR of 29% for all of the matrices. Also, if we talk about the calendar year returns, now the stock has given positive returns in 8 out of the 10 calendar years. And in fact, we have seen a negative return into 2022 and 2024. However, 2017 was a spectacular year with a 108% jump in the stock. Lastly, if we talk about the long-term guidance for the company, now the AUM growth they have guided for a 25 to 27%, profit growth in the corridor of 20 to 24%, and net NPAs at 0.4 to 0.5%, and the ROAs and ROEs also in the range of 4.5 to 20% as well. Now let's understand what's working for the company in FY26. Now this is the consumption pickup, and it's the GST reforms, and it is the growth that has fueling the rally in this particular stock, and also the leadership overhang. Mr. Anup Saha, which has was quit, and Rajiv Jain has been returned as the MD for the company for the next 3 years. The credit cost guidance has been met by FY25 at 2.07%, which is a big positive for this company, as even in terms of credit cost, the company has always been spot on. Also in terms of the margin improvement they're expecting in FY25, in FY26, and also the stock was trading at a sub-times price to book of 4 in Jan 2025. So Jan 2026. So what we have seen is a spectacular rally that is coming in terms of the low price to book, which was the stock was available in Jan 2025 as well. Now lastly, if I talk about the valuations, now the current price to book, the stock is trading at 6.4 times price to book, still rich and compared to peers. However, if you look at the 1 year forward price to book, it's trading at about 5 times, below 5 year averages of 7.24x. Now lastly, if I talk about the analyst recommendations, we have 21 buy calls, 13 hold calls and 5 sell calls with a return potential about minus 1.3%. So the so the upside remains capped largely for the stock. So this is how the overall picture is panning out for a Bajaj Finance as well.
Okay, so that's the overall picture on Bajaj Finance, a strong turnaround from how FY25 was and strong outlook given for CY26. But earlier today, we spoke to N.J. Kumar, MD and Group CEO of Prime Securities about his top bets amid market volatility. Listen into his insights in navigating uncertainty with strategic investment choices.
Actually, the good news is that a lot of the bad news is already in the price. A, our markets haven't been performing vis-a-vis their global peers. B, we've had the worst, I feel, of tariffs and tariff-related rhetoric, tariff-related bombast, which has been sort of played out. We've had sort of sobering noises in terms of people wanting to now talk about a deal that could happen. So we've gone through the full circle. We've had earnings disappointments, and now we have a situation where corporate balance sheets are as deleveraged as they've ever been. The private sector capex, in a sense, the greenfield capex is also beginning to start off as one of the things that was not there over the last several years. It was largely the public sector that was carrying the way forward. Keeping all this in mind, inflation is under control. Liquidity is very good. RBI is going all out to provide ample and more liquidity to the banking system. And in that context, I mean, really, I would say that it's a confluence of multiple factors, and especially the global tariff playout that's happened over the last several months. And I think paradoxically, providentially, whichever way you look at it, we could end up with one of the best deals, though that doesn't seem to be on the anvil in terms of case facts today. But I do believe that when the dust settles, India will emerge with a reasonably good tariff deal with the US. Apart from, of course, multiple bilateral FTAs and bilateral treaties with a whole bunch of trading partners, possibly this could mark the beginning of, and the final fling came in the form of some degree of fear amongst the IT majors, the H-1B issue, which may be the harbinger of other things to follow. Though the IT sector, I believe, is more beset with issues of how AI will disrupt it rather than many of the other issues regarding tariffs, etc. So in the short run, I think most issues have played out. We are still short of an all-time high, which the other markets have convincingly made, and especially the markets in the US, the Nikkei, for instance, the European markets are hitting new highs consistently and scaling new peaks. So from that perspective, India too should follow. The catch-up will be there. And with the GST moderation and the GST rationalization, etc., I mean, I can't think of a better set of circumstances. The FIs continue to be at the margin sellers. Their positioning is reasonably weak. Even today, they are far, far more short than they have been. So from that perspective, I think a contra rally is well and truly underway. We are about 1,000 points away from when we started at 24,200 or 24,300. We are about 1,000 points up from there, but we have some way to go is what I believe.
The main story of the day continues to be about GST rationalization, and in fact we have a lot of interesting managements in focus, but one particular management in focus is Blue Star. My colleague Hiral spoke to the managing director of Blue Star on how is the company planning to pass on to the GST benefits to the customers. Listen in to what he had to say.
The summer season, which failed this year, as you mentioned, the earlier expectation was that summer would have grown by 25 to 30%, but we did see a negative growth of around 25% that did come in the summer. There was huge amount of inventory because of which that was lying in the markets already. So the influx that you're going to see in terms of demand, that 20% growth that you're looking at, Will the inventory levels be sufficient to meet this demand, number one? And number two, entering into the new year next year, what is that adjustment of inventory that the industry and the company will have to look at?
Look, the inventory with the dealers were around 45 days higher due to impacted summer season. That should become normal by Diwali. That is my estimate. Post that, it is going to be based on what is the sale that is going to happen between now and Diwali. And it is quite likely that we might to produce more numbers than whatever we would have planned till December 31. Remember, from January 1, 2026, new energy label program comes into effect. Therefore, it's a tricky issue. You need to produce more in order to meet the demand. And the estimate that I have is, will it be 20% more than whatever we would have thought? So we have to carefully watch what is happening between now and September 30th.
Okay. The other aspect over here that I have, Mr. Tyagarajan, is from the dealer's perspective. Do you think they will face working capital pressure because they would be liquidating the stock purchase at higher GST rate, but the inventory cushion, which then is cushioned, coupled with pent-up demand, actually sets the stage up absolutely strong for a stronger close to the calendar year?
Our calculations show by Diwali that working capital pressure should go away. It's a question of additional input tax credit of around 10%, which will have to be consumed by them. But assuming that there is a 20% more sales than what.
Well, that was the management of Blue Star, but that's all the time that we had on this show. That's Markets at 12. But do stay tuned to NDTV. Lots more coming up on the other side.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I
or not?
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hi, thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit. My name is Alex Matthew and with me is Puneet Zaveri. Puneet, good afternoon to you.
Good afternoon to you too as well.
Yeah, I'm trying to keep the energy up. It's an otherwise lackluster trading session, but we've recovered from the low point of the day, haven't we? In fact, let's talk about that. The benchmark Nifty 50 trading with cuts of about 0.2% and quite considerably off the low point of the day. It's been a range of about 160 points or thereabouts for the Nifty 50, which opened in the green, but then on account of selling in IT has actually fallen to the low point of the day and then recovered. And what is leading that recovery is actually the Nifty Bank. So pull up the Nifty Bank right now and pull up the intraday chart. We are considerably in the green, 0.33% higher right now, and pull up the constituents of the Nifty Bank as well to see what is contributing, because early on you had of the Nifty Bank, if we can, let's pull up the Nifty Bank constituents and see, because HDFC Bank has been a little bit of an underperformer, but it's recovered quite considerably from the low point of the day. It was one of the laggards for the benchmark Nifty 50 as well. But you have the likes of IndusInd Bank, Canara Bank, SBI from the PSU banking pack that's doing reasonably well. And then you have PNB and Bank of Baroda as well. If we can we pull up the 1 month chart for the PSU banking index? And that will give you a sense of what this pack has done. Because even in September so far, it's been a pretty decent run up for this pack as a whole. The PSU banking pack in the last month up about 6%, and you will notice that a large part of that has happened in September. In that time frame, the Nifty Bank has not done too much. So pull up, if we can, the month to date chart or the 1 month chart for the Nifty Bank, and you will notice the dichotomy here. So there you go, just about 0.4%. Great that we have both on the screen. The outperformance in the recent past has been led by the PSU banking pack. And of course, we're speaking, Puneet, a day after the rollout of the GST 2.0 and the auto pack in focus today, right? Because so much excitement, there was an anticipation that there would be interest, but that pent-up demand from the Shraddh period kicking off with Navratra and of course the lower prices.
Definitely, and I think we could be looking at a very flattish month, but a lot of that action will happen in these 9 days of Navratra, and largely you will see that impact a lot of it in the stock prices as well, because over the last couple of days we have seen a lot of auto companies come out and dole out additional benefits apart from the 10% GST rate cut on certain models as well. So that's a key positive. Let's also look at the broader markets before we go across to our guest for the show as well, because while there has been some correction that we've seen on the Nifty 50 yesterday as well as today, the mid-cap 150 as well down almost 0.2%, while the small-cap 250 is down 0.3%. Finally, the BSE 500 as well. Yesterday, the Nifty IT was in focus, and that was because of the impacted the H1B visa fee hike. Today, we are seeing some pockets of outperformance via auto amongst others. In terms of individual names, and we'll put focus on KEC International. That's one of the biggest gainers in the BSE 500, GSPL as well as Hindustan Copper, a stock that's been on a roll to say the least over the past month, is another big gainer. Ashok Leyland as well, showing some positive gains on the losing side though. Some pressures seen across a couple of Adani stocks, Garware Technologies, Vedant Fashion has continued to be under pressure because of the GST impact as well of, over 2,500 is where the GST is continuing to be there as well. But let's welcome in Gaurang Shah, Senior Vice President, Georgette Investments as well. Gaurang, very good afternoon to you. Thanks so much for joining in today. Let me first get actually your view on the IT space as a whole, because yesterday we did see that impact, and we'll discuss other themes during the show. But IT largely got impacted yesterday, and not so much of a buying that has been seen today in these names. Post the notification that we've seen of the H1B visa hike, how do you see this play? Do you think that this is a good opportunity to buy, or largely avoid this segment?
Thank you so much, Puneet, for having me on the show. Good afternoon to all the viewers of NDTV Profit, to you and to Alex. A small disclosure before we go any further. All recommendations that I'll be giving on the show are a part of our research team recommendation. Our company, Georgette or I, we do not have any personal investments in any of the recommendations that will be given across. No financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. Now, speaking about IT, $1 lakh H1B visa fees for the new visas that will be doled out. I think it's a knee-jerk reaction what we saw yesterday and today. I was listening into some of the commentary from the management, from the government, I beg your pardon, yesterday and today. India is almost ready to roll out GCC, that is Global Capability Centers, enabling our professionals to work from these global capability centers. There is discussions ongoing with the Indian government and the Trump administration. We have our External Affairs Minister, Mr. S. Jaishankar, along with them, Minister Goel in US, trying to iron out issues which have been teething trouble for the trade agreement to be signed between the two countries. We have also heard from US-based IT companies, head of HODs of respective countries, talking about how unviable this new H1B visa policy fees is going to be. If you are asking me from a long-term point of view, then Puneet, we have coverage on large cap, mid cap, and small cap companies. If I have to give you a time horizon, then with a time horizon of say 1.5 year plus, I think you should definitely look at IT companies, starting with the base of the pyramid, small cap, names like KPIT Tech, Science Limited, mid cap IT companies, L&T Technologies, Coforge, and big boys, frontline IT companies, TCS, HCL Tech. These are some of the names where we have positive coverage.
Okay. All right. Hi, Gaurang. So good to speak to you as well. Let's talk about the benchmark, because pull that up. In the span that we've been speaking, we've moved from negative territory to just about flat. So that recovery currently is complete. We are above yesterday's close. And I wonder, heading into the remainder of the weekly expiry for the benchmark, do we see a further improvement and building of strength? Bajaj Finance seems to be one of the contributors in the recent move up. to where we stand right now. Maruti Suzuki, Axis, M&M, a few of the other gainers. But let's talk about the financial performance for the country as a whole. That's been under the spotlight, and not necessarily for all of the right reasons. Pranjul Bhandari has spoken about this in a report that she put out. We spoke with her earlier today. The country has in fact lagged across all 4 major asset classes over the past year. Here's what she had to say about that.
We try to look at 4 asset classes altogether. This is something which is not really done in India. Either people look at equities or they look at bonds or they look at the rupee, but we try to look at all of it together and see if there are any common drivers. The reason why we were doing it was because we realized that across all the 4 asset classes, India had underperformed over the last year. At a time when emerging market returns were rising, India's returns were falling across these 4 asset classes. So some common problem was there, and we wanted to get to the bottom of that. So when we looked at this, we started it, we were amazed to find that only 4 variables can explain much of the movement across all the 4 asset classes. 2 variables are global, 2 are local. In global, we have global growth, which should be supportive of Indian returns. We have the US dollar. Weakness in the US dollar should be supportive of growth of assets in India. And in local drivers, we had domestic liquidity, better the liquidity, more growth in assets, and expectations of potential growth. If people are expecting India's GDP growth to rise over time, then they want to be a part of that story. Between these 4 indicators, we explain much of the movement. Once we had this, what we did was we plotted it all, actual versus modeled. And it was very clear to us that given what's happening to all these 4 variables, equities has now fallen into the undervalued zone. FX is probably undervalued too. Rates is perhaps at the neutral zone. So this was the real takeaway. But the question to ask is, agreed, equities is undervalued, FX is undervalued. There is space and a case that can be made for a rally. But what will trigger the rally? What will be the catalyst? So we went out thinking of a catalyst, and what we found were 2 things. One, and there's no surprises here, if the 50% tariff on India is reduced, that could be a huge catalyst that can drive sentiments for this upward bound. And the second is a series of reforms. We've had the GST reform, but if we line up another couple of reforms, then sentiments towards India's growth could improve, and we could see a rebound across all of these 4 asset classes. So this is, what we found. And I think this is heartening. After 1 year of very sluggish growth in returns, there is space for a catch-up at this point.
All right, space for a catch-up at this point. And she spoke about how Indian equities are relatively undervalued. That is, in fact, the case if you look at the global landscape. But arguably one of the stocks of the day from the morning, but it's given up a little bit of its gains, KC International. This is on the back of a 3,200 plus crore order in the transmission and distribution space, and this is overseas order. So part of that order comes from the UAE and the other part from the Americas, and this is one of a slew of orders that the company has announced in the recent past. It is still stuck by and large with its 15% revenue target for the year. We spoke with the management, in fact. We spoke with Vimal Kejriwal, who's the Managing Director and the Chief Executive Officer, and we asked whether the order inflow trajectory is likely to continue along the same lines. Listen in.
I don't think there are too many orders coming in. And also there's too much of competition in the India part. We have been focusing on the international market, and we have bid for a couple of projects in the Middle East and Africa. In fact, Africa, we are doing 2 projects right now in oil and gas. Middle East, we are hopeful that we should get at least 1 order during this financial year. Cables is doing well. Okay, we have projected a turnover of around 2,400 crores for the year. So I think we should be able to maintain that guidance for the cable business.
Okay. All right, so he's known to have a conservative view, and 15% top line growth for FY26 is what they've guided for. But Gaurang, I want your opinion on this. 9% over the course of the last month for KC International. Does that mean that the valuations are a little bit uncomfortable for you at this point, or are you fine in terms of the order wins that they've gotten? He just pointed out that he's finding it difficult to get orders in the domestic market. They're moving overseas, but the order wins have been fantastic.
Hi, Alex. Good afternoon to you as well. So, first, a disclosure. We have a positive coverage on
KC International, the RPG Group company. If I'm not mistaken, company has 3 to 4 business verticals, which contributes to the top line and bottom line. His concerns are well justified in terms of order flows not coming in or order flows coming at a slow pace. But take a larger picture, Alex. If we are going into a capex cycle getting upward trajectory, I was listening to the automobile manufacturing companies. Now that that push has been come thanks to GST 2.0, most of the auto manufacturing companies are going to go in for capex because the demand is going up. Point number one. Point number two, I was listening into the commentary from the management of L&T, which is one of the, of course, the largest cap goods engineering company listed for almost about 75 plus years in India. L&T management was very optimistic in terms of capex cycle picking up. So if not now, then maybe in the next 6 months or maybe in the next 9 months or maybe in a year's time, our sense is that cap goods engineering space is going to look very vibrant in terms of new order flows, not only from the domestic market, Alex, but also from the overseas market. India's aspiration is to become the next $1 trillion economy. India's aspiration is to become a large manufacturing hub. This is not going to happen without private capex coming in or government doing policy changes and government also investing in respective companies which they have their stake in capex. So we are positive on names like KC International, which is a small to mid cap goods engineering space. Along with that, we are positive on ABB, Siemens, and like I mentioned, L&T.
Got the view, Gaurang. So a bunch of stocks that you need to have in your focus essentially in this particular space. But time now to take a look at the recent IPOs and the lock-in dates for shares worth over $21 billion. A total of 67 companies will see their pre-listing shareholder lock-ins being lifted. There will be liquidity, but could put some pressure on these stocks as well. Let's get my colleague Varsha to give us more details on the same. Varsha.
Yes, as you rightly said, we'll see a lot of selling pressure when it comes to these companies. At 67 companies will have their pre-IPO lock-in period expire. Let's start with 1 month unlocking, wherein the first companies to see the lock-in expire will be smaller firms like Vikran Engineering and Mangal Electrical Industries, and these unlocking will happen in somewhere in late September to early October. Talking about 3-month locking in November, there are a lot of companies wherein the the lock-in period will end. This includes JSW Cement, you have HDB Financial Services and Kalpataru, and these are significant due to large volumes of shares involved. Even for a 6-month locking, the largest unlocks are set up for November and December. You have Ather Energy, have a massive 44% of total outstanding shares will become available. For Aris Infra Solution, you have almost 54% of shares which will be available. Even Prostrum Infosystem will see lock-in period ending. So overall, if you see, the market could see a significant increase in sell side pressure due to these companies who has a lock-in expire in coming few months.
Well, thank you for that, Varsha. Gaurang, let me come to you. We have seen a bunch of IPOs already that have come out with the issues starting April, and you're going to start seeing those, lock-ins open. A bunch of names that Varsha mentioned, anything that you feel that investors can keep an eye on? If you see some correction in some of those names, you could add them. Any of your view?
Well, so we had a coverage IPO note on Vikran Engineering and HDB Financials. And this is going to happen to all companies that will get listed. After some time, you will have the lock-in getting expired, and you'll have the paper coming and hitting the street for all those who want to take an exit route. My humble request to all the viewers of NDTV Profit is that, for the love of God, please don't have a single thumb rule for investing in IPOs from a listing age point of view. Look, each business is different, management is different, valuation is different. It's not necessary that all the papers that come and hit the market in form of IPOs will give you listing age. Some of them might disappoint you as well. But just in case if these papers are going to get offloaded and if these two companies see a price erosion or a correction because of sell-off, then maybe Vikran Engineering and HDB Financials could be looked at. I'm purely giving this advice on the basis of the IPO note that we have, just in case if it slips below the IPO price or floor price.
Got it. Okay. It is There are quite a few of them that are trading above at this point. A lot of them recovered in the recent past. But speaking of new listings, or IPOs rather, 4 opening for subscription today. And Anushi joining in to tell you about the key details and what stands out. Anushi?
Okay, so I'll start off with Anand Rathi first. Now, it is a well-established broking industry that we are looking at. So that's the first one on radar. Now, price band about 393 to 414. And this is with the IPO size of 745 crore. A complete fresh issue is what we are seeing. They'll be using this funds for working capital requirements. Now, key strengths of this is firstly, they have diversified revenue streams. Along with that, the MTF business is aiding growth. However, on the weakness side, any impact in terms of market volatility will impact the operations of the business. Second one in focus is Shahi Tech now. Now, this is with the IPO size of around 813 crore that we are looking at, which comprises of a fresh issue of 480 crore. Key strengths here is that it has a leadership positions in the payment solution industry. However, BFSI industry contributes around 81% of its total revenue. In fact, top 10 customers also accounting for about 66% of their total revenue is what we are seeing. The third one in radar is Jaro Institute of Technology. Now, this has come out with an IPO size of 450 crore, which comprises of an offer for sale of 280 crore and the rest is fresh issue of around 170 crore. They'll be utilizing these funds towards marketing and clearing debt. Key strength it has a market-leading positioning in this online higher education segment that we are looking at, but it derives 81.4% of its revenue through its top 10 customers. So concentration risk is what we are seeing. The last one on radar is Solar World Energy. Now this is within IPO size of 490 crore with a fresh issue of 450 crore is what we are seeing. They'll be utilizing the funds towards investment in their subsidiary for higher benefits over there. Key strength is that it has a robust order book with order book standing at 2,500 crore. And it operates on an asset-light model. But on to the weaknesses, the top 5 to 10 customers, if we look at, they contribute to 97 to 99% of their total revenue. So there is a concentration risk that we are seeing for this particular company. So these are the 4 IPOs which are in focus today opening for subscription.
Okay. And we spoke to quite a few of them. In fact, here's what the managements of 3 of these companies, Anand Rathi, Sheshasai Technologies and Jaro Institute, spoke about when we spoke to them about their IPO and the outlook going forward. Listen in.
This is the second company which is coming in public from our group. Basically, earlier, about 3.5 years back, we came with a wealth company which is listed in a market site. So this is a purely broking and distribution company. This is one of the oldest company. We started our capital market journey 30 years back, way back in 1994. And since then, we kept on adding various different businesses, various different verticals. In this company, what we are doing, we are catering to almost all category of customer, from retail to MNI, HNI, NRI, corporate, and institutional. So all kind of a category of customers. We are satisfying the need of investments of any individual investors who are dealing with this company. And primary idea is how investments need of a specific customer should be satisfied.
Just to give a flavor of the customer depth that we have, 10 of the 12 large public sector banks is what we service, 15 of the large 21 private banks is what we service, 9 of the 12 small finance banks are our customers. We have a very deep penetration into the general insurance and the life insurance space. So yeah, we've been a long-standing player in the BFSI space for some time now.
We are among the top few initial players. Since 2009, we started our journey, and we did wonderfully well. We have multiple tabs with IITs, IIMs like I'm Ahmedabad, I'm Trichy, I'm Nagpur, I'm Kozhikode, I'm Mumbai, I'm Indore, IITs, IIT Delhi, IIT Madras, IIT Bombay, IIT Kanpur, and so on. On the university side, we have multiple universities like Symbiosis International University, D.Y. Patil, Manipal University, Amity University, Chandigarh University, Amrita University. So Parul University for that matter. So good partnerships, good learning, and good learning means a good word of mouth around. So we don't spend on TV ad or some ads like that, but we do good work, and education is a evergreen field.
Okay, now, these aren't the largest IPOs, but they're important to track nonetheless. And Gaurang, I'm wondering if you have a call on any of these. At the very least, I think you would have looked at Anand Rathi. What's the view?
Well, honestly, Alex, we've not covered any of them. I'm so sorry for this.
No, that's okay. So then what I'll do is, let me ask you this. Since I was looking a little closer at Anand Rathi than the others, I'll ask you about the broking business and I'll ask you about the broader capital market play. There has been chop and churn, and there have been instances of a favored capital market player that has gotten impacted by change in regulations or potential change in regulations, and so the prospects and the expectations on EPS growth have been impacted. So would you still be very confident that we're only scratching the surface on the capital market side? And where would you deploy? What do you have positive coverage on?
Okay, let me give you a broader perspective. I think I can answer this question of yours. As a sector, Indian capital markets, we are positive, which is that one company on which we have a coverage, it's Computer Age Management Services, CAMS, we have a positive coverage. We had given a subscribed recommendation to the NSDL IPO, which hit the market some time back. Now, what is our view? Look, Alex, even if you take a very conservative return, maybe this year it might be absolutely flat, provided something wonderful happens in the month of October or November and we get a very decent trade agreement with US. And as the views were given by the representative of HSBC in terms of Indian market outlook, even if you take a conservative return, and maybe if the 50% tariff is brought down to maybe 25%, then I think market will get wings. And that will possibly give us anywhere between 12 to 15% return. I'm talking about October, November, December, and possibly maybe first 3 months, the financial year I'm talking about. Possibly by December end, we should get another 8-10% upside if everything goes well. So if you are of a belief, or if you are a believer that the Indian capital market is going to do well for the next 3 years, 5 years, or maybe more, Alex, then this is not a recommendation. I'm just giving a view in terms of what are the different parts of the Indian capital markets. So you have companies like BSE, which is a platform provider. You have companies like service provider, for example, NSDL, CDSL, and of course, CAMS. And then you have the third part of this, which is the intermediaries. I won't go into specific names as far as the intermediary is concerned, but any company which is strong on the fundamental and has a decent presence and has a good market share is likely to perform well in case if the Indian capital markets do well. We have been hearing about positive notes in terms of NSE IP also. Let's hope it's going to happen possibly by end of October or November after all the approvals are in place. Then that will be an added trigger for these companies to also sail a higher level. So overall, we like the sector.
Okay. All right. And that's a pretty comprehensive view. Gaurang, thanks so much for that. Do stay with us. We'll be back on the other side of this very quick break to talk about more stocks and sectors in focus.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Market straight flat, Nifty trading below just the 25,200 mark. We've seen a slight recovery from those. The Nifty defense is the top sectoral losers while the autos bucked the trend. Bumper start to the festive season for the auto majors. Maruti sees over 80,000 inquiries in just the last 4 days with deliveries over 30,000 cars. Hyundai expects sustained festive momentum as well as demand for the company, while Tata Motors also records 10,000 deliveries on just day one of Navratri. KC International gains over 5% in trade after bagging a new order in the transmission and distribution segment. Management is confident of meeting its order inflow guidance for FY26. Gold prices scaled record peak as traders shrug off any cautious comments coming from the Federal Reserve. Silver holds a 3-day rally near the $44 an ounce mark. Welcome back. You're watching Profit Buzzers right here on NDTV Profit. Just very quickly, let's pull up the Nifty 50 because we did mention at the start that, it was tad below the 25,200 mark. We saw a slight recovery, and Alex also marked this as well. We're back down again, but continuing to be in that zone as well. But on to an NDTV Profit exclusive. Sources say that the government is monitoring if the GST benefits are reaching the beneficiaries. My colleague Rishabh joins us with all the details. Rishabh.
Correct. We've had a lot of complaints over the past 24 hours on certain products in certain Kirana stores, especially not passing on the GST benefits. This is something that was brought to Consumer Affairs Minister Prahlad Joshi's notice as well. He said the government is looking into it. Now today, what we have picked up is the fact that you have government sources that are actively tracking the status of whether these GST benefits are actually making their way to the end consumers. What we're also looking at is the fact that the field formations that CBIC had to put in place, especially with regards to the 54 product categories that it has specified that include anywhere from toothpastes to ice creams. All of those inputs will start coming in starting September 28th, and that is when the government is waiting for in terms of more solid on-ground inputs coming in on whether these benefits are actually being passed on to consumers or not. What we're also picking up is the fact that the government is very cognizant of the fact that you cannot have a knee-jerk reaction to such a reform. It takes time to sort of settle in, and these are very heavy reforms that have been brought in by the government, so they are very cognizant of that fact as well. And the government has also made it clear that these GST reforms might not be an immediate uniform story of happiness being passed on to the consumers. There will be some roadblocks, there will be some struggles, but eventually all of these benefits will make their way to the end consumer. So that is what we're picking up in terms of these GST 2.0 benefits actually translating into lower prices for on-ground customers.
Well, thank you for that, Rishabh. And, this has been a key aspect of everyone we've spoken to in the government as well, of anti-profiteering from the GST rate cut benefits, and this has to be passed to all the consumers. Now, with the onset of the new GST 2.0, auto companies are seeing a massive jump in bookings, with almost a 50% jump in small car bookings as well. Now, this is a direct benefit to companies like Maruti as well as Hyundai. My colleague Danish joins us with all the details.
Well, it was a blockbuster first day of Navratri for a few auto companies. Tata Motors has recently announced that on the first day of Navratri, they delivered 10,000 cars and they received 25,000 inquiries. As far as Maruti is concerned, Maruti delivered somewhere around 30,000 cars on the first day of Navratri. And since 18th of September, that's when Maruti had announced that they will be passing on the GST cuts to its consumers. So from that day itself until 22nd September, the company has received around 80,000 inquiries for new cars. And as far as Hyundai is concerned, Hyundai has done dealer billing of 11,000 dealer billings yesterday, which clearly means that Hyundai is also seeing a huge demand for its cars, and hence a lot of dealer billing has happened. But overall, if we see since a very long time, from the past few months, we were seeing a slowdown in PVs, especially in small cars. But as per Maruti, there has been a 50% jump in inquiries for small cars. So all in all, if we see, the first day of Navratri has been really blockbuster. And for the remaining 8 days, the auto industry is very positive and very confident of continuing with such great numbers.
Well, thanks so much for that, Danish. But let me also welcome in Vinay Rajani, the Chief Market Technician and Senior and Technical and Derivative Analyst at HDFC Securities. Vinay, very good afternoon to you. Thanks so much for joining in. We have been speaking about autos with you for a while now. Anything that your view continues to be constructive on the OEM space, specifically the likes of, Maruti, Hyundai, amongst others?
See, Maruti and Hyundai kind of stocks have already run up before this announcement of the numbers, sales numbers. So this looks like very much anticipated before the news has come out. So the price has already discounted the positive. So the large cap stocks, most of the large cap auto stocks have already run up and they have reached to the overbought territory on the short term charts. So I don't see a fresh breakouts on the charts like Hyundai and Maruti. They have run up a lot. So though they are into continuation of an uptrend, but this risk reward ratio is not favorable because most of the large cap stocks have already run up. So wait for the dip to come and then you can utilize those dips to accumulate the long position. But in large cap space, I would recommend that wait for at least 5 to 7% correction in the stocks, and then you can think of going long. Otherwise, I don't see a fresh breakouts on the charts.
Got the view, Vinay. But even on the fundamental side, we had a couple of brokerages come in on the auto stocks. Goldman actually upgraded Maruti today to a buy from a neutral rating earlier. They've also increased the target price now to 18,900 versus 13,800 earlier. And they've mentioned 3 key points here. They've said that the potential pickup in market for the entry-level cars post the GST rate cut is a key positive for Maruti, and resumption of a new model launches for the first time after almost the hiatus of 2.5 years with the Victoris as well as the e-Vitara has now come through. They've also highlighted that favorable exposure to pay commission in the upcoming auto demand cycle will be a key benefit for Maruti as well. Nomura, on the other hand, had written a note on Hyundai. They've maintained a buy target price of 2,846. They've highlighted that the implications of Hyundai's Motors Global Investor Day has been key, because they've highlighted that the volumes are expected to grow at a 9% CAGR between calendar year 25 as well as 30, and mentioned that the strong model pipeline will be key in advancing its hybrid as well as amongst other powertrain options as well. So these were the 2 key ones. But Gaurang, let me come to you. Within the OEMs, what's your top pick currently in the auto space?
Well, so Puneet, we have positive coverage across two-wheeler, three-wheeler, four-wheeler, commercial vehicle, tractor, agri equipments. And this, whatever we saw yesterday was, as Alex mentioned during the opening remarks, that this was a pent-up. Since 15th of August, I think all those bookings were put on hold. So you have approximately 40 plus days of booking coming and hitting the dealers on day one. And that's why that euphoria that we saw yesterday. But I think it will be interesting to see how this follows up in terms of future bookings getting converted into actual deliveries. In terms of preferences, we have positive coverage on, starting with two-wheeler, three-wheeler, Bajaj Auto, TVS Motors, Hero MotoCorp. Eicher Motor, if you go in for a little bit of premium. Eicher, of course, is into commercial vehicle and JV with Volvo. Coming on to four-wheelers, positive coverage on Tata Motors, M&M and Maruti. Pure commercial vehicle play in form of Ashok Leyland. And tractor, earth-moving equipment, construction equipment, manufacturing company, Escorts Kubota. We also have coverage on one EV manufacturing company called Olectra Green Tech.
Gaurang, let me just, just a follow-up on Olectra Green Tech, because, there are some information coming in from, informers that, Switch Mobility's ex-CEO, Mahesh Babu, could actually be the new MD of Olectra, and the post has actually been vacant since the last couple of months. While not on this specific news flow, what is that you like essentially of Olectra Green Tech? And if you have any target price also, if you can mention for our viewers.
So Puneet, heads may roll in and roll out, right? This is going to be a never-ending process. Well, if you recollect, there was a problem with Olectra Green Tech in terms of their deliveries. And there was a little bit of overhang in terms of certain state transport utilities pulling back orders which were given to Olectra Green Tech. That was because of the production lineup constraints. Stock was trading at that point of time, if I'm not mistaken, I vaguely remember it, somewhere around 1300 or 1300 or 14, between 1300 and 1400. But since that time, I think the company has taken initiative to sort out all kinds of bottleneck. They have also invested into a new battery manufacturing facility wherein it will take short time to charge and it will stay charged for a longer period of time. That means short charge and long play kind of technology they have bought in. And in terms of future orders coming in from state transport utility, looks brighter. This new gentleman coming in, I won't be in a position to comment about it, but I think the focus is going to be clean and green mobility, and that's going to be driving the bookings and order getting scaled upwards for Olectra Green Tech.
Fair point, Gaurang. Vinay, let me just come to you on one particular stock, Car Trade, as well, because that's also in focus. because they also run a classified business. So they've informed the exchanges that they've actually seen a 74% growth in terms of traffic on their websites. They run websites like BikeWale as well as CarWale.com. So that should give you, and essentially a lot of car purchase or buyers go to their platform to research before they can actually purchase a vehicle. So you're seeing that huge jump as well. Vinay, do you think the stock has some more positive momentum because it's seen a sharp run up in this year itself as well? Any view on the same?
Yes, so the way indicators and oscillators are moving on the positional charts, the medium-term charts like weekly and monthly, it seems that stock is now facing hurdle at higher level. There is a strong support around 2280 to 2300. That should be the conditional view. So below 2300, we may expect further correction in the stock. Stock is forming, moving like that. It is getting distributed at a higher level. So facing a strong resistance. If you are an investor, then it could be a good bet as a long-term investor, medium-term investor. But if you are a trader, then I would suggest that wait for some stabilization. As of now, I see some profit booking is going on. In last week also, we saw that it came down with the volume. So better to wait for one should not take aggressive longs as of now. And if this stock breaks 2300, then it will be a bearish breakdown, and that will result into a further lower levels in this counter. So not looking that great. In fact, I see a strength in the many auto ancillary space. So that can be looked at for the short-term alpha generation, but this particular stock is not looking that attractive on the charts.
Definitely, the auto and the auto ancillary space as a whole has been a key beneficiary of the GST rate cuts, and that's been in focus as well. But over the last couple of days, we've seen a slew of initiating coverage reports, and today we are putting the focus on Premier Energies. Avendus Park, the brokerage, has initiated coverage with an ad rating on the stock. Let me get in my colleague Varsha to give us more perspective on this one. Varsha.
Well, thank you so much for that. What the Avendus Park, what they say is that Premier Energy has a strong future. Now, this is backed by government policies and, of course, the demand that all the module manufacturers has been seeing. Also, what they say that India is set to become the largest solar market outside China. This is backed by the growth in the sector itself. Now, coming to Premier Energy, now government policies such as ALMM and PLI scheme is set to benefit the companies like Premier Energy, and Premier Energy is expanding a lot. They're going into expansion when it comes to the modules into cells as well. Also, they believe that the margins for the Premier Energy are set to go up. This is because of the higher margin products that they are going into. And lastly, what they say is that one of the risks that they have highlighted is the mismatch in the demand supply, because the module has outpaced demand while the cell is actually lagging it, and which may have a demand supply mismatch. So overall, they are positive on the whole module and cell sector, considering the government policies, that is ALMM and PLI as well.
Well, thank you for that, Varsha. But Gaurang, let me come to you. Because we have seen a slew of listings in this space. Firstly, do you have any direct coverage on Premier?
Well, no direct coverage on Premier, Puneet, but let me just give you insight. I think in the next 3 to 5 years, we are going to have a huge power generating capacity getting added, new power generating capacity. Well, I was reading one report. It said somewhere around close to about 300 to 400 gigawatts. Now, gigawatts is supposed to be a huge capacity. 75 to 80% of that is going to be clean and green. So you are going to need the products of companies like Premier Energy and others who are into this solar modules, and of course, high capacity solar modules which can last for long and generate more power and store more power. So in both ends, you are going to have positivity. And no specific comments since we don't have coverage on Premier Energy.
Got the view, Gaurang, but let's also, put the focus on the power sector and continue with that. We looked at the renewable side of things as well, but brokerage from CLSA is bullish on the growth story for the power sector. And, let's put a focus on stocks like SJVN as well. Let me get in my colleague Varsha to give more details on this one.
Yeah, and what they are saying is the recent weakness in the stocks if you see in the stocks of these power utility is an actually opportunity to buy, and they say that the recent weakness is temporary because of the climate, because of the weather condition that we have seen, and the power demand is expected to be back in the second half of 2026, and that's the reason why they are bullish, or why NTPC, NHPC and CESC are their top picks. Onto the NTPC is set to grow on the back of nuclear power project. Onto the NHPC, if you see, is set to grow because of their new hydro projects. And when it comes to CESC, they are actually going into modules and cell manufacturing. So one of the reasons why this company can see growth. Even they have upgraded to Tata Power as well, but they've downgraded SJVN considering the project delays and the higher valuation that the company has seen. But overall, if you see, they are actually bullish on the power sector because of the second half will be actually good, because the power demand will be back, and this according to CLSA, this is an opportunity to buy when it comes to these stocks.
Well, thank you for that, Varsha. Vinay, let me come to you. A bunch of names in this particular report mentioned Tata Power, SJVN, NTPC, NHPC. Anyone on your radar that you can see some rally going forward as well?
So if I were to compare the SJVN with the other power stocks, so NHPC, which used to move in sync with the SJVN historically, is now the move is quite different. NHPC is looking stronger on the charts. SJV is somehow underperforming. The other stock which is looking strong on the chart is the NTPC. So from the power space, I feel that NTPC and NHPC should be given priority if you are looking for the short to medium term. Then SJVN still yet to give some confirmation. Momentum is clearly lacking. So as a trader, I would rather select a stocks which is there, which is holding above its key moving averages and long-term averages. So SJVN can be ignored, and NHPC and NTPC can be given priority.
Got the view, Vinay, but we did put out a detailed piece on Bajaj Finance as well, because the company has given a 45% return on a YTD basis, and that's a huge one as well, and that got another big brokerage note that came out on the same as well, because CLSA has actually written a note on the company. It's one of their big top picks as well. They mentioned that the sustainable growth, is a true value stock essentially is what they've given on this one. They've also mentioned that, they've also mentioned SBI also in this particular report, and I'll just get to that in a bit. Coming out of a relatively weak FY25, they see Bajaj Finance with a target price of 1150 rupees per share. They've highlighted some key points here. They mentioned that it's expected to deliver a 20% plus loan growth, with NIM as well as credit costs seeing improvement. Highlighted that one of the top 3 stocks in the Nifty 50 would have 20% profit growth between FY23 and 25, and seeing that it could cross 100 billion in market cap in the next 2 to 3 years. They've also mentioned on SBI as well, with outperform rating, 1,150 is their target price on this one, and highlighting that gains market share, asset quality as well as profitability is expected to improve. And another one which could cross 100 billion market cap in just the next year itself as well. Gaurang, any view that you have on the large cap banking space, as well as something like a Bajaj Finance as well as an SBI? Anything that you like in this space?
We have a lot of coverage on the entire BFSI segment, Puneet. Private sector bank, public sector bank, strong NBFCs. You're talking about Bajaj Finance and SBI. Let me give you my view. Since last October, when the market started to correct, thanks to our good friends FIs selling, even as of now, they continue to sell. Bajaj Finance was one of the large cap stocks which held out smartly, and it actually outperformed. And if I'm not mistaken, if my memory serves me right, Puneet, it actually touched an all-time lifetime high. That is Bajaj Finance. Very recently, the stock got adjusted for split and bonus, and I think it was languishing at around about 800, 850 for a pretty long period of time, and that time it was a screaming buy. We continue to have a positive coverage on Bajaj Finance thanks to their diversified network, thanks to the product offering, conscious in terms of cost of borrowing and cost of lending. And along with that, our view is that the credit demand is going to go up in future. So you'll have strong NBFCs, strong private sector banks, strong public sector banks performing. Positive coverage on Bajaj Finance. We have a positive coverage on SBI. At the beginning of the program, you and Alex were discussing about how PSU banks were outperforming. I think it is time for that outperformance to get on to the next level. And my sense is that if we have to come out of that overhead hurdle in terms of resistance of 25,500 on Nifty spot, then I think BSFI segment would be a great driver to take us out of that resistance level.
Got the view, Gaurang. But Gaurang as well as Vinay, thanks so much for joining in, giving us perspective across a bunch of stock and sectors today. But viewers, with that, that's all the time we have on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Small Cap Bazaar on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, Anushi, in the last 1 hour, not much of an action. Markets have traded very range bound, but we did see a recovery from the day's lowest point for the Nifty, around 170 points up from the day's lowest point, while the Nifty Bank Index, that is up close to 300 points. But for the last 1 hour, not much of an action that we have seen.
Yeah, absolutely. We are seeing range-bound markets, but recovery seen in some of these banking names, and this is what is reflected in the point contribution table as well. If you look at Axis Bank or even the other banks in focus, now they are contributing positively to the index. There you go, SBI, Bajaj Finance in focus, while what is not working out so well is something like Hindustan Unilever, Bharti Airtel and HDFC Bank. In fact, let's pull out the Nifty heat map to just get a sense on which stocks are working in trade today. We already spoke about the auto pack gaining in trade, and this is on the back of those GST rate cuts being effective, or auto companies coming out with the numbers also in terms of how they're seeing deliveries going up and new registrations as well. We are seeing IndusInd Bank right there at the top. Other than that, we are seeing these auto names right in green, but IT names continue to trade in red, while Trent is also seeing some bit of that pressure. In terms of broader markets, however, broader markets continue to remain under pressure, with Nifty Mid Cap 150 down about 0.2%, while Nifty Small Cap 250, if you're looking at seeing a 2.3% of a downtick. But let's look up BSE 500 to get some sense on the stock-specific action here as well. Tata Investments right at the top, seeing gains of over 6.7%. TCI, KIOCL, or some other stocks passing in trade. Hindustan Copper continues on an upward trajectory as well. While Vodafone Idea also, we are seeing smart moves, about 4% of an uptake. KC International buzzing on the back of an order win. While what's not working out, something like a KRBL, Adani Total Gas, and the other Adani ports as well, which is under pressure, is what we are looking at, seeing cuts of over 3 to 4% here as well. But on the small cap buzzers, interesting management today that we are focusing on is Crizac. And if you look at Crizac, that reported a strong FY25 revenue growth, which was led by UK education contracts and expanding agent network as well. Before we go to the management, Jasmeet joins us with more details.
Well, right, yes, thank you for that. Let's quickly understand how did the overall stock perform in last 5 days. You see the stock is down nearly 10% in trading. Well, this comes in after the H1B visa rules that came up from the US. Now, if we look at the big company, what does the company operate as? It generally operates as a platform services where they provide B2B education service. They basically connect students with the universities and then they earn the commission from the universities. If you look at the overall revenue, it has seen a growth of roughly 60% on YOY basis, and FY25 revenue stands at 849 odd crores, while the margins have been maintained at a range of 24 to 28, which supposed to be a slight increase of 38% on YOY basis. Now, if you look at the revenue concentration, company majorly earns the major chunk of revenue coming from UK, that's roughly 95%, while rest belongs to the other places like Canada and Ireland, where they earn the balance of 5%. Now, it look at the agent count, which generally increases the revenue and adds up to the top line of the company. They have also increased drastically. If you look at the agent count of FY23, they stands at 4,000 odd agents, while if you look at the latest year, the agent count stands at 10,400 plus agents. Now, if you look at the seasonality trend, generally the education season, which is during the June-July month, is stronger for the company. That's what company says, that the Q4 generally has 40% of the revenue, while the Q1, 2 and 3 contributes at 60%. And the company believes that the H2, that is Q3 plus Q4, is stronger compared to the overall H1, as the intake cycle is stronger during that span.
Okay, thanks for that, Jasmeet, for putting that in context. But with that, let me welcome in the management. That's Vikas Agarwal, CMD of Crizac, joining us. Hello and welcome to the show, Mr. Agarwal. Well, let me start off this conversation by asking about the H1B issue which is taking place. While UK is currently contributing highest to your revenue mix, which is there, just want to understand your picture in terms of how US is going to shape up, your business in US is going to shape up, considering you've also made an acquisition here, and this is one of your growth drivers also going forward. So, do you see any risk in terms of your expansion going forward here?
Not really. I know that there's a bit of turmoil happening in the market because of the announcement of H1B visa, but there's still a lot of clarity which needs to come. I have a view that it will not affect the student market, but it will affect companies who wants to sponsor students outside of US to come to US for a work visa only under H1B visa. In terms of Crizac, as Habib said, our exposure to US market is very minimal. 90 to 95% of our concentration as of today lies with UK, which actually the Prime Minister in UK had made a comment that they want to welcome and waive the visa fee for highly talented people to come and do work in UK. So I believe the effect of any kind of noises which comes in US would give us a tailwind in UK and will increase the UK market a bit more, because that acts as a second choice for most of the students.
Okay, Mr. Agarwal, just want to understand, just on that part, you mentioned 95% of your revenue coming from UK. In fact, if you look at 50% of your overall revenue, that comes from top 3 institutions as well. Is there a concentration risk that we are seeing, since you're diversifying now in newer areas? Just want to understand how the mix will change going forward, let's say in next 3 to 5 years, if you can give us an outlook in terms of that. And US also, while the contribution right now is minimal, where do you see this number going in the next 1 to 2 years?
Sure. In terms of concentration, if you look at the top 10 universities we work with, the names always changes year on year basis based on what kind of opportunities these institutions give us. As the company is growing, the concentration is going down, not because the numbers of students going to those top 3 universities of ours is going down, but numbers for other universities with whom we can make up a better strategic deal, where we can sign a much better SLA and other things, would go up, which should, in a span of next 2 to 3 years, should level out and reduce the concentration among the top 3. In terms of US, we believe it will take at least another 18 to 24 months for that market to recover. There is a lot of effect of what President Trump had made comments over the last 6 months, 9 months kind of thing. And our observation is US, which is the biggest market in all the countries, will have a lot of headwinds, and it will take 1 or 2 years for that market to recover. Having said that, we are expanding our source market globally. Mr. President Trump made a comment that they want to increase their numbers to 6 lakhs students from China. And we are also present in China, so we'll be able to recruit some students from China to US. We believe that should help us. But again, there will be a lot of uncertainty for US market for next 18 to 24 months, in my opinion.
Right. So you're saying you're focusing on China as well, but other than China, are you focusing on any other European countries at this moment? And and China, how much do you expect that country to contribute to your total, to your overall revenue, say 2 years down the line?
China is our source market at the moment. It's not a destination market.
Okay.
Again, China is a much developed market compared to India. But again, India and China being the 2 biggest country with the highest population, China would contribute significantly well for us. But since it's quite a mature market, for us to grow in China will be gradual and slow. We believe it should contribute between 1 and 3% of our revenue in next 1 to 2 years. So but we're expanding quite a lot in, let's say, developing countries like Africa. We are present in multiple countries, and that will give a biggest growth for us in next 1 or 2 years.
Right. But apart from UK, which are the other European countries that you're focusing on? I'm asking you because nearly 95% of your top line comes in from universities present in UK. So any other source of are you looking to diversify that?
Sure. In next 18 months, we are looking at expanding into Australia, New Zealand. We already expanded quite a bit into Ireland and UAE, which is a big destination. We also have a very strong plan to expand into India as a destination market. Since we are present globally into multiple source market, we believe because of the new changes which Government of India has brought in education policy, we'll be able to bring students from outside to India, and India can become a big destination market for us.
Just want to understand, in the key operational metrics, we are looking at a 69% of an uptick in terms of how, the applications processed number. This is for the first quarter that we're seeing. While this is a leading indicator for the revenue outlook going forward, just want to understand the 30% of in top line growth that you're anticipating for FY26. Is that expected to sustain for 27, 28 as well, or do you see an upside to this number? And if you can give us a margin guidance as well with this.
In terms, as you rightly said, the number of applications does give a reasonable indication of what the forward numbers would look like. Our guidance remains the same for next 1 or 2 years. We don't see any changes because of the headwinds of US. We believe it should help us in growth a bit better than what it is. Unless there is any big turmoil in geopolitical situations of UK, which we don't see happening as of today. I don't think so our numbers would be affected. In fact, I believe it should be better than what we have forecasted.
Well, thank you, sir. Thank you for joining us and sharing us your growth perspectives going forward. Well, that was the management of Crizac. Now, let's welcome in Prashant Tapse, Senior Vice President of Mehta Equities. Prashant, you heard the management Crizac. They have strong growth plans. They are saying that they could maintain the 30% plus growth rate that they have witnessed in the past. And they also do not see any major issues coming in because of the H-1B visa. So how are you looking at this counter?
I agree with the management comments on the outlook, what they are going to give. Considering the asset-light model, that too into a B2B business model, and that too in higher education, which is the need of the hour for the whole segment to grow. So a very unique business model. I think the valuations are also justifying the way the company is growing with respect to their ROCs, ROEs, and all. I think looks very optimistic for long-term investors to be invested in this company, and the sector is really attractive to go ahead for the long term. So the growth as well as the earning growth can be expected very strong going forward. So I have a very positive view on this company.
Right. Reflex Industries is another counter that remains in focus. The stock is up more than 15% in trade. And the major reason behind this is the announcement that has come in from the company side, where they're looking to carve out their green mobility arm. Let's get in Varsha with more details on this.
Yeah, thank you so much for that. Yes, because of the, actually this company is buzzing because now they're gonna demerge their green mobility business, which is a drag to their overall profitability, and this demerged entity will be listed on NSE and BSE. Now, the cheer on the street is because of this demerged entity, the whole financials were looking bad, were looking pressured, and now maybe the margins will see an uptick because the green mobility was a drag to the EBITDA level as well. This was giving a negative EBITDA margins. Now, what does this mean? That the Reflex industry will now focus on their core business, which is ash and coal handling, and the Reflex mobility will be dedicated for sustainable mobility solutions like using clean fueled vehicles. Now, the goal is to basically unlock value and provide a clear vision or clear focus to each of the businesses. Now, what does this mean for shareholder per se? Current shareholders of Reflex Industries will receive shares in the new company, that is Reflex Mobility, and they will receive this shares in the exact same proportion as their existing shareholders. So this will create basically a mirror shareholding structure for both the companies. So overall, because of this demerge, because of the mobility company getting out of the Reflex industry is what making investors happy.
Well, Prashant, have you looked at this demerger announcement that has come in from Reflex side? Seems to be value unlocking for shareholders?
Yes, well rightly pointed. It's a value unlocking. The reasons already the anchor has explained. The way how the mobility company was weighing a lot of pressure in terms of costing and all, and the margins were under pressure. Because of this, the Reflex standalone business will look very better, and even there can be a very clear outlook for the business. So management has taken the right decision, and so what the price is sustaining with a very positive outlook. Overall, one should wait and watch on the mobility business, how that will turn out to be post the listing on the exchanges. So again, wait and watch for the right way of understanding how balance sheet will be distributed between two and how the numbers will look like. So wait and watch for me, but again, a great approach by the management.
So wait and watch is the outlook currently for Reflex Industries. So do keep that in mind. But another stock in focus and which is passing on back of higher volumes is something like Om Infra. In fact, if you look at the volumes that are 3 times compared to its 30-day average, the stock currently up over 6%. But if you see its last 1 month performance also, the stock has seen about a 23% of an upside since then. Just a bit about the company. Now, the company is in providing solutions for hydromechanical equipment, and this pertains for hydropower as well as irrigation projects as well. And it is one of those few eligible contenders for building large-scale dam projects that we are looking at. Current market cap of this company is roughly around 1,200 crores. Which brings us to the order book picture, which is more interesting here. If you look at the outstanding order book, that stood at about 2,684 crore. This is as of the first quarter end that we are looking at, which implies about a 3 times of a book-to-bill ratio if you take FY25 revenue in consideration. If you look at the order book mix also, hydro and water contributes about 1,116 crore of the overall top line that we are looking at, while Jal Jeevan Mission contributes about 1,546 crore. And this is what is reflected in the first quarter financials as well, where we have seen a revenue downtick of around 39% in the first quarter. As we know that Jal Jeevan Mission, there had been delays in terms of how the payments have been, which has led for a lot of these water players seeing a downtick in terms of where the top line is concerned. If you look at the EBITDA also, they recorded a loss of 1 crore as compared to a 17 crore of EBITDA last year, while net loss also stood at 1 crore as compared to a profit of 13 crore. But the management has continued to maintain its FY26 guidance. In fact, they are seeing about a 40% of an uptick in terms of where the revenue picture is concerned. And this is with margins ranging between 8 to 10% is what we are looking at. They're also targeting monetizing their non-core assets, which is expected to generate about 700 crores in these next 2 years period. And with that, they're also targeting an order inflow of around 2,000 crores. So while the FY26 outlook is promising, the first quarter results are not so comforting, and this is on account of the Jal Jeevan Mission mix also that we are looking at. Prashant, let me come to you on this particular counter. What is your view on this?
I think considering the last 2-3 quarters, the company is expected to deliver better than expected numbers in the Q2 earnings. That can be the one reason why the stock is buzzing today as well again. And technical factors also very positive. It has crossed almost its 50-day DMI to see some kind of good volumes in the stock. Considering the 3x visibility in the order book, I think that will have a very clear picture how the company can deliver its 26 earnings by 1,000 crores can be a possible target for the stock if they deliver well in the second half of this quarter. So overall, I think one should focus more on the stock on a quarter-on-quarter basis. It looks very good at this point of time.
Another interesting counter is Tina Rubber. The stock has been buzzing for the last couple of trading sessions. What could be the potential reason behind this kind of an up move in the share prices? Let's try to decode that with Puneet.
Well, thank you for that. Stock was up 13% in trade yesterday. Today, again, over 6% is what the stock is up. And, just looked at this recycling company. It was a key theme last year. And, we did see a lot of investor interest in this one as well. So it recorded also its best intraday gain yesterday since listing, while it has been slightly under pressure ever since listing earlier this year as well. But it's a key one in the recycling space, established way back in 1977, and it specializes as Asia's largest recycler of end-of-life tires. So they do get 2 key products once they recycle these end-use tires essentially, and specializes in manufacturing these value-added products from that. Now, these value-added products are used in road construction, additional manufacturing of new tires, as well as in auto parts. So it is an end-to-end usage company in the recycling space. Now, when you look at the revenue for quarter one, slightly down by just about 6% at 127 crores, but its margins at over 15 to 16% has been a range that's been maintained, but growth has been absent. So that'll be one thing to watch out for, while profits were also down by about 20% in quarter one. The company does expect revival in H2. That'll be something to monitor. But in terms of the volumes of the tire process, they do give out these key details of about 34,000 which were done in quarter one versus 38,000. But they are targeting a tire crushing capacity of over 2.5 lakh metric ton, by FY27. Currently, that hovers around 1,85,000 on a per month basis. So they are looking to expand that as well. About 100 crore capex is planned in this year, and they're also looking at overseas operations. So Saudi Arabia is one of the key geographies where they're looking to do that. They have outlined a timeline for a tire recycling plant of 24,000 metric tons. So multiple key aspects to look at with Tena Rubber as well. But in terms of capex as well as growth, there'll be something to watch out for as per management as well.
Right. Prashant, have you tracked this counter Tena Rubber? Any views on this?
Yes, I was tracking this company few years back, but again, I think with respect to the management outlook, with respect to the capex and all, I think there's a good inflectionary point right now where Tena Rubber is standing out. I think even the Q2 earnings can be seen very better compared to its Q1 earnings. So the stock is very much in buzzing in action. So I like this company very much, and the model is very unique to the other businesses in this world. So I think even the Q1 earnings, there was some kind of good EBITDA margin improvement. So Q2 can be also similar to this or better than this. So overall, at a very right point for a good momentum stock for a short term.
Okay, so that's the view for Tena Rubber. Now, a quick company in focus is Hindustan Construction Company, and this is buzzing on the back of an order win as well as a brokerage note as well. In fact, if you look at the company, it has secured a 2,566 crore of a contract for Patna Metro Rail project. This involves about two projects. One is for construction of a 10 kilometer of underground tunnels using tunnel boring machines, is what we are seeing. Along with that, the company has also won 6 metro stations under phase 1 of Patna Metro Rail project as well. If you look at the order backlog of the company as of end of June 25, that stood at 11,188 crore. Now, along with this, Ventura has also come out with a note wherein they've recommended buy with a target price of 64, which implies about a 120% of an upside. This is for the next 2 years that they're looking at. They expect the revenue CAGR of around 14.6% over the next 3 years. Along with that, they see margin expansion as well. Now, bids of 40,000 crore along with company's L1 position implies that strong execution pipeline is underway for the company. While the main issue, which is the balance sheet strength, they are seeing that by FY28, the net debt to EBITDA is projected to decline from 3.1 times to roughly about 0.5 times by this fiscal year. So, however, on the risk side, what we are looking at is a low promoter holding. So, with that, let me go across to Prashant for his view on this company.
I continue to have a outlook on a very high risk, high return category. Investors should look at this company to invest. Considering their order book of 11,000 crore plus, which is almost 2 or 3 times of their revenues of the last year. But again, execution is the main point in this stock, and we have seen how execution delays have been in the last many financial years. So there is a big risk. Again, one should invest with this outlook. Again, a target of 35-40 can be seen on a very medium term to long term. But again, execution of the projects, quarter on quarter review should be focused more on HCC. So overall, a risky bet for long term.
Thank you, Prashant. Thank you for joining us and giving us your perspectives on the stock that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed,
So should your tech show.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Hello and welcome to India Market Open. Clearly, this is Hiral Dadia firstly, and with me is Mahima Vajrajani. Sorry, India Market Close. But let's quickly look at what's happening with the markets are concerned. Overall, if you see in terms of Nifty 50 as well, a pretty flat day of trade. What is interesting is 25,200 is what is maintained right now. Those levels are not being broken. So probably that is where support is being found. Overall, if you see in terms of Bank Nifty as well, there is outperformance coming in there, 0.6% higher in terms of Bank Nifty as well. Let's see what the trend is looking like between the PSU banking space and the private banking space, because that will give you some bit of an idea as well. If you can just get the PSU bank index, there you go, 1.3% is the kind of up move. So that uptick in terms of the private banks also is, in the Bank Nifty as well, is coming in from the PSU banking space for the names of, if you talk about SBI as well. Let's look at the heat map in terms of Nifty 50 and see what the gainers are looking like. There you go, IndusInd Bank, no major reason for that one, but 2.6% kind of up move there. JSW Steel is up in trade. Now there is, a benefit in terms of the anti-dumping duty that is being proposed with regards to something coming from China. Adani Enterprises continues the bull run. SBI, Bajaj Finance. The auto pack is seeing a good amount of strength in today's session, and that's only on the back of the GST boost that you're talking about. M&M also on a strong footing today. Eicher Motors, Tata Motors are a few of the other ones. And what's losing out? Trend is the top loser today with cuts of 2%. No major reason why you're seeing this pressure on Trend. Ultratech Cement is also an interesting one. Where Ultratech Cement, which is one of the top losers, and in opposition to this, you have a Shree Cement, which is seeing some good strength. SBI Life, HUL, HDFC Life, so your life insurance players are seeing some bit of pressure. Mixed trend coming in with regards to FMCG companies go, and few of your IT companies like a Tech Mahindra, which is down in trade. Let's look at the sectoral heat map as well and see what the sectors are indicating right now. There you go, see the PSU Bank Index, metals and auto. The strength coming in from there, but your weakness is coming in from the FMCG pack, which is seeing profit booking right now. 1.2% are the kind of cuts there. Profit booking coming in on defense as well. Real estate, media, that entire consumption basket is weak in today's session. Let's look at the advanced decline ratio and see what the charts are indicating since morning. A very interesting chart right now, because from where we intersected during the beginning of the day right now, your declines are higher than your advances. 1350 is where your declines are sitting at versus an advanced number of around 1,000. So again, a pretty range-bound market is what you're seeing so far. But interesting is, Mahima, what we need to watch out for is the broader markets, because a lot of stock-specific action, individual stocks which are buzzing in trade.
Absolutely, Hiral. Some bit of recovery in the broader end of spectrum, where mid-cap 150 is concerned, down by about 0.2%. Still in the red though. The small-cap 250 also seeing similar trends with regards to where that chart is concerned. But specific counters that Hiral is talking about, the small-cap 250, there you go, is down by about 0.4%. But GMDC is one of those counters which is seeing significant of uptick in trade today, up 11% as we speak. In fact, in the past 1 month, this counter has gained over 50%. So some bit of momentum coming in there. Tata Investment is other counter which is seeing good gains today. NRB, Religare Enterprises, Vodafone Idea, Suprajit Engineering, some counters in the green that are seeing gains of anywhere between 5 to 7%. But rice counters seeing some bit of profit booking there, some pressure coming in there. LT Foods down by about 7%. KRBL down by about 5%. Some counters like Kesoram Industries, Dreamfox again, lower circuit hitting there. Garware High Tech, Adani Wilmar, plus Zydus Wellness. All of these counters seeing profit booking in trade today. But with that, let's also welcome in Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. Your view with regards to where the index is concerned, would you see this as a buy in the dips opportunity?
Sure. Hi, Mahima. First of all, very good afternoon to you and to all the viewers. Indeed, and we've maintained that for a couple of days now. While the support zone of 25,200 was precious, still seeing the sharp recovery from the low point of the day. So anyway, the positional strong support zone remains around the 24,900, 25,000 mark, from where we've seen the Nifty rebound But I think technically now one level which is emerging as a very strong support zone is 25,050. In the last 8 odd sessions, Nifty is rebounded from that level about 4 times. So this is suggesting that yes, there is strength at slightly lower levels, and those support levels are shifted higher. What you could do is initiate a fresh long position and keep a stop loss around the 24,900, 25,000 mark for higher levels of the recent swing highs around 24,500. But once that is taken out, even 25,500, I beg your pardon, and 25,800 as well. So all in all, this looks like a good area where the Nifty is consolidating and you could go long. And mind you, this is the last 2 sessions that we've seen. Is more of a breather, more of a pause before the next sprint, after the 3 good weeks that we've had. So all in all, the setup looks very interesting for Nifty. Buy on dips continues. The star of the show undoubtedly remains Bank Nifty, which has not only led the recovery, but also turned around or helped the sentiment remain buoyant and positive on the street. So here too, you're seeing a retracement to the 23.6% mark, but rebound from there on. So far, the private banks haven't really even come to the party, at least the big ones, HDFC and ICICI. So far, whatever gains we've seen are largely driven by PSU banks. And I think this move could well continue. So yes, if you want to create a long position from a momentum perspective, Bank Nifty is your index to go to. So yes, positive and constructive on both of them.
Interesting. The take that I have is that what we mentioned in the morning, that there might be a case for some consolidation and some bit of pullback. If you're and viewers, if you just pull up the Nifty chart, the last 3 days, there has been that small move, right? If you pull up the last 5-day chart, you will see from Friday, there's been that bit of a consolidation move. And this was warranted as well because we had 3 straight weeks of gains. Even if the construct is positive, maybe a dip was welcome as well, as long as it's not a crash. Now, Kush Bohra is saying that this is the levels from where you could actually buy, if I'm not wrong, Kush. And I heard you say that because banks could do well, maybe private sector banks could now come to the fore. So therefore, your ideas for the day today, Kush, does it have a private banking name or are there completely different ideas?
Hi, Neeraj, a very good afternoon. And you're absolutely right, where, this consolidation is indeed healthy. And that's why, while I, and, the very next guy, even I love uptrends, the very sharp ones, perhaps become a cause of concern. And 11 or 13 sessions of gains on the Nifty, 12 consecutive sessions of gain on Bank Nifty, perhaps slight overheated, and then the consolidation was warranted. So yes, all in all, these are good levels to go long on both the indices. And yes, I do have a banking name, but it's not from the private banking space, since PSU banks are the flavor for the month right now. I will go with one of those. Bank of India makes the cut. The stock has actually done rather well along with some of the other names. But what's interesting, as is always the case when I look for data, is the volume setup, which has been very encouraging in the last 8-9 odd sessions. Smart recovery from the low point of the day. If you see, the stock actually did slip to 119.25 odd levels, but from there has had a good recovery. This momentum could continue to 120, 123, 125 levels. 118 is your stop loss. The other stock that I have is Ramkey Infra. Here too, we've seen very interesting spike in volume about 3 sessions ago. Yesterday also there was consolidation. Today there is a mild bit of a downtick, but on the whole the stock seems to be consolidating and holding on to the gains that it made 3 sessions ago. So yes, this could continue to 630, 645 levels. 600 is the level where you keep that stop loss. And just a quick update on 2 names. Mahima covered one of them, which was GMDC. We discussed this stock about a month ago, maybe a little less than that, around levels of 400, 425. And hence the update as well. We've spoken about it after that also a couple of times, that the stock is in a very strong uptrend. Don't let go, even if the targets are hit. Maybe partial profit booking is advisable, and you're seeing that those kind of moves sustained today. Even now, I would suggest a partial profit booking, but don't let go of the entire quantity. And the second one is Canara Bank, which we discussed yesterday, for targets of 120 and 123. The first targets hit. The stock is close to the high point of the day. I think you should ride this with a trailing stop loss at the first target of 120 now.
Kush, just a quick one. Would you advise an entry into GMDC right now?
Oh, no, not at all. Now the risk-reward ratio is not favorable. You should not enter at the current levels. A decline towards 585, 590 zones will make it attractive. But if you have, you should continue holding on with the trailing stop.
Okay, all right. On to our stock of the day segment now, and today we are covering KC International. The stock is up almost 4% as we speak, although off from its day's high point, and this is on a back of significant order wins coming in. And Anushi joins us with all the details.
Well, thanks for that, Mahima. It's a considerable large size of an order that we are seeing for KC International. Roughly around 3,240 crore is the size that we are looking at. And again, it is for the transmission and distribution projects that we are mainly seeing this new inflows coming for the business. Now, what this order inflow means, this orders includes a building of 400 kV of transmission lines in UAE. That's where the majority of order is for. But along with that, they'll be also supplying towers, hardwares and poles in the American regions as well. Now, on to this, with this new order in place, the year-to-date order wins stand at 11,700 crore, which is roughly about 39% of what the guidance had been given by the company, which is about 30,000 crore. If you look at the order book position, that stands at 34,409 crore as of June 2025. Now, let's see how the order book has panned out, considering that it has about a 1.8 lakh crore of an opportunity over the fiscal years. This is the kind of mix that we are seeing with international seeing about a 35% of a mix, but this is expected to rise further in the upcoming years. 34,000 crore is the kind of size that they have maintained over the years. In fact, it has majorly ranged from 30 to 34,000 crore is what we are seeing in the previous 3 fiscals. Coming to the Q1 performance of the business, that had been also on the positive side, wherein the company recorded about 11% of an uptick in terms of where the revenue growth is concerned, while margins have remained in the 7 to 8% of range. The management does expect this number to go to 8 to 9% going forward as well. Net profit also saw about a 42% of a growth. In terms of segment-wise performance, however, if we look at, the business continues to be dominated by the transmission and distribution business. While civil business did see a downtick of 11%, the management remains confident recovering in terms of where this segment is concerned. Even in oil and gas, where we saw a major dip of about 52%, they're seeing that increasing competition is one area that they're seeing affecting this particular segment. So we continue to watch out for how this space is panning out. But on to the order inflow guidance of 30,000 crore given by the management, we in fact spoke to the company as well, and they remain confident on maintaining the guidance. So do listen into what Vimal Kejriwal, the CEO and Managing Director, also has to say.
I don't think there are too many orders coming in, and also there's too much of competition in the India part. We have been focusing on the international market, and we have bid for a couple of projects in the Middle East and Africa. In fact, Africa, we are doing 2 projects right now in oil and gas. Middle East, we are hopeful that we should get at least 1 order during this financial year. Cables is doing well. Okay, we have projected a turnover of around 2,400 crores for the year. So I think we should be able to maintain that guidance for the cable business.
Right, so that's the word coming in from KC International. Though if you see the 1-year chart of this company as well, pretty volatile. It's actually hit an intraday high of around 1,300. So it's pretty much at the midpoint right now as we speak. 12 months, around 4.5% downtick is what you've seen on the KC International. But moving on, Aditya Vision. Let's pull up that one on the screens and see what Aditya Vision is doing in trade. One of the beneficiaries in terms of where GST cuts go. Joining us on the show to discuss more, we have Mr. Yashovardhan Sinha, Chairman and Managing Director at Aditya Vision. Mr. Sinha, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Right now we're talking about a GST bonanza, a GST dhamaka, the budget booster effect that probably the consumers are looking at. It's just the second day in terms of Navratra now. What is the demand picture looking like right now?
Demand has been very good yesterday also, start of Navratra. So people were holding back their purchases, no doubt about it. And from first day of Navratra, as well as the moment new GST rates kicked in, we started getting good sales. So what we expect that because of such sharp cuts in taxes, I think demand for this ACs, bigger, larger size TVs is going to be very, very good going forward.
Mr. Sinha, the belief is that while auto companies know by virtue of the pre-bookings about how strong this season will be, for a lot of consumer good companies, it will be known as the 9 days of Navratra go through. Would that be a fair assessment, or do you have confidence that sales could be 7, 8, 9, 10% higher than what otherwise would have been?
In fact, we are expecting sales to be higher by 20 to 25% in this festive season. Because not only Navratra, actually our festive season continues till Dhanteras and Diwali, and followed by its extended festive season for Bihar, which is Chhath, Bihar, Jharkhand, eastern part of UP. So our festive season is going to last across entire October. So we are expecting very good numbers. There are very good inquiries. A lot of people are flocking in. In fact, media has also done a good job of creating awareness that things are really going to go cheap. And of course, this is one of the sharpest cut I have ever seen in taxes.
Therefore, Mr. Sinha, if earlier your thoughts would have been about a 20-25% growth for the year at large, can these GST cuts, which are the sharpest that you've seen, usher in a stronger number for companies such as yours, or for you in particular?
Definitely. In fact, just because our Q1 stood muted, in fact, the Q1, the way we had expected our Q1 to behave, it did not behave because of low temperatures and unseasonal rains. But still, we could, in fact, give a 6% growth in sale despite all the calamities. So we are expecting very good Q3. As well as Q4, because of pent-up demand will be there. People, in fact, will be well prepared to face summers ahead in the second half of H2 of this financial year. So yes, we do believe that Aditya Vision is well poised to reap benefits of this huge tax cuts.
Mr. Sinha, hi. Mahima also joining in. Just want to understand, Bihar right now in terms of revenue contribution is over that 75% mark. How quickly do you think UP and Jharkhand will scale up for you? And any other states that you're planning to tap into for FY26?
Yes, we are looking towards Chhattisgarh also in this financial year, end financial year, in this current financial year, I'll say. And in fact, they have done pretty well. If you are saying that how quickly they are going to give more share of revenues to Aditya Vision, I'll say that already within, let us say, 3 years of operation, they are almost contributing 25% of the entire revenues of Aditya Vision. So I think it's pretty good going, and we are expecting, and we are getting very good response as well in newer markets like Jharkhand and Uttar Pradesh.
Mr. Sinha, if you have to talk about GST and its impact when it comes to your supply chain, inventory management, anything that changes on that aspect, and do you see challenges or benefits when it comes to, the input tax credit or working capital cycle as well?
Luckily, it has been totally neutral for Aditya Vision, because Aditya Vision, as we were discussing in earning call also, that we were quick to understand the situation in Q1, and we stopped giving fresh orders in by mid-May. So what happened that whatever inventory was left, we were very comfortably placed at end of June. So what does it mean? It means that entire input credit gets consumed, and so we are net GST payable from July onwards. So that way we are right now also in this last month also we were net GST payable. So in that case, none of our working capital gets logged, and we are very, very well placed.
Mr. Sinha, what's the kind of guidance that you'll give for your same-store sales growth where the rest of FY26 is concerned? Because first quarter was impacted because of heavy monsoons coming in and demand being subdued. But now that GST 2.0 has come in and has kicked in, do you expect this to be a good double-digit number?
Yes, we had this habit of delivering double-digit numbers in past so many years, and I don't think why we should not give this in coming time to H2 FY26.
And what about your expansion plan? How many stores are you going to tap into in FY26, and how is the funding going to take place for these stores?
Funding will be done through our internal accruals, which is good enough and sufficient to take care of capex. And we have been opening. In fact, we have been guiding that we'll be opening around 25 stores. But every time we have, in fact, done more than what we have guided. So 25-30 stores will be a fair number of store expectation.
25-30 additional stores is what you should be looking at per year as well, and pretty strong demand is what you're seeing, Mr. Sharma. Thank you so much for joining us on the show and speaking to us at NDTV Profit. So that's the management of Aditya Vision, giving a background and the actual channel check with regards to what's happening on ground when it comes to the GST Dhamaka and the benefits that could be flowing in as well later on. But moving on. We've been talking about the financial space, which is in focus, and one stock that has been leading gains as well all these days is Bajaj Finance. Today as well, 1.7% is the kind of up move that we are seeing. In fact, if you have to look at Nifty Finance as well, it has clearly outperformed Nifty Finance across 10 years. We have Vansh, my colleague, who's standing by to tell us more in terms of what's really working for a Bajaj Finance. Is the worst over? And what analysts are baking in. Vansh, over to you.
Well, yes, so Bajaj Finance has been among the top of the charts in 2025. In fact, if we talk about the year-to-date returns, the stock has given a return of about 45%, and it has been the best performer in terms of the Nifty 50 as well. Now, let's also look at the returns of the Bajaj Finance. Now the stock has clearly beaten down the sectoral index, Nifty Financials as well. Now, if you look at the detailed comparison between the Bajaj Finance and Nifty Financials, what we can clearly see that the stock has clearly outperformed the Nifty Financials by giving a run-up of about 220% versus Nifty Financials with a run-up of just 155% in the past 5 years. Now, moving on, let's go back to the concerns of FY25. Now, the management revised their credit cost guidance in the Q2 of FY25, where they revised their guidance to 200 and 205 basis points versus the earlier guidance of 175 to 185 basis points. So clearly what we saw in Q2 of FY25 was a guidance, was an increase in the credit cost guidance, what we can clearly see in the Q2 of FY25. Also, there were concerns about the Rajiv Jain, who was to be elevated to Bajaj Finserv, and there were concerns regarding the undefined role he would serve in Bajaj Finance as well. Now, moving on, let's also look at the asset quality. Now, it continued to be a pressure from the two-wheeler and the three-wheeler segment for Bajaj Finance as well. And also, we saw 15% downtick on the stock, followed by the revision of the credit cost guidance as well. Now, let's also look at the broader picture. Now, let's look at the 10-year horizon of the stock. If we look at the 10-year horizon, now the stock has been a consistent compounder. What we have seen, the 33% CAGR in terms of the stock price. And if you look at the revenue, PAT, AUM, we can clearly expect a growth of about 30% in terms of Bajaj Finance over the last decade. Now, let's also look at the calendar year returns. Now, the stock has given a positive returns in the last 8 out of the 10 calendar years. In fact, it was 2024 and 2022 where the stock has given a negative return. However, it was 2017 that the stock has given the best run up about 108% in terms of the calendar year as well. Now, let's also look at the long-term guidance of the stock. Now, this also remain intact. They are targeting a AUM growth of about 25 to 27%, profit growth of about 23 to 24%, and a net NPA growth of about 0.4 to 0.5% as well. In terms of the ROAs, they are expecting 4.5% in terms of ROA and 20% ROE as well. Now, lastly, let's look what's working for them in FY26. Now, clearly, firstly is the consumption pickup, that is the post-GST reforms that will aid the company's growth in terms of the strong demand for consumer goods as well. Moving on, we also have the leadership overhang. Now, Mr. Anup Saha has already quit, and Mr. Rajiv Jain has returned for MD for Bajaj Finance for the next 3 years till FY28 as well. We have also seen the credit cost guidance has been met for FY25, 2.07%. Now, one thing which I really like about this company is that the guidance. Now, they have always been spot on the guidance. They have already always met the credit cost guidance as well. Now, lastly, let's also look at the margins. They are guiding for a margin improvement for FY26. And if we talk about the valuation, now the stock is trading sub 4x in terms of the January 2026. So the stock remained relatively undervalued in the past 6 months, which forced to see a run up of about 45% in terms of stock performance as well. Lastly, if we look at the analyst recommendations for the stock, we have 21 buys, 13 holds and 5 sells with a return potential of about 1.3%. So the upside remains largely capped on the back of run-up, which we have already seen for this particular stock. So this is how the overall picture is panning out for Bajaj Finance.
Okay, Vansh, thank you so much for bringing us all those details. In fact, if we have Kush with us, Kush, your quick view with regards to where charts are concerned for Bajaj Finance?
It's a very neat setup. The stock near all-time high levels, gaining ground. My only concern is that from here on, from a momentum perspective and a very near-term perspective, the risk-reward ratio is not favorable. But if you have a slightly medium to a long-term view, I think the stock could continue to do well. If you want an entry point, I think 975, 980 zone, is a good entry point. From there on, the risk-reward ratio becomes very favorable. But all in all, the structure is very positive. If it's in your portfolio, you should not let go of it. Incidentally, also as a disclaimer, it happens to be in my portfolio, but my view is devoid of that. So yes, you should continue to hold fresh entries around the 970, 975, 980 zones.
To wait for some correction to make a fresh entry in terms of Bajaj Finance. In fact, earlier today, we also spoke to N. Jaikumar, MTN Group CEO of Prime Securities, and what his view is that he's positive with regards to where BFSI goes. In fact, he sees a lot of consolidation that could be happening in the NBFC sector. Let's quickly listen in.
Actually, the good news is that a lot of the bad news is already in the price. A, our markets haven't been performing vis-a-vis their global peers. B, we've had the worst, I feel, of tariffs and tariff-related rhetoric, tariff-related bombast, which has been sort of played out. We've had sort of sobering noises in terms of people wanting to now talk about a deal that could happen. So we've gone through the full circle. We've had earnings disappointments, and now we have a situation where corporate balance sheets are as deleveraged as they've ever been. The private sector capex, in a sense, the greenfield capex is also beginning to start off as one of the things that was not there over the last several years. It was largely the public sector that was carrying the way forward. Keeping all this in mind, inflation is under control. Liquidity is very good. RBI is going all out to provide ample and more liquidity to the banking system. And in that context, I mean, really, I would say that it's a confluence of multiple factors, and especially the global tariff play out that's happened over the last several months. And I think paradoxically, providentially, whichever way you look at it, we could end up with one of the best deals, though that doesn't seem to be on the anvil in terms of case facts today. But I do believe that when the dust settles, India will emerge with a reasonably good tariff deal with the US. Apart from, of course, multiple bilateral FTAs and bilateral treaties with a whole bunch of trading partners, possibly this could mark the beginning of, and the final fling came in the form of some degree of fear amongst the IT majors, the H-1B issue, which may be the harbinger of other things to follow. Though the IT sector, I believe, is more beset with issues of how AI will disrupt it rather than many of the other issues regarding tariffs, etc. So in the short run, I think most issues have played out. We are still short of an all-time high, which the other markets have convincingly made, and especially the markets in the US, the Nikkei, for instance, the European markets are hitting new highs consistently and scaling new peaks. So from that perspective, India too should follow. The catch-up will be there. And with the GST moderation and the GST rationalization, etc., I mean, I can't think of a better set of circumstances. The FIs continue to be at the margin sellers. Their positioning is reasonably weak. Even today, they are far, far more short than they have been. So from that perspective, I think a contra rally is well and truly underway. We are about 1,000 points away from when we started at 24,200 or 24,300. We are about 1,000 points up from there, but we have some way to go is what I believe.
some more way to go. That's what is the word coming in from Jakes as well. But let's quickly slip into a short break. Lots more lined up on the other side. We'll bring you the chatter behind the dealing room in our segment Heard on Street. Please stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
best app to use is the NDTV app.
Back with India market close right here on NDTV Profit. It's not raining as badly as it was yesterday, and maybe that's what the markets are celebrating as well, because I call it a celebration because we've come up from the lows of the day, and which is actually a really good sign. Now, Kush Bora has spoken about this, that it is a market that is buy on dips, or even this dip was something that he bought into, but he might be comfortable being constructive in the markets right now as well. Mr. Chokalingam joining in. Mr. Chokalingam, if that is the overarching view, for businesses that you like, are you putting in money to work right now, or are you waiting for a dip?
No, we are suggesting putting money. Even personally also we are investing. The only suggestion we are giving is that focus on domestic demand driven companies. Avoid companies which have export exposure to the US. Also avoid for time being adding anything fresh to IT services company. So this is our stand, and we remain quite optimistic on the market, even in the short term, because in the interest of the political scenario from US and on account of economic rationale, I believe ultimately US India would sign bilateral agreement successfully. That's my strong conviction.
Okay. Well, so we have two bulls on the show. Let's try and bring in a bear. If not a guess, then at least an argument. And Vansh Johnson to talk about the bull versus the bear argument for AU Small Finance Bank. Up, what, more than 3% today, Vansh? Why so?
Yes, thank you for that. So we have already seen a decent run up in the AU Small Finance Bank. So let me firstly start off with the bull case scenario. So now what we have seen is the bank has been the fastest growing bank. In fact, it has crossed the 1 lakh crore mark. 1 lakh crore loan book, and also it has shown a growth of over 18% on a year-on-year basis. Also, if I talk about the bear case scenario, now the growth has been falling due to the higher focus on the secured loan. The bank has been shifting its focus from the microfinance to the secured part. So this is what we are looking at in terms of the first case. Secondly, now what we are looking at is the decline in the margins. Now the margins may reverse in Q3 FY26 as the bank is anticipating revival in the credit cycle, and they may focus on lending a bit more on the microfinance part. However, the margins may fall sharply to 5.4% in the Q1 FY26, which is a bear case scenario as well. Moving on, let's also look at the credit cost. Now the credit costs are expected to improve from H2 FY26. Now the bank is expecting their credit cost to improve. However, in terms of bear case scenario, now the credit cost guidance has been hiked to 1%. Now the earlier this guidance was about 0.8 to 0.9%, which has been hiked to 1%, which can further have a significant impact on the ROA as well. Moving on, let's also look at the valuations. Now the bank is trading at a 40% discount to their 5-year average valuations. So this is a bull case scenario. In terms of the bear case scenario, now the asset quality and margins may remains a negative for this particular bank as well. Lastly, let's also look at the analyst recommendations. So what we are seeing is a 16 buy calls, 10 hold calls, and a sell 8 calls with a analyst return potential about 8%. So this is how the overall picture is panning out for a AU Small Finance Bank.
Okay, Vansh, thank you so much for bringing us those details. Mr. Chokalingam, valuations looking attractive, but asset quality is a concern for this particular counter. Your view?
I believe valuation is also not attractive. It's a great bank, no doubt about it. If you look at the last 5 years, one has to be very fair. The bank has done phenomenally well. But it is trading at around a 3.1 time price to book value. But fact is that in the last 2 years, the banking valuation multiples have contracted across the board. So I think it is fairly priced. I would recommend this stock only if it falls slightly below 700. Otherwise, 3.1 time price to book value is a fair valuation at current juncture for any bank like this kind of size.
Okay. 3.45%, 730 and counting. Is there a trade here, Kushbora? Because the trade was when Somit spoke about this in what the dealing rooms were recommending at 705. It is at 730 now. Is it just starting or has it played its course from a trade perspective?
You have to hand it to Somit, right? What an entry point.
You seriously have to, yes.
You and I think, both are somewhat fans of Somit, right? With the kind of
most certainly good.
No, definitely a good entry point. And in fact, that was exactly what my suggestion was going to be. 700 is a very strong support level for this. The stock has rebounded multiple times in the last 15 sessions from there. Also happens to be about that 38.2% retracement mark for that rally that started, in mid-March. So yes, it's got a couple of things going. So I would suggest positional trade on this one with a risk reward ratio of 1:2. 730 the current price, 700 strong support zone as a stop loss, 760 is the first resistance, and there's the gap around the 790 mark. So for a 1:2 risk reward ratio, but from a positional standpoint, 1 to 3 months out, you could consider a trade. Near term, there could be some resistances that might pop up. So yes, if you have a 1 to 3 month kind of a view, then you could consider a trade on AU Bank.
Okay, so that's a trade coming in with regards to AU Small Finance Bank, goes trading at the day's highest levels. Mr. Chokalingam, any view in terms of AU Small Finance Bank?
As I mentioned, it's good to hold for long term. So in case stock corrects anywhere around 670, 680, then fundamentally it becomes a little attractive.
Your view in the previous one, apologies for that. But the other space that is buzzing in trade today is the steel sector. In fact, JSW Steel, you have Tata Steel, all of them which are up in trade. And this is probably on the back of the anti-dumping duty that we're looking at against certain Chinese products. Vansh is with us to tell us more. Vansh, what is the news and what is the impact that the companies could see?
Well, yes, thank you for that. So we have clearly seen a series of developments for the entire pack, for the entire steel pack. Firstly, we saw the 3-year extension of the safeguard duty. We saw production cuts from the steel mills in China as well. And then we saw the Fed rate cuts. Now today, what we have seen is the DGTR has recommended anti-dumping duty on the Chinese electrical steel for the period of 5 years. Now, if I talk about the specifics, now the duty will be imposed on cold-rolled, non-oriented electrical steel from China. And this particular steel has been, now the DGTR believes that this particular steel has been exported to India at a price below the normal value. And they believe that the duty may range from a range of about $223 a ton to $414 a ton. Now they believe that this is on the back of this is to protect the domestic players from the cheap inbound shipments and to ensure the fair value for practices and a level playing field for the domestic producers as well. However, this is just a recommendation and the final decision for the imposing the same remains with the Finance Ministry. So this is what the overall picture is looking like for the entire steel pack as well.
Interesting. Thanks a lot for that, Vansh. And yes, I mean, you could almost argue that some of the companies and some of the sentiment around some of the steel businesses has been reasonably strong. I don't know if the second half slowdown in China or a perceived slowdown in China and world could actually dampen the sentiment, but else it's not been not buoyant, and which is actually a really good sign, right? I wonder if there's a trade here, Kushbora, on the steel names that Vansh was talking about.
There is. My order of preference would be JSW Steel, Tata Steel, and then come in SAIL and Jindal Steel. But I would actually stick to the first two names because, while there is momentum in SAIL and Jindal Steel as well, they're close to their, technical medium-term resistance levels. So yes, if you want to consider, you could well consider JSW Steel as the first pick. I think from here on as well, there's good momentum, good volume action, which could take the stock to 1165 or even 1190 odd levels. Keep a positional stop around that 1125 mild resistance zone, which will now act as support zone. Even Tata Steel could inch towards 177, 181 kind of levels. And on the downside, 169, good support zone. So yes, my preferred picks would be JSW Steel followed by Tata Steel.
Okay, Mr. Chokalingam, in fact, the index itself is up almost 17 to 18% in 2025 so far. Do you think fundamentals will support a further upside from here on? Or would you say this would be then time to book profits?
I may be wrong, but I firmly believe that it is a time to book profit because, they are doing reasonably well because of the government support. But The steel is a global commodity, global metal, and there are signs of slowdown in China. And not only that, the most concerning issue is that the US tariff war, which is initiated against almost all major economies in the world and against all major imports going into US, is ultimately going to correct global growth. So there is no doubt about it. We will see some kind of deflationary signs. That's why even the steel prices are down on year basis. So I would rather pick up commodities or metals which are primarily driven by domestic demand. Not only that, even the prices are determined by the domestic equilibrium forces rather than the global forces. So what I mean is that I would prefer stocks like Coal India, which is isolated from the happenings in the world, because it sells coal prices much lower than the global prices. So instead of chasing the steel stock at current valuations.
Okay. All right. Now, it's that time of the show which, all of us wait for, where my colleague Somit Sarkar joins us with all the chatter that he's hearing from the dealing room. Somit, what are you hearing today?
Well, firstly, it's on JSW Energy. There are strong buy flows on FI desk is what dealers are indicating for this counter specifically. Apart from that, there is Hero Moto and Maruti. In fact, for auto space, what dealers have indicated is that they are seeing sell flows at higher levels on all the auto counters. Sell on rise is the strategy that they are saying that smart investors have adopted specifically for the auto counter. So keep an eye out for auto names, Hero Moto and Maruti. Apart from that, KFin Tech, that stock has been down yesterday on the back of a buzz that there would be a big block deal that would come in from the promoters. Now, post the first stake sale that happened in May 2025, everyone knew that the promoter is looking to exit. But the key question here is about the timing, and what I'm understanding from the dealers is the fact that there won't be any stake sale that will happen from the promoter's side in the September series. Most likely this deal will happen only post the second week of October. So keep an eye out for KFin Tech. For MCX, the stock has been gaining in trade, but there are some sell flows at higher levels is what dealers are indicating. And this is because the Q2 overall volume data is expected to be on the weaker side. Average daily turnover for futures and premium volume is expected to be down by around 6 to 7% on a sequential basis. For JB Motor, there are buy flows on large HNI desks. Dealers are expecting some positive development very soon here. And when it comes to BAC and Samvardhana Motherson, for BAC, multiple dealing rooms are giving sell calls on technical charts, and for Samvardhana Motherson, there are buy call given by multiple dealing rooms based on technical charts itself.
Okay. All right, Somit, thank you so much for bringing us those details. I think the auto pack is in focus, and a lot of auto names also have shown up on that list.
Even I have a name, but first you go from that list.
But I think I'll take up the last name that he talked about, that is Samvardhana Motherson, because his recommendation, what he's hearing is that there is buy call given by a lot of these brokers. So Kush, technically, do you also think that it's supporting the charts right now and this is the time to make an entry?
Mahima, while yes, there is momentum, the stock at the high point of the day, there is volume action as well. But a lot of these names have already run up quite a bit. So I think it'll be a good idea to buy on decline. So if I were to look at an entry point for Samvardhana, I would be comfortable entering around 107, 108 levels. That was the resistance, the breakout zone. So any pullback towards those levels will make it more healthy. But if you have continued to hold with a trailing stop loss, fresh entries, like is the case with most of the manufacturers, the vehicle manufacturers, even some of these ancillary names makes more sense to enter at declines.
Okay, Kush Bora, there was a brief spike today in JSW Energy that we saw too. It's cooled off a little bit, but is it giving you a trading flavor, JSW Energy?
I think the volumes are giving me more comfort than the price action alone. The stocks actually gained quite a bit of ground, more than about 10-12% in the last month or so, month and a half or so. While yes, you're right that the stock is off the high point of the day, the volumes are still very interesting. Have been for the last 3 out of the 6 sessions, and the stock crossed the 200-day moving average as well, trading above the resistance of 540 mark. So, couple of things going for it. The mild concern here would be the momentum, and that is also reflected by the fact that it's off the high point of the day. But yes, there is there's definitely an uptick. Volume action does suggest that there is buying interest at lower levels. So if you have a position, continue to hold. If not, with a 200-day moving average support around the 530 mark, that acting as a stop loss, you could hold on to this one for higher levels of 570 and about 590.
Okay, so that's with regards to JSW Energy so far. But staying and coming back to the auto pack from here on, what's interesting is that Navratra has actually begun on a strong note for all your auto majors as well. And that is thanks to the big GST cut bonanza. If you see names like Maruti Suzuki, Tata Motors, all of them have already announced the kind of demand that they're seeing. Hyundai, you have M&M as well, which has joined the bandwagon so far. And that's with regards to what the auto pack is telling you. In fact, let me first take a quick question with Mr. Chokalingam in terms of the auto pack. Mr. Chokalingam, Bamba Navratri that has begun for all of the 4 passenger vehicle makers, and that's the commentary that has come in from them as well. What would you advise investors to do? Because in the month of September itself, you've seen a good run-up that has already happened. But from here on, where do you see them going?
Yeah, auto stock sector is a typical of what analysts learn about the stock market, discounting the future. As you rightly said, the GST reform was discounted much well in advance before our finance minister revealed them. I would rather suggest hold on to them, but wait for October sales, to see, because now there will be a pump up in sales because there has been a lot of delay expecting this GST rate cut. But one has to really see, post this one-time, ramp up in the sales, whether normal sales from October month, do they show any significant year-on-year growth, or they continue to show 2 to 4% single-digit volume growth. So till that clarity comes in, I would give hold, but I would give buy recommendation on tire stocks because they have got a multiple benefits apart from GST rate cut. The natural rubber prices as well as crude oil prices keep going down, and they are down more than 18-19%. And also the ramp up in automobile sales also positive. So therefore, one can selectively buy tire stocks and hold on to automobile stocks.
Okay, so that's the word coming in from Mr. Chokalingam. You could look at automobile companies, but let's get across to Puneet. To tell us more in terms of what he's picking up. Puneet, over to you.
Well, thank you for that. Definitely some key numbers being put out by especially the car makers like Maruti Suzuki and Hyundai. So let me start with Maruti first. 3 key numbers that they've given which you should have your focus on. 80,000 inquiries that they've received in this particular period. That's starting from GST rate cut, and they've also mentioned about 75,000 inquiries have just come in the last 4 days. That's from 18 September. That's number one. The other thing is they've already delivered also 30,000 cars in this particular time frame as well, and that's largely been delivery on the first day of Navratri. This is roughly about 1/6 of the company's monthly sale that the company has done on the first day of Navratri itself, and that's a key positive momentum. And 50% of all bookings and inquiries have come in from the small car space, so that's been another key one. So it's a huge bump up, Navratri especially for the likes of Maruti Suzuki. When you look at that, similar trajectory has been given by Hyundai. They've given roughly about 11,000 bookings is what the company has gotten essentially on the first day of Navratri. This is the highest in 5 years as a key number. The last one was just a post-pandemic when we got that number as well. So it's key. For Tata Motors, that's 10,000 on the first day and 25,000 plus inquiries that they've got on day one of Navratri. What's also interesting is a key beneficiary, someone like CarTrade as well, because it is a classified platform where you see a lot of advertisements being done. They operate platforms like Car Wale and Bike Wale, and a lot of customers before purchasing their car, they do their research on these websites. They've seen a 74% jump in traffic on the day one of Navratri itself. So this will have a ripple effect across, segments, and auto is definitely a big beneficiary of the GST rate cuts. And you're starting to see that these 9 days will be crucial, and it's off to a great start.
Puneet, so much for that. Interesting names coming up there with the kind of bonanza and the blockbuster gains that they're seeing as well. So all your dealers that are in focus. But moving on, let's look at the recent IPOs, and we're talking about lock-in dates that actually open up. We're talking about $21 billion worth of shares that will be opening up. A total of 67 companies will see their pre-listing shareholder lock-ins lifted. Varsha joins us with more details. Varsha, over to you.
Yes, as you rightly said, we'll see a lot of selling pressure when it comes to these companies. At 67 companies will have their pre-IPO lock-in period expire. Let's start with 1 month unlocking, wherein the first companies to see the lock-in expire will be smaller firms like Vikran Engineering and Mangal Electrical Industries, and these unlocking will happen in somewhere in late September to early October. Talking about 3-month locking in November, there are a lot of companies wherein the the lock-in period will end. This includes JSW Cement, you have HDB Financial Services and Kalpataru, and these are significant due to large volumes of shares involved. Even for a 6-month locking, the largest unlocks are set up for November and December. You have Ather Energy, have a massive 44% of total outstanding shares will become available. For Aris Infra Solution, you have almost 54% of shares which will be available. Even Prostrum Infosystem will see lock-in period ending. So overall, if you see, the market could see a significant increase in sell side pressure due to these companies who has a lock-in expire in coming few months.
Thank you so much for that, Varsha. In fact, Kush, at this hour, with the way markets are panning out, anything that comes to your radar which could be a good opportunity?
So I'll stick to the banking names that we discussed. Bank of India is one stock that is still holding ground, still gaining ground. So is Bank of Baroda. I think Sequent Scientific, the weekly pick that we discussed yesterday, had a good run, seeing some profit taking and consolidation. So for eventual targets of 220 with a stop loss around the 195 mark, we could continue. So yes, some pockets are are still interesting. And largely what we're seeing today could well be, an expiry move, today being the weekly expiry. So yes, I think Nifty consolidating around this level is also fairly good.
Okay, so banking names become the top priority for Kush as well. But thank you, Kush, so much for joining us on the show. We'll quickly step into a short break. Lots more lined up on the other side. We'll get you the top buy today, sell tomorrow picks as well. Please stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
quiet day for the markets, very, very flat, except for the Nifty IT, which after starting off flat is now down in trade yet again. So that is the one sulk, if you have. Banks are thwarting that, but IT currently sulking. Amit Goel, CMT, SEBI registered advisor and partner at Blue Oak Wealth, with us also on the show, along with Mr. G. Chokalingam. And Amit, I wonder if the derivative positions suggest any kind of breakout move either on the index, benchmark index, or for that matter on Nifty IT. What do the positions suggest?
Yeah, hi, good afternoon, Neeraj. Thank you for having me here, and good afternoon to all the viewers at NDTV Profit. It's such a refreshing thing to be in the afternoon session rather than the early morning where I have to give, a quick morning calls and everything. This is a much more relaxed session. So thanks for having me at this point in time. However, coming to the indices, I see absolutely no momentum in the indices. Every rally, if you remember the last time we discussed, Nifty at 25,500, Bank Nifty at 55,500 levels were my resistance points, and we have taken drubbing from there. There has been some amount of profit booking on both the indices from those levels. While we do see Bank Nifty, trying to give some sort of support from lower levels. However, I am not all that convinced about this move. If you look at the derivatives data, it's purely a range-bound derivatives data. There's nothing much to read in it. For Nifty, it is 25,500. For Bank Nifty, it is a wider range between 55 and 56,000. Until and unless the 25,500 on Bank Nifty and on Nifty and 56,000 on Bank Nifty is taken out convincingly, I do not really see any trend. Any traders who are looking to capitalize on this can do with non-directional setups on the major indices.
Amit, hi, good afternoon. What about your picks for the day? In terms of the Bank Nifty, you said the charts, the derivative space is not indicating a very positive momentum, but what are the counters that you are looking at in terms of trading right now?
Yeah, as a trader, one would want to have some longs and some shorts in their books all the time. Paying heed to that, I do have a couple of momentum picks for, let's say, a BTST or for a couple of days. Incidentally and ironically, they both happen to be banks, and AU Bank and IndusInd Bank, to be precise. AU Bank has been discussed quite in depth by Kush and the team, and I concur with that vision that AU Bank on the charts has given a sort of a move above the moving average of the 20-period moving average on the daily time frame with very strong volumes today. So the price action, it has broken out of a range. And I am bullish on this stock for the time being, wherein we could look to enter at the current market levels, keeping a stop loss just below today's low, which is around 700, and we will work for targets of 760 to 800 levels. Purely trading call here. I could also discuss IndusInd Bank if needed.
Please.
Yeah, sure. So IndusInd Bank also has a similar trajectory. In fact, after about 3-4 months, IndusInd Bank has, for the first time, moved above the 20-period moving average, indicating that there is some sort of reversal, some sort of value buying creeping into this stock. Some fundamental news also has been positive. So it might have some tailwinds to it as far as I see. Given the volumes supportive and given the price action today, similar setup as AU Bank. Counter specific, I'm looking at going long here at the current market price, keeping a stop loss of 730, which is around the day's low, for targets of 780 to 800 again.
Okay, interesting. After a long time hearing a buy on IndusInd Bank, keep in mind, Mr. Chokalingam, now they have a CFO as well, not a very well-known entity, but out there, a CEO in place, etc. Is there a fundamental case to try and buy into what could be a story of resurrection, IndusInd Bank?
Fundamentally, it's very attractive, trading close to one-time book value. My only concern is that whenever such a governance issue happens in the financial service industry, they take a much longer time period to get back the valuation multiple which they used to enjoy in the past. The prime example is Yes Bank. Despite global institution taking a substantial stake, it is not able to improve its valuation multiple. Even half of the level it has enjoyed before it had a governance issue. So that is the only concern. But otherwise, yes, I completely agree that IndusInd Bank looks very attractive in terms of price to adjusted book value.
So that's IndusInd Bank at the day's highest levels. But moving on, HCC, that should be another one we should look at. They've bagged a 2,600 odd crore order. And apart from that, what is interesting is the Ventura note on the company. They're recommending a buy for a target price of 64. It's almost 120% upside from where they started off with. Stock is seeing around gains of 2.7%. In fact, Amit, let me come to you. What are charts indicating with the HCC? Would you warrant a target price of 64 on the counter? Yes, that's a fundamental target price. But do charts also see that kind of positivity?
I don't see 64 dur tak on the charts, so to speak. Right, but as a technical analyst, the momentum seems to be with HCC. Notwithstanding today's move as well, with strong volumes. So keeping a stop loss of about, around 28, 27 levels, one could probably continue if they have invested in this for possible targets of about 32, 34. 64 is too far off from my perspective.
34 is what you're looking at in terms of HCC, but a few other small cap stocks that are buzzing in trade today, from a Reflex Industries to a Om Infra and a Crizac. Jasmeet is standing by to tell us more. Jasmeet, over to you.
Well, right, thank you for that. The small caps are buzzing in trade today, starting off with the Reflex Industries, where the stock is nearly up 18% in trade. Well, this comes in after the company announces a demerger. The company's mobility segment is getting demerged and forming a separate entity by the name of Reflex Mobility Limited and getting listed on NSE and BSE, while the green mobility segment caused a drag in the profit. So the delisting is positive for the market, and that's why the stock is buzzing. The next one in my list is Om Infra. Well, the stock is up nearly 6.5% in trade today, while what we see is the buzz is behind of a volume where it's 3x over 30-day average. If you look at the order book of the management, currently standing at 2,600 odd crores, and management is penciling in those orders to get converted. Further, the management has guided a margin of 8 to 10%, while the current margins are at 3 odd percentage. While the next one on my list is Crizac. We spoke to the management recently, and the stock is roughly down 10 odd %. While what we see is that company deals as a education platform where they connect students with the universities, and if you look at the revenue, it's nearly up 60% on YOY basis for FY25 at 850 odd crores. While the management also says that they don't see any headwinds from the US market, given any headwinds in US market gives tailwinds in the UK business, and UK business roughly contributes 95% of the overall revenue. While the last one is Tina Rubbers, the stock is up nearly 7% in trade today. It's behind the volumes. The volumes are roughly 9x over the 30-day average. If you look at the capex that company has planned, it's roughly 100 crore over 2 years, and management has also formed a further rubber plant in Saudi Arabia. So these are the small cap buzzers in trade.
Well noted. Jasmeet, thanks a lot for that. 7% up for Tina Rubber. Amit Goel, a Tina Rubber or a Crizac or a GMDC, anything that stands out for you?
I really do not trade these small cap and mid cap stocks simply because they are too volatile for me as well as for my clients. So do not really have a view on them.
Okay, Mr. Chokalingam, a Tina Rubber or a GMDC?
Among the stocks your colleague discussed, I looked at only two. One is Reflex. It looks good, based on the performance and valuation. And I would give a sell call on Om Infra.
Okay. Fair. Sell on Om Infra, 7% lower. Why so, Mr. Chokalingam?
If you look at last 2 years performance and PE multiple, it doesn't give you a lot of any comfort.
Okay, Om Infra. I'm just trying to see if that stock looks, Mr. Chokalingam is talking about the PE, the trailing 12 months PE is 56 times. And I think what Mr. Chokalingam is saying that the performance has not been strong enough to support a trailing PE of 56 times. Frankly, there are a lot of other businesses which might be available for much lower. Some volume buzzers in trade. One of them is, of course, KC International. You heard the management today on NDTV Profit, 31 times volumes relative to maybe the 5-day average. Tata Investments, about 15 times averages. Borosil, 13 times. RR Kabel, about 9 times. And, well, we spoke about Tina Rubber, 8.34 times. So, second day in a trot now for Tina Rubber, both price and volume buzzers. But more importantly, RR Kabel, after a while, really zooming up in trade, as is KEC International. This RR Kabel, Havels, etc., Mr. Chokalingam, or a Polycab, Do you like these businesses? They've come back from the negativity that was there on those stocks when the Adani Group decided to invest into this business. They've come off from those lows. Are they good enough to invest in?
Yes, KAC International looks good. I have done a study on it. Considering the industry prospects, KAC International looks good. And in wires and cable segment, I would go for Finolex cable. That is only laggard, but I am pretty confident that Finolex cable can do well, sitting on huge cash and a lot of expansion happening. Stock price also down almost 40% from 52-week high, and got a strong brand image among the customers. So these are the two stocks I would recommend.
Okay. The other pack of stocks that is in focus today is the rice stocks, and this is because there is a September data that has come out which indicates that rice reserves in government houses are up 14% on YOY basis in September itself, and this is expected to support higher exports. But the new paddy harvest is also set to arrive, and probably because of this, government agencies could face storage challenges from here on, and plus considering the surplus that would come in versus the demand that is there for these rice exports could probably put pressure on pricing as well going forward. And traders are actually tracking right now the exports, the kind of stock bulking that is happening, and that could probably put a downward pressure on the pricing, and export realization for a lot of these companies could be under pressure. This includes likes of LT Foods or KRBL. Mr. Jocklingam, I'll stick with you again for this one. Rice stocks, anything like a KRBL or LT Foods that you like?
KRBL I don't track after seeing a lot of regulatory allegations. I am not saying that it made anything wrong, but based on the news flow, I would avoid. LT Food looks good for long term. One may consider for long term.
Okay, so LT Foods a long-term bet, but all the three counters trading under pressure almost near the day's lowest levels, and probably these could be pressure that could be coming in terms of prices when it goes to the export market, taking into consideration the kind of surplus that India is sitting on, which will then go into the export markets, and that is what could put pressure. But moving on, in fact, a special segment which is profit intelligence. Before we get across to our profit intelligence segment, let me take in a quick question with Amit as well. Amit, one stock that has been doing its ups and downs right now is a Vodafone Idea. After the Supreme Court came out and said that they will hear their AGR plea as well, the stock did see some smart gains. That up move probably has continued, a 4% up move, but still it's at around 8.7. Would you still look at it as a trading bet? Because we've seen highs of around 13 on this counter. 23-24% is the up move that has already come in the last 1 month.
Yeah. So Vodafone has been a crowd favorite, so to speak, simply because it trades sub 10 rupee level. So there is this psychology that you can buy a lot of shares and have a bigger share. That's precisely one of the reasons why it always tops the volume charts. However, I am not a very big fan of this stock because if you've noticed for the last 1.5 years, it has been in this range and it has not really given a breakout. Every time it has tried to give a breakout, it has faltered to deceive. So until and unless it crosses 10 rupees on a sustained basis, and if it does give a retracement, I would then look to buy it into it from a confirmation basis. I would not really join the bandwagon right now. It's a difficult stock to trade, so to speak, because it does have its moments of very strong volatility.
Citi, in fact, had come out with a report where they are giving it a high-risk buy, and they have a target price of 10 as well on Vodafone. So the technical and the fundamental view matching for a 10, and a breakout post that probably Amit could see some buying interest. But moving on to a special segment, Profit Intelligence. Today we're looking at a comparison between two cement companies wherein you have Ultratech Cement, which is one of the top losers on Nifty 50, versus a Shree Cement, which has got a good target price from a Citi yet again. Puneet joins us with all the details. Puneet, over to you.
Well, thank you for that. So the latest trigger is definitely, the note by Citi on Shree Cement. They maintain a target price of 35,500. 3 key points they made in the report before I move on to a comparison with Ultratech Cement. management largely remains optimistic on the second half recovery. They roughly, the estimate is that 17 million ton of cement has already been sold. They are looking to, do a similar number in H2 of FY26. Possible increase in private capex as well as a cut in GST rates from 28 to 18% should be a demand booster, is what the brokerage affirms. And finally, a very interesting point, this is the first one which has actually come across and said it, that the region of East India, where Shree Cement is a stronghold, post Bihar election or just tad before that as well, could see a higher and a faster growth compared to the northern as well as the southern region of India. And the analyst has stuck out their neck and said that because the eastern region hasn't actually performed in terms of growth, especially in this particular time frame. When you look at the management guidance, and here is the key one, they're expecting 37 to 38 million ton of cement to be sold in FY26. They've reaffirmed their guidance of 80 million ton capacity by FY28. It's a steep ask, doubling capacity essentially. The capacity currently is between 50 to 55 million ton, with overall sales and utilization hovering at 75%, but it's a steep ask to go all the way up to 80 million tons as well. Capex will be roughly 4,000 crores over the next 3 crores. That's an annual number. So they will be continuously investing in increasing the capacity to the number which we mentioned. Now, what do brokerages actually anticipate in terms of growth compared to Ultratech Cement in the next year, FY26 specifically? Revenue growth for Shree Cement is expected at 12%, while Ultratech will have the higher boost at 17%. But EBITDA growth will also be the same for someone like an Ultratech at 26%, at 28%, pardon me. The EPS growth will be 28% for Shree versus 30% for someone like an Ultratech Cement as well. Finally, in terms of valuation as well, where do they stack up? In terms of buy calls, Ultratech does have 82% analysts covering the stock, giving a buy recommendation. The return potential is also significant at 10.7% versus about 4.9% for Shree Cement. And in terms of EV and EBITDA, largely neck and neck in terms of valuation. So the key aspect for Shree is the stock hasn't performed that well in the last 3 to 4 years. So the growth aspirations is strong. The company is also refrained from any kind of much acquisitions compared to Ultratech, which has done Kesoram as well as India Cement. So they are looking to boost capacity to 200 million tons. But that's for our profit intelligence segment. Putting the focus on Shree Cement, that will be the one to watch out for. H2 will be the biggest area for growth essentially for Shree Cement, leading up to FY28 when the capacity is expected to reach 80 million tons.
Okay, Puneet, thank you so much for bringing us those details. Mr. Okalingam, your view with regards to where Shree Cement stands, because as Puneet mentioned, second half is a promising quarter for them, and going forward, the kind of capacity expansions that they're taking, going forward, things are looking nice. Do you agree with that?
I looked at 3 more parameters. That is, FY25 was a little difficult time for cement players. So in that year, how these 2 companies managed their operating profit. When I see that, Ultratech managed to keep operating profit intact in FY25 over 24, whereas Shree Cement has not done that well. And second, if you look at the P multiple also, Ultratech is far cheaper than Shree Cement. Third, even the return ratios are far better for Ultratech. So between these 2, I would prefer Ultratech. I would not give too much importance to expansion of cement capacity in the near future, because the whole industry is seeing a lot of cement capacity expansion, and capacity utilization is somewhere around 75% range. So one has to see, how the industry is able to keep rising the realization when the capacity is expanded. So therefore, that would not be a major, criterion for evaluation. Rather, I would give importance to the 3 parameters which I mentioned. So therefore, I prefer Ultratech to Shree Cement.
Okay. By the way, stocks which are perking up, despite the fact that there is also this high on gold, rupees come off as well, but there are individual pockets really perking up in trade. So TCI and TCI Express as stocks have done very well. Keep an eye out for them. There is GMDC. And viewers, I think what's happening is that the rare earth related plays are really shooting up. Anything got to do with base metals, rare earth. Hindustan Copper has had a phenomenal run too in the recent past. GMDC is having that run today, and look at those volumes there. 52 million shares traded for GMDC on a single exchange alone. That's the extent of the uptick that we get there. Amit Goyal, how is the price volume action in GMDC? And parallel to that, if you can give us your BTST strategy for the day.
So GMDC, in fact, all the metals, the metal index has been on fire today, and noticeably so. GMDC at with a gains of about 11%. I don't know if I would want to join the bandwagon at this moment. Maybe if there is any dip in this, because the momentum is very strong. Any dip towards 580, 560 levels, I could probably look at re-entering this stock for trying to catch it at a retracement. My BTST calls, on the other hand, are slightly interesting in the sense that I am recommending to book profits from an auto stock and shift that money into another auto stock, which is book profits in Maruti and shift that money into Ashok Leyland. The reason is very simple, that when we had met in the mid of August, I did give a buy call on Maruti around 14,000, 14,500 levels for targets of 16,000. So that target has been achieved. And if you notice the auto index, in which Maruti happens to be the heavyweight, we do see a markings of a shooting star pattern, which is a profit booking or a pause in the current trend. Hence, any smart investor who has taken, who is sitting on some profits on Maruti could look at booking that profit there. And I also noticed that Ashok Leyland, on the other hand, contrary to what the index is showing a lot of strength and momentum in it. So keeping today's low as a stop loss, I would recommend traders to take some position here for ultimate targets of around 150 or 155 levels.
Okay, that's an interesting switch between a Ashok Leyland and a Maruti Suzuki as well. So I think that is something you should be watching out for. But let's quickly look at something that NDTV is looking to unveil soon. Lots that is lined up so far, and I think this is something which is going to be, Neeraj, the buzz, the beat, and the glitter.
The groove, the glow, and lots more. So it's certainly turning out to be a very interesting launch and something that you should watch out for. Something's brewing. Keep an eye out for what that is. The unveiling happens tonight at 8 p.m. I can see some word out there, but can't quite figure out what it is. Let's see.
The time is important.
The time is important. Okay, let's see how it shapes up. But keep an eye out on the network for this, for sure. Okay, we've been talking about what to buy a number of times. The question is, things that have come off, is there a need to sell some of those as well, even though they might be down? Now, Mr. Chokalingam, it's a contrarian view that I'm asking you, but there are people who are saying that because of the uncertainty surrounding the IT business, even if the earnings don't get impacted, will we see a mild derating in the multiples further from where they are right now? And therefore, is it advisable to switch out of IT into some other pockets which are exhibiting strength? What would your thought be?
Certainly, yes. I completely agree with you that this is a time to consider selling all large IT stocks. A lot of headwinds. I mean, we all know what has happened to H-1B visa. Of course, it is clarified only one time, but it is estimated that it can impact even up to 5% of the margin. The problem is, in case there is a further delay in successful resolution to the bilateral trade agreement between US and India, then there is a threat of service tax also being imposed on these companies. In any case, the large IT companies have not been growing more than 2 to 4% their dollar revenue exports. So a lot of headwinds are there, and the timing is very, very improper for this particular sector. What used to be a defensive sector lost its defensive tag. It has even started dipping its profit from these stocks as compared to run up in Sensex and Nifty. So I think even now it is not too late to sell large cap IT stocks.
Okay, all right. So that's with regards to where IT stocks are concerned. But the primary markets this week, is buzzing left, right, and center. The main board space itself is going to raise around 7,200 crores. Today also we are seeing opening of 4 IPOs, and we spoke to some of these managements. We spoke to management of Anand Rathi, Sesha Sai Technologies, as well as Jaro Institute about their company's growth model and outlook going forward. Listen in.
This is the second company which is coming in public from our group. Basically, earlier, about 3.5 years back, we came with a wealth company which is listed in a market site. So this is a purely broking and distribution company. This is one of the oldest company. We started our capital market journey 30 years back, way back in 1994, and since then we kept on adding various different businesses, various different verticals. In this company, what we are doing, we are catering to almost all category of customer, from retail to M&I, HNI, NRI, corporate, and institutional. So all kind of a category of customers, we are satisfying the need of investments of any individual investors who are dealing with this company. And primary idea is how investments need of a specific customer should be satisfied.
Just to give a flavor of the customer depth that we have, 10 of the 12 large public sector banks is what we service, 15 of the large 21 private banks is what we service, 9 of the 12 small finance banks are our customers. We have a very deep penetration into the general insurance and the life insurance space. So yeah, we've been a long-standing player in the BFSI space for some time now.
We are among the top few initial players. Since 2009, we started our journey, and we did wonderfully well. We have multiple tabs with IITs, IIMs like I'm Ahmedabad, I'm Trichy, I'm Nagpur, I'm Kozhikode, I'm Mumbai, I'm Indore, IITs were IIT Delhi, IIT Madras, IIT Bombay, IIT Kanpur, and so on. On the university side, we have multiple universities like Symbiosis International University, D.Y. Patil, Manipal University, Amity University, Chandigarh University, Amrita University, so Parul University for that matter. So good partnerships, good learning, and good learning means a good word of mouth around. So we don't spend on TV ad or some ads like that, but we do good work, and education is a evergreen field.
Mr. Chokalingam, producers are telling me we're out of time, but one IPO out of the lot that you would advise an investor to subscribe to, and I will add a JK Energy to the list as well. 45 times is the subscription. A quick answer to that.
All risk-taking investors should apply for IPO and book profit on the listing day.
Okay, so all of the IPOs is what you're looking at. Thank you so much for that. I think, Mahima, that's interesting. In fact, thank you, Amit. Thank you, Mr. Chokalingam, as well for joining us on the show. All IPOs should be subscribed for listing gains.
For listing gains. Interesting takeaway coming in. But let's take a look as to how the markets are closing. Well, in the past 2 days, there's not been a much traction in the markets. They've not moved much. The Nifty 50 now closing around 0.1% lower, below the 25,200 mark. The Bank Nifty, however, has led the show today, up almost 0.4% as we speak, well above the 55,500 mark. Let's try to pull up the Nifty 50 heat map and see as to how and what stocks have buzzed in trade today. That includes likes of all these banking names, BFSI names, IndusInd Bank, Axis Bank, Bajaj Finserv, something like Maruti has also done pretty well in trade today. GSW Steel, Adani Enterprises also has come back into the green territory and bounced back to that 1.5% mark. But something that's been under pressure, Trent continues to be under pressure, down 2%. HUL, Ultratech, Nestle, HDFC Life, Asian Paints, so some consumption names seeing profit booking. Let's try to pull up the sectoral heat map and see as to how sectors have fared throughout the day. PSU Bank now closing 1% higher. Nifty Metal also closing 1% higher. Private banks seeing gains of about 0.6%, followed by Nifty Auto seeing gains of about 0.5%. In terms of what's seeing profit booking, Nifty FMCG down 0.2%, Nifty Realty down 0.9%, Nifty Defence also down by about 0.8%. Let's try to pull up the advanced decline ratio because that will give us a picture as to how the broader markets are looking like, and the chart has in fact widened by the day, and it's in the past hour especially, because now we have around 950 odd advances versus that of 1400 odd declines. So that ratio is almost more than 1.5:1 in the favor of bears, of course. Let's try to pull up the broader markets and see as to how mid-cap 150 and small-cap 250 is doing. The mid-cap 150 down by about 0.3%, the small-cap 250 down by about 0.5%, and closing at almost today's low point. Let's try to pull up the BSE 500 and see what are the counters that have done well and what are the counters that have not done well. Tata Investment up 10%, TCI up 6%, KIOCL, NLC, Voda Idea, some counters in the green. On the flip side, there's profit booking seen in Adani Total Gas, Zydus Wellness, Vedant Fashions, KRBL and Sammaan Capital, some counters that are down by about 4%. But with regards to what you should keep your eye out on today, post-market hours, what are the cues that you'll be watching out for? Well, Eye on the Globe includes your US Fed Chair Powell's speech. You will have to see as to what he has to say with regards to how the next leg of rate cuts will come in from. In terms of corporate actions, SMS Life Sciences will be trading ex-dividend. In terms of the demerger coming in, Shankara Building Products shareholders will receive shares in new entity and the ratio is 1:1. In terms of the board meeting, Piccadilly Agro Industries is going to hold a board meeting. So the commentary coming in or maybe some filing coming in will be something interesting to watch out for. Lastly, in terms of shares that will exit anchor lock-in includes Mangal Electricals, where around 4% anchor lock-in exit is expected. In terms of IPOs, like I said, primary markets is on a buzz this week. EPAC prefab IPO opening size is around 504 odd crores, of which 300 crores is fresh issue, and IPO band is there on your screen. Then we have BMW Ventures, IPO size around 231 crores and price band anywhere between 94 to 99. Both of these IPOs opening tomorrow, so keep your eye out on that. With that, we're completely out of time on this edition of India Market Close, but do stay tuned to NDTV Profit for more news and updates on the other side.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show. So viewers, despite recovering from the day's lows, benchmark indices ended in the red for the third consecutive session. The Nifty wrapped trading above 25,100 levels and the Sensex concluded just past 82,000 levels. Both the indices closed almost flat but with a negative bias. The Nifty index was largely uplifted by shares of frontline banks like Axis Bank, SBI and Kotak Mahindra Bank. In fact, most of the constituents of the Nifty Bank ended with the gains, with the index itself settling nearly 0.5% higher. Broader markets have underperformed the benchmarks, with both the small and mid-cap indices ending with higher cuts. The Nifty Small Cap 150 saw higher selling pressure as opposed to the mid-cap index. The sectoral picture also ended mixed, recording more losers than gainers. Nifty, FMCG, Realty and Defence were the top sectoral laggards. On the other hand, the PSU Bank, Metal and Auto indices lead the charge. Gold prices have scaled a fresh record peak and is on track to record its best year since 1979, with a gain of over 40% so far in 2025. So the precious metal has been driven by a combination of macroeconomic forces, including expectations of an extended Federal Reserve easing cycle and also a weakening US dollar. So analysts remain constructive on the outlook for gold, with some predicting that the price could actually climb towards $4,000 per ounce by mid-2026. Now on to a counter that was buzzing away in trade. KEC International has bagged new orders worth a whopping 3,243 crore rupees. So the new contracts are primarily for their transmission and distribution business, securing projects both domestically and also internationally. Now, among the significant wins are projects for 400 kV transmission lines in the United Arab Emirates. So the company has also landed new supply orders in the Americas, which include providing towers, hardware and also poles. Next up, we have Hindustan Construction Company. So it has secured contracts worth 2,566 crore rupees for phase 1 of the Patna Metro Rail project. Now, these contracts involve the construction of 10.67 kilometers of underground tunnels using tunnel boring machines and 6 new metro stations. So this is a significant addition to its order backlog, which already stood at 11,188 crore rupees as of June 2025. Goldman Sachs has upgraded its rating on Maruti Suzuki to buy from neutral, setting a new target price of 18,900 rupees, which is a significant increase from its previous target of 13,800 rupees. Now, this bullish outlook is driven by several key factors. The firm also anticipates a potential surge in demand for entry-level cars following recent GST cuts. So Maruti is re-entering the new model market after a 2.5-year hiatus with the launch of the Victoris SUV and the Evitara, a new electric vehicle. So this is actually bound to be a very key trigger for the growth. So the company is also well positioned to benefit from the upcoming auto demand cycle and also a low carbon dioxide risk profile compared to its competitors. Let's keep it going with the brokerage notes as well. So Nomura has reiterated its buy rating on Hyundai Motor, raising its target price of 2,846 rupees. So the brokerage firm's positive outlook is based on the company's strong growth prospects in India. Nomura also forecasts a 9% CAGR, which is a compound annual growth rate for India's auto volumes from 2025 to 2030, which is a period during which Hyundai may actually need to increase its production capacity to meet the rising demands. Next up, we have Jefferies. So Jefferies has initiated its buy rating on Patanjali Foods and also raised the target price to 695 rupees. So the brokerage anticipates a gradual recovery from the company's edible oil and food businesses throughout the fiscal year 2026 as market headwinds normalize. Next up, we have Motilal Oswal. So they are keeping its buy call on AU Small Finance Bank with a target price of 875 rupees. So the brokerage firm believes that earnings are set to pick up for the company in the second half. Loan growth also remains strong with a projected 24% CAGR till FY28. Deposits continue to flow and cost of funds may ease, helping NIM recover from Q3. So cost ratios are expected to stay in control. On to a note from CLSA now. So they have talked about Indian regulated power utilities. They've seen subdued returns year to date due to lower than expected demand from climate change related factors. So the brokerage sees an opportunity to buy select stocks. So the report highlights that India is the world's third largest power market and also forecasts a demand uptick in the second half of the current fiscal year. The brokerage firm also stated that nuclear power will be the next focus for the sector. Anand Rathi kicks off coverage on IMFA with a bullish buy rating and also a target of 1510 rupees. So growth is expected to be fueled by capacity expansion and rising steel demand. The company's value accretive diversification could add 300 crore rupees in annual revenue with over 8% of ferrochrome demand driven by industry and also India's appetite growing. So IMFA is well positioned for a strong run. Next up, we have Alchem Labs. So they have stepped up its cancer care game with a fresh launch that is Pertuzza, which is a biosimilar pertuzumab. Now, this injection is designed to treat HER2 positive breast cancer, which is a common aggressive form. So with the Pertuzza now available in India, Alchem aims to make advanced treatment more accessible and also affordable. We have Dr. Reddy's labs in focus now. So they've moved closer to the European market entry with a key regulatory nod. The European Medicines Agency gives a positive opinion on AVT03, which is a biosimilar of Prolia and also Xgeva. Now, Prolia treats osteoporosis while Xgeva helps manage bone complications from advanced cancer. Next up, we have Shilpa Medicare. So they've gotten an initial approval from the European Medicines Agency. Now, it covers the generic Rivarox Aban tablets. Now, this drug fights blood clots, deep vein thrombosis, and also stroke risk. So the European market for such medicines hit $2.5 billion. Now, the green light came from Shilpa's Dabaspet plant near Bengaluru. Now, it's the third prescription drug from this unit to win European approval. Now, this boosts Shilpa's export push in the generics. No big changes to forecast yet. Investors see it as a win for steady revenue from Europe. Premier Energies shines brighter on investor radar as Vendus initiates an ad rating with a target of 1100 rupees. So the company is a leading integrated solar module manufacturer and they're now ramping up its manufacturing capacity. So brokerage firm believes that with a demand-supply mismatch in solar cells and rising preference for Indian-made modules, Premier is well positioned to ride the clean energy wave. Jubilant Pharmova's board approved Arun Kumar Sharma as the Chief Financial Officer and also key managerial personnel. The decision came at today's meeting on September 23. It also followed a recommendation from the Nomination, Remuneration and Compensation Committee and also the Audit Committee. So Sharma, with over 30 years of experience in finance, steps in from October 1. India's auto sector has witnessed a historic surge in sales on the first day of Navratri, driven by the implementation of GST 2.0 reforms. So Maruti Suzuki, Hyundai and Tata Motors have reported record-breaking deliveries with over 50,000 units sold in a single day. Maruti Suzuki alone delivered over 25,000 vehicles with 80,000 customer inquiries recorded on the first day of Navratri. The company's senior executive officer, Partho Banerjee, described the response as phenomenal and also noted that demand for small cars has been especially strong. Hyundai Motor India reported around 11,000 dealer billings on the first day of Navratri, which is marking its best single-day performance in 5 years. So Tata Motors have delivered approximately 10,000 vehicles with over 25,000 inquiries received on the same day. So the used car market also saw a significant surge, with Cars24 reporting a 400% jump in the car deliveries on the first day of Navratri. The Ministry of Consumer Affairs has also received around 100 complaints from consumers across the country, alleging that several companies and shopkeepers are not passing the full benefits of the GST. So the government has urged the public to actively report instances where GST benefits are not being passed on by the retailers or the online platforms. So in response to the growing number of grievances, the ministry has formed a special team to actually monitor and also track these complaints submitted through the portal. The Reserve Bank of India is now considering a proposal that would allow lenders to remotely lock mobile phones of customers who default on their loans. So this move aims to reduce the bad loans and also strengthen the recovery mechanisms, particularly for small ticket loans below 1 lakh rupees, which have historically shown higher delinquency rates. So non-bank financiers have sought RBI approval for a device locking feature that would actually disable the core device functions but retain the access to emergency services, ensuring personal data remains secure and inaccessible to the lenders. To activate this feature, lenders would actually need an explicit consent from the borrowers as well. So the RBI had previously asked the lenders to disable this feature due to concerns over third-party loan providers misusing it to invade the customer privacy. However, regulatory structures nearly killed the market for mobile phones financing in the smaller towns. Next up, we have SpiceJet. So it has secured its second credit rating upgrade in a month, with Equity raising its long-term rating to BB. So Equity highlighted SpiceJet's diversified revenue streams and growing fleet capacity as key factors supporting its revenue profile in the near to medium term. The agency also noted that the recent settlement with Carliel Aviation partners with improved SpiceJet liquidity position by providing cash credits for future aircraft and engine maintenance. Union Minister Ashwini Vaishnav announces his switch to Chennai-based Zoho's office suite for documents, spreadsheets and also presentation. Now, this move promotes homegrown tech amid PM Modi's call for Indian products over foreign ones. So it ties into the government's self-reliance drive, especially with the GST Bachat Utsav starting September 22. Now, Zoho has already managed Meiti's email services since September 2023 and has also won a web browser challenge in March. So, Vaishnav has urged others to follow the suit. The step boosts the local IT firms and also cuts the reliance on global software. Future plans include Zoho's role at Startup Mahakumbh 2025. The Employees Provident Fund organization has released its provisional payroll data for July 2025. The data reveals a significant addition of over 21 lakh net members. Now, this marks a 5.55% growth in the net payroll additions compared to July 2024. Now, this indicates increased employment opportunities and also heightened awareness of the employee benefits. The 18 to 25 age group dominated the new subscriptions with 61.06% of the total new subscribers added in July 2025 belonging to this age bracket. So approximately 9.79 lakh new subscribers have enrolled with the EPFO during the month, with 5.98 lakh first-time job seekers have also signed up. According to the latest Purchasing Managers Index data, India's private sector growth has slowed down in September. So the HSBC India Manufacturing PMI has dropped to 58.5 in September, which is down from 59.3 in August. Similarly, the HSBC India Services PMI has declined to 61.6 compared to 62.9 in August. The HSBC India Composite PMI, which combines both the manufacturing and services sector, also witnessed a decline, falling to 61.9 in September from 63.2 in August. So despite the slowdown, the Indian private sector continues to expand, with business activity and also new orders showing robust growth. Anand Rathi Shares and Stockbrokers launches its IPO today. The book-built issue runs until September 25. Now it aims to raise 745 crore rupees through a fresh issue of 1.79 crore crore shares at 393 rupees each. Now, funds will fuel the long-term working capital needs. The firm also boasts diversified revenues from full-service broking and also growing margin trading finance. Now, it serves over 221,000 active clients. Risk include market slowdowns and also tight SEBI rules. Now, GMP stands at 30 to 70 rupees, which is hinting at a listing, listing gains. So, listing eyed for September 30 on BSE and NSE. Europratik Sales, a decorative laminates and also wall panels company, made its stock market debut today. It listed at a premium of 10.7% on the BSE and 10.2% on the NSE. The shares opened at 273.45 rupees on the BSE and 272.1 on the NSE compared to the issue price of 247 rupees. Now, the company's initial public offering was subscribed 1.41 times overall. So, Europratik Sales raised 451.3 crore rupees through its IPO, which consisted entirely of an offer for sale by the promoters. Now, the company will not receive any sort of proceeds from the IPO, as the objective was to provide an exit to the promoters and also list the company's equity shares on the stock exchange. NVIDIA is now set to progressively invest up to $100 billion in OpenAI as the company's partner to deploy at least 10 gigawatts of NVIDIA systems for the OpenAI's next generation AI infrastructure. The company will finalize the partnership and the details in the coming weeks. First gigawatt of NVIDIA systems to be deployed in 2H, that is the second half of 2026. Now, this comes on the back of NVIDIA investing $5 billion in Intel. NVIDIA shares have jumped nearly 4%, which is high on the back of the announcement. Amazon sued the New York State Public Employment Relations Board to block it from enforcing a new law that the online retailer considers an attempt to illegally regulate and also the private sector labor relations. Now, in a complaint filed in Brooklyn Federal Court, Amazon accused New York of engineering an unconstitutional power grab by letting the regulator known as PUBSERP, the National Labor Relations Board's primary authority, to address the union organizing, collective bargaining and also workplace disputes. India's rice reserves in government warehouses jumped over 14% year-on-year in September. Now, this massive stockpile is set to fuel higher exports. Traders across Asia watch closely as ample supplies keep the demand in check and also prices subdued. Bulging inventories exert downward pressure on the global rice prices. India's record level signal weak pricing ahead. Exporters eye opportunities amid the steady output. The surplus also eases food security fears but squeezes the margins. Overall, it points to a buyer's market for rice. Now, in a tit-for-tat escalation, India has extended its airspace ban on Pakistan Airlines and also the aircraft, including military flights, by another month until October 24. The fresh NOTAM issued on Monday mirrors Pakistan's recent extension. It also marks the sixth consecutive month of the reciprocal closures that began after the deadly Pahalgam terror attack in Kashmir on April 22nd, killing 26 people. So while foreign carriers can still overfly both the nations, Indian Airlines face massive detours on 800 weekly flights to Europe and beyond. The Karnataka High Court has granted interim relief to multiplexes and others who challenged the state government's order to cap the movie ticket prices at 200 rupees. The court has stayed the order, putting the price regulation on hold. The petitioners, including the Multiplex Association of India, have argued that the price cap was arbitrary and also would impact their businesses. So they claimed that the Karnataka Cinemas Regulation Act does not empower the government to fix the ticket prices. So senior advocate Mukul Rohtagi, representing the association, pointed out that a similar order was passed in 2017 as well, but was later withdrawn. He argued that multiplexes have invested heavily in creating cinema halls and also the price cap would actually restrict their ability to conduct the business. At least 7 people have died of electrocution in Kolkata as heavy rains left parts of the city heavily waterlogged, bringing traffic on road, train operations and daily life to a grinding halt amid Durga Puja buzz. Airlines have also issued advisory and flight operations were severely affected, with more than 30 flights suspended. Now, Hong Kong has shut down ahead of the super typhoon Ragasa, the world's most powerful tropical cyclone this year, with authorities urging people to stay at home. As you can see on your screens right now, the visuals are terrific. While most passenger flights were due, to be suspended until Thursday, people have piled into supermarkets, leaving little on the shelves as panic buying set in, and residents stocked up on the necessities for fear that shops could be closed for 2 days. When I pass away, Assam should sing this song. Zubeen Garg had stated about Mayabini when it debuted in the 2001 Assamese film Dag. And with tears in their eyes, his fans sang his beloved songs as they said their final goodbye. His cremation took place in Kamarkuchi on the outskirts of Guwahati. Hundreds of thousands of fans have gathered to pay their last respects to the singer. Assam declared 3 days of mourning. Aryan Khan's latest Netflix series is under fire for a scene where Ranbir Kapoor vapes an e-cigarette without a disclaimer. Critics say that it glamorizes a banned substance, violating India's 2019 E-Cigarette Prohibition Act. The National Human Rights Commission has also issued notices to the government and also Mumbai Police demanding an FIR against Ranbir, Red Chillies Entertainment and Netflix. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Benchmarks end flat after erasing losses from intraday lows, with Nifty closing below the 25,200 mark. Sectoral indices close mixed, with the Nifty PSU as the top gainer. Rupee settles at a new closing low against the US dollar, ends 44 paise below Monday's closing at 88.76 after falling to a fresh low of 88.8 a dollar. 4 IPOs open for subscription today, with Seshasai Tech being the largest size at 813 crore rupees, followed by Anand Rathi's share and stock broking with an issue size of 745 crore rupees. And it's a bumper start to the festive season for auto companies, as small car bookings at Maruti see a 50% surge, while Hyundai records the highest single-day dealer billings in 5 years. Both the companies see high walk-ins. Consumer Affairs Ministry receives over 100 complaints on the first day of GST 2.0 rollout, most about GST benefits not being passed on. Sources say the ministry has deployed a team to monitor and verify complaints. As complaints mount that GST 2.0 is not delivering benefits to consumers, officials are awaiting detailed field reports on 54 product categories, and sources say are avoiding any knee-jerk responses so as to allow the new rates to settle. Heavy rains paralyzed Kolkata ahead of Durga Puja, leaving pandals submerged. 7 people have died so far in rain-related incidents, and 100 flights have been affected. The NDTV network is gearing up for an interesting new launch. More details ahead on the show. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. First up, let's take a look at our top focus this evening and how the markets fared today. We saw Nifty 50 and Sensex ending on a mixed note after erasing most losses from intraday lows. Nifty was in the red for the third consecutive day, dragged by Tech Mahindra and Trent. On the sectoral front, it was a mixed bag as well. PSU Bank emerging as the top gainer, while FMCG emerged as the worst performing index. Puneet now joining in with the wrap of all of the market action from today. Puneet, over to you.
Well, it was a day that saw pressure across the board, but the Nifty 50 did end at 25,185, just a tad below 25,200 mark. It is, though, above the 10-day EMA levels of 25,150 levels, and that will be something that the bulls will be happy about going into tomorrow's session. Today, we saw the Nifty losing for the third consecutive day. That was led by stocks such as Tech Mahindra as well as Trent, with the IT pack largely seeing some pressure again today and a lack of revival, to say the least. Amongst the mid-cap and the small-cap index, that was also subdued in the trading session today. The mid-cap ended the red, and that was led and dragged by some key stocks like Bayer Crop Sciences as well as Emphasis. Again, a trajectory where you can see the lack of revival in the IT names, despite being under pressure yesterday, largely based on the hike in fee for the H-1B visas by the US government. Apart from that, the small caps as well continue to be in the red. Stocks like Sammaan Capital as well as Vedant Fashion were the top losers in that particular index. But within the sectoral heat map, if you can say the least, you saw the continuation of trends from the last week as well as yesterday as well. The PSU emerged as the top sectoral gainer. It is up almost 6% in the last month versus almost a flat returns for the Nifty Bank, continuing to show strength in the index. That was led by stocks like Canara Bank as well as SBI. We also had a positive note by CLSA on SBI, where its market cap could be $100 billion in just the next 1 year. They had a similar note for Bajaj Finance as well on that same metric. So continue to see buying in PSU banking index. We've also seen the FMCG be the top sectoral losers. That was led by GCPL, with that's Godrej Consumers, as well as Radico Khaitan, while the metal continued to gain for the fourth consecutive session in a row. and we're seeing strong strength with built-in stocks in that particular index as well. The banks, the autos index snapped its 2-day losing streak today. Autos were in focus, based on brokerage firms like Goldman Sachs that actually upgraded stocks like Maruti, but seeing some sell-off today as well. Going into tomorrow's session, we will be looking at a 25,150 level as a key support, and that would be a starting point for the market.
Thanks for that, Puneet. And we also spoke to N. Jayakumar, the MD and Group CEO of Prime Securities, and he gave us his insights on how to navigate market uncertainty and find top investment opportunities. Let's listen in.
Actually, the good news is that a lot of the bad news is already in the price. A, our markets haven't been performing vis-a-vis their global peers. B, we've had the worst, I feel, of tariffs and tariff-related rhetoric, tariff-related bombast, which has been sort of played out. We've had sort of sobering noises in terms of people wanting to now talk about a deal that could happen. So we've gone through the full circle. We've had earnings disappointments, and now we have a situation where corporate balance sheets are as deleveraged as they've ever been. The private sector capex, in a sense, the greenfield capex is also beginning to start off as one of the things that was not there over the last several years. It was largely the public sector that was carrying the way forward. Keeping all this in mind, inflation is under control. Liquidity is very good. RBI is going all out to provide ample and more liquidity to the banking system. And in that context, I mean, really, I would say that it's a confluence of multiple factors, and especially the global tariff play out that's happened over the last several months. And I think paradoxically, providentially, whichever way you look at it, we could end up with one of the best deals.
Meanwhile, 4 companies have opened their initial public offerings for subscription. From financial services to technology and education, a diverse group of firms are looking to raise capital. Let's get more details from my colleague Anushi, who joins us with a comprehensive look at each of these offerings. Anushi, over to you.
Okay, so I'll start off with Anand Rathi first. Now, it is a well-established broking industry that we are looking at. So that's the first one on radar. Now, price band about 393 to 414. And this is the IPO size of 745 crore. A complete fresh issue is what we are seeing. They'll be using this funds for working capital requirements. Now, key strengths of this is firstly, they have diversified revenue streams. Along with that, the MTF business is aiding growth. However, on the weakness side, any impact in terms of market volatility will impact the operations of the business. Second one in focus is Seshahi Tech now. Now, this is with the IPO size of around 813 crore that we are looking at, which comprises of a fresh issue of 480 crore. Key strengths here is that it has a leadership positions in the payment solution industry. However, BFSI industry contributes around 81% of its total revenue. In fact, top 10 customers also accounting for about 66% of their total revenue is what we are seeing. The third one in radar is Jaro Institute of Technology. Now, this has come out with an IPO size of 450 crore, which comprises of an offer for sale of 280 crore, and the rest is fresh issue of around 170 crore. They'll be utilizing these funds towards marketing and clearing debt. Key strength it has a market-leading positioning in this online higher education segment that we are looking at, but it derives 81.4% of its revenue through its top 10 customers. So concentration risk is what we are seeing. The last one on radar is Solar World Energy. Now, this is within IPO size of 490 crore with a fresh issue of 450 crore is what we are seeing. They'll be utilizing the funds towards investment in their subsidiary for higher benefits over there. Key strength is that it has a robust order book, with order book standing at 2,500 crore. And it operates on an asset-light model. But on to the weaknesses, the top 5 to 10 customers, if we look at, they contribute to 97 to 99% of their total revenue. So there is a concentration risk that we are seeing for this particular company. So these are the 4 IPOs which are in focus today, opening for subscription.
Thanks, Anushi, but stay with us because we also saw the Adani Group stock surge in trade after SEBI's clean chit on the Hindenburg allegations. We saw the market cap of the companies has also increased significantly since February 2023. So give us all the details on that.
Well, it's a big power through that we are looking for Adani Group set of companies. In fact, if we look at what has happened since SEBI's clean sheet on Hindenburg allegations, the stocks have seen a strong rally, and this is something that we've seen across the board taking place. In fact, if we just take February 23 in consideration, where the stocks are at their lowest, from there on we have seen significant uptick in terms of where the market cap addition is. In fact, 8.7 lakh crore is the kind of size that we are looking at, just in terms of how the market cap has increased in these last 2 years period itself. And this was led majorly by Adani Enterprises, Adani Power and Adani Ports. In fact, this is reflected with strong investor confidence also coming through, because if we look at the returns also from the February 23 lows, the stocks have seen significant upside from those levels as well. If we just take the first one in consideration, Adani Power up over 6 times from February 23 levels, while Adani Ports, Adani Green Energy, Adani Enterprises have seen their stocks more than doubling to what those levels had been. Ambuja Cements also clocked in about 80% of an uptick in terms of that. In terms of how the market cap addition has been since SEBI's clean sheet on September of 18, we are looking at almost an addition of over 1.78 lakh crore. Now, this is a significant addition in terms of market cap just in these last few trading sessions itself. Again, if you look at the upside to this, this was majorly led by Adani Power, Adani Green Energy and Adani Enterprises, which have remained in focus. So this is the overall picture that we've seen taking place after what has happened after this Hindenburg saga, how SEBI has now given a clean sheet and how the market cap has increased significantly, showcasing strong investor confidence remaining for this group set of companies.
Thanks so much for that, Anushri. And let's move on to what's happening on the GST 2.0 front. India rolled out the GST 2.0 with the promise of cheaper goods and fair prices. But the ground reality is telling a different story. Sources say nearly 100 complaints were filed on the very first day, most from consumers alleging that businesses are failing to pass on the benefits. The government insists relief will reach shoppers, but for now, the savings remain out of sight. My colleague Danish now joining us with all of the details.
NDTV Profit has exclusively learned from sources in the Ministry of Consumer Affairs that on the first day of new GST rates, there were around 100 complaints that were received across the country, and these complaints were being filed on a specific portal. And now the government has clearly said that they will ensure that the proper GST benefits are rolled on and passed on to the consumers. And a special team has been formed by the Ministry of Consumer Affairs, which is tracking a particular portal. And on this portal, those complaints are also being forwarded to the company. So all in all, if we see, the government has ensured that the GST benefit is fully passed on to the consumers. And just in case if there's any company which is not passing it on, or maybe normal local shopkeepers that are not passing it on, they are telling the public to go on that website, log in and register a complaint. And moreover, whichever company or whichever shopkeeper is found guilty of not passing on the full GST benefits to its consumers, then the government is very likely to take a class action step against these companies.
Right, thanks Danish, because as complaints pile up over GST 2.0 not benefiting consumers, the government says it is closely monitoring whether businesses are actually passing on the gains. Sources say that officials are waiting for detailed field inputs on 54 product categories that are expected by September 28th. But for more on this, let me go across to my colleague Rishabh, who has all of the details. Rishabh, what are you hearing from your sources?
We've had a lot of complaints over the past 24 hours on certain products in certain Kirana stores, especially not passing on the GST benefits. This is something that was brought to Consumer Affairs Minister Prahlad Joshi's notice as well. He said the government is looking into it. Now today, what we have picked up is the fact that you have government sources that are actively tracking the status of whether these GST benefits are actually making their way to the end consumers. What we're also looking at is the fact that the field formations that CBIC had put in place, especially with regards to the 54 product categories that it has specified that include anywhere from toothpastes to ice creams. All of those inputs will start coming in starting September 28th, and that is when the government is waiting for in terms of more solid on-ground inputs coming in on whether these benefits are actually being passed on to consumers or not. What we're also picking up is the fact that the government is very cognizant of the fact that you cannot have a knee-jerk reaction to such a reform. It takes time to sort of settle in, and these are very heavy reforms that have been brought in by the government, so they are very cognizant of that fact as well. And the government has also made it clear that these GST reforms might not be an immediate uniform story of happiness being passed on to the consumers. There will be some roadblocks, there will be some struggles, but eventually all of these benefits will make their way to the end consumer. So that is what we're picking up in terms of these GST 2.0 benefits actually translating into lower prices for on-ground customers.
Thanks for that, Rishabh. And at the Asokham GST conclave, CBIC member Shashank Priya stated that there remains a strong appetite for GST reforms with the ongoing efforts underway. He also announced that provisional GST refunds for low-risk categories will be implemented starting October.
When we made a study of 90%, we have already a provision for zero-rated supplies that 90% of the refund claim will be given upfront within 7 days of a complete application form, but it was not happening. For various reasons, officers were being very cautious. So, and as I mentioned now, GSTN being what it is, with the kind of data we have, we are able to harness it to say, okay, we will shift to the next step. We will now make use of the system to categorize which is low risk, which is high risk, and low risk without any intervention, without any interference of officers, it will be credited to their account. So that's the next step that we are doing, and this we are going to bring about from 1st of October, from after starting of the next month. And the new thing we are doing is on inverted duty structure again. We have proposed that 90% refund, like for exports, will be given upfront, and there it is not in the rules, so it will take time. In the next budget only we can change the law to incorporate it. But the central government has taken a decision that we need to facilitate trade, and therefore we are proposing to issue an instruction and make this applicable from next month itself. So we are working on that instruction, and hopefully it should be out soon.
Now, NDTV Profit's checks have revealed a shift in retail sales in Mumbai, with manufacturers passing recent GST cuts to retailers through quantity schemes over the past 8 to 10 days. For instance, an item that was previously priced at 123 rupees, including GST and retailer margin, is now offered to retailers at 110, reflecting the lower GST while maintaining margins. However, no mechanisms exist to ensure small retailers pass these savings to consumers. Many continue selling at old printed MRPs at updated packaging with revised MRPs, or increased grammage is only expected by mid-October. Our Mumbai check shows some consumer awareness of rate cuts, but most are still paying the earlier prices. But with the rollout of GST 2.0, auto companies are witnessing a significant surge in bookings, with small car bookings up nearly 50%. This boost directly benefits Maruti and Hyundai, and my colleague Danish is joining us with all of the details.
Well, it was a blockbuster first day of Navratri for a few auto companies. Tata Motors has recently announced that on the first day of Navratri, they delivered 10,000 cars and they received 25,000 inquiries. As far as Maruti is concerned, Maruti delivered somewhere around 30,000 cars on the first day of Navratri. And since 18th of September, that's when Maruti had announced that they will be passing on the GST cuts to its consumers. So from that day itself until 22nd September, the company has received around 80,000 inquiries for new cars. And as far as Hyundai is concerned, Hyundai has done dealer billing of 11,000 dealer billings yesterday, which clearly means that Hyundai is also seeing a huge demand for its car, and hence a lot of dealer billing has happened. But overall, if we see since a very long time, from the past few months, we were seeing a slowdown PVs, especially in small cars. But as per Maruti, there has been a 50% jump in inquiries for small cars. So all in all, if we see, the first day of Navratri has been really blockbuster, and for the remaining 8 days, the auto industry is very positive and very confident of continuing with such great numbers.
Thanks, Danish, for that. And clearly, this festive atmosphere has arrived at car showrooms across the country, with the recent GST cut bringing what some are calling an early Diwali. The impact is immediate, like we have been reporting. Car sales have reportedly doubled since yesterday. But for more on the scene, let me go live to NDTV's Sam Daniel, who brought us this report from a showroom in Chennai.
It's a surge in demand for new cars since yesterday, the day the new GST structure came into force. In fact, entry-level cars have become a lot cheaper now. From the earlier 28%, it's now 18%. Even SUVs and luxury cars have become cheaper by 5%. From the earlier 45%, now it's 40%. We come to you from the Kia Capital showroom in Chennai's Adyar. And joining us now, Mr. Mohsin Ahmad, to give us a sense of the kind of surge in demand for new cars they witness in the city. Thank you very much.
Thank you, sir.
Give us a sense of the rise in demand now.
So the sales has gone up by almost like 2x, we could say that. So the people were actually waiting for this. This is a huge, basically the difference that has come up actually for the first time buyers who were like actually looking out for the car to make out a purchase actually.
And moving on, we spoke with Zoho CEO Mani Vembu, who believes that India's digital ecosystem is at a crucial turning point. While speaking to me earlier today, he emphasized that building software domestically will fast-track innovation and added that this is crucial as uncertainty around US H-1B visas encourages talent to stay in India. He also posed a key question. Are engineers ready to commit to Indian startups and compete on the global stage? Let's listen in. We're hearing from the Prime Minister's direct call for every Indian household and shop to embrace Swadeshi products. And right after that, we saw Minister Ashwini Vaishnav making headlines by ditching global apps for Zoho's suite. What does this shift mean for homegrown tech brands like yours? Symbolic gesture or a turning point in India's digital ecosystem, you would say?
So it's definitely going to be a turning point in India's digital ecosystem. And we are seeing this happening, like, right, say, in different parts of the world where, like, right, say, the data sovereignty is becoming a critical, important equation in terms of choosing a tech vendor. So, with that, given that, so we have been building all the software from India, so the platforms, everything, right? So everything is being built in India, and we look at it as a turning point for India. So overall, right, say our tech landscape and the innovations that is going to come up. So we are looking at this as a turning point for sure.
Just as India is taking pride in Swadeshi tech, we're also seeing these comments especially coming at a time, actually a day after that the US sharply raised H-1B visa fees, putting fresh obstacles before skilled Indian talent abroad. Is this a nudge for young engineers to build careers and products at home, or do global opportunities remain vital for India's tech progress? What do you say?
In my view, personally, I feel it's a good sign because a lot of talent is going to stay in India. So that means we are going to build more stuff from India. And with the population we have, I think we need indigenous solution because some of the solutions have to be also unique. So we can't just use some solution that is built somewhere else for our own problems. So our own infrastructure problems and our own, a lot of different problems are very unique to us because of the population and the density of the population. So that means we are going to see a lot of innovation that is coming out of India, like how UPI has happened. So, right, say that kind of innovation, I think, will accelerate now with this move.
And before we slip into a break, something is brewing at NDTV as the network is getting ready for a blockbuster reveal. It's about to start a new chapter in the lifestyle segment. Stay tuned as the curtain lifts tonight at 8 p.m. this evening.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Hello and welcome to NDTV Profit. A very good morning to all the viewers. You're watching Know Your Company, that is KYC. I'm Hiral Dadia, and with me is Mahima Vachhrajani. Good morning, Mahima. Interesting company that we're talking about today, which will actually see benefits of GST also trickling in. Yes, we're talking about ShopperStop. Let's first understand why are we talking to ShopperStop today. First up, to understand the GST benefits and the kind of demand surge that probably could be coming in as well for the company, and what's that demand outlook looking like. On number two, on the back of GST benefits, is there a margin improvement trajectory that we should be watching out for from here on? So these are the two main questions that we're looking at, and others I think Mahima will also take us through.
Right, so the aspect that I would be looking at would be competitive intensity, because the competition in this particular space is rising, especially big players coming in with big expansion plans also on cards. And as to what competitive edge strategy that ShopperStop is adopting to distinguish them from the big players that are already there or coming in the markets. The other part is the debt reduction plans. What are they looking like, both in terms of long-term and short-term borrowing? And lastly, in terms of store expansion, what are the plans going in? How is that going to pan out in terms of being capex heavy or asset light? And what is the kind of course, capex amount that they'll be watching out also for?
Absolutely. So these are the key questions that we are looking at, but let's quickly understand about what ShopperStop does. I know all of us are aware because people and all of us are used to shopping at a ShopperStop. But firstly, established in 1991, it's a retailer of fashion and beauty products as well. And clearly, it's got international and national luxury prestige with premium brands that are being sold at their stores. If you see in terms of the segments that they cater to, from shoes to watches, bags, beauty, home decor, a one-stop solution that you're looking at in terms of where the various segments go.
Right. So even in terms of product portfolio, they've got a basket, a variety of portfolio under their umbrella that includes your fashion apparel, accessories, beauty and skincare, and home essentials. With regards to where the overall network stands for ShopperStop, around 299 stores across India is what they're holding right now. 800 plus brands they're catering to in their shops. 70 plus cities is where their presence also stands right now. And right now, the overall area that they cater to is around 4.5 million square feet in terms of where all of their stores stand, be it Intune, be it their departmental stores or whatever. All of these 299 stores is filled into this area of 4.5 million.
And I think what's interesting over here is in the previous quarter itself, I don't think so they did any store addition. And from here on, I think what that expansion plan looks like is going to be key. From 299, what's that aim that they look at? So that's going to be an interesting point to watch out for. But let's quickly understand their strategic pillars now. Now, First Citizen, this is very interesting because the First Citizen members itself contribute nearly 80 to 85% of the sales. And this is actually underscoring the continued loyalty-led strength in terms of where ShopperStop goes. Then you're talking about beauty, the private brands that they hold, and the infant wear. But First Citizen, absolutely key over here that we should be watching out for. So that's with regards to what the company is all about is what we're talking of. But let's quickly look at the rating parameters from here on. We will be looking at the income statement check, balance sheet, return ratios, cash flows. Then we will also look at the shareholding pattern of the company, the street credentials, the street coverage, and the valuation picture. To be noted that the valuation is going to look slightly skewed, taking into consideration some bit of inconsistencies that we've seen. So the price to earnings is what we are considering over here, but we will come back to that as well. But let's first start with the income statement. Now, overall, if you see, it's a very interesting story because it shows a strong recovery, and this is starting from FY22. If you see the numbers from 24-25, the 3-year compounded growth is around 22% in terms of the gross revenues. Margins have remained at that 15 to 17% bracket, though it's seen a dip in the last year. And if you talk about the net profit as well, that saw a sharp decline in FY25. But the transition from loss to profit is the key for a Shoppers Stop, because in FY21 on the back of COVID, it saw a sharp decline, a strong rebound that did come in FY22-23, and the sustainability is what we are seeing between FY24 to 25. So that's the overall picture that you're talking about. And if you talk about just the previous quarter, that's the first quarter, it's delivered a strong top line performance, but it was mainly aided by sustained premiumization trends is what we saw, and the customer engagement was very much stronger. Now, there were no new departmental stores that the company actually added during this quarter. If you talk about their average ticket value as well, which is the transaction cost, that grew by nearly 6% on a year-on-year basis. And if you talk about the selling price, that saw an increase of around 3%, and that is actually reflecting a healthy shift when you talk about customer behavior and the category mix that you can talk about. In fact, the company's value fashion vertical, Intune, that also delivered some bit of a robust momentum, with sales actually doubling on a year-on-year basis, and 4 new stores were added on that front, which is actually probably reaffirming its, relevance in a value-conscious consumer environment.
Absolutely.
So that's what you're talking about from an income statement, and that's why a thumbs up right now.
And that's what, is going to benefit them in terms of where the GST stands, because below that 2,500 mark for apparel, the GST rate has come down and set to benefit a counter like Shoppers Stop. But with regards to where balance sheet is concerned, in terms of where, of course, the overall equity and other equity stands, it's been stable. The other equity profit plus reserves growth has been growing, mostly because it's a cash business. But with regards to where borrowing stand, there have been, an increasing trend in terms of where both the long-term plus short-term borrowing stands. This does not include the lease payments, but from a 126 crore in FY23 to a 340 crore is what the increase in borrowing has been like. But in comparison to that, something like a cash in bank has, come down in terms of where the trajectory stands, from a 31 crore in FY23 to almost 14 crore in FY25. So the question really here is whether they'll be able to reduce their debt position in the near future. Are they actually planning to reduce their debt position? And this all depends on how they're also planning to expand their store. If they're planning to borrow more money, then the company will see an increase in debt also. And because right now the cash is not enough to pay off the debts that's there on the balance sheet, we've taken a conservative approach here and given it a thumbs down.
Right, now, let's actually link this to the cash flow. Now, if you see the most recent years, that's FY23, 24 and 25, the cash flow from operating activities, that has remained consistently positive, and that actually has become the primary source of cash for the company as well. While there might be slight fluctuations, the overall trend is one of stability and growth, which is a positive sign for investors. It also shows that the company's increased revenue is actually translating into actual cash flow and not just accounting profits. In fact, it has transitioned from a cash burning entity during the pandemic to a business that is consistently generating positive cash flow from its operations. In fact, this positive cash flow from operating activities is being strategically deployed to fund capex for future growth, which was actually negative, earlier, and to pay down the debt and strengthen the balance sheet. Now, the debt becomes a concern over here, as Mahima was also pointing out, but this is a positive factor right now that we are considering, so hence a thumbs up.
Right. Okay. So the next one is the return ratios that we're looking at now. If we take a look at the ROC numbers, the trajectory has been declining. There was a point of time in FY23 where it reached to that 15% mark, but since then the return on capital employed has been coming down from a 15% to that 12% and 8% in FY25. So from here on, whether the return on capital employed will increase is the question right now, and hence we're again, being conservative here and given it a neutral rating right now.
Right. Let's look at the shareholding pattern. Slightly neutral, because one aspect is that the promoter stake has remained stable. In fact, over the last 3 years, it's consistently in that range of 65.5 to around 65.6 kind of range. Institutional investors is a pretty mixed signal that you're picking up, because the mutual fund holding has actually shown a general upward trend, although there have been some recent fluctuations. The recent quarters have seen a slight decline in the mutual fund holding, but this is mainly probably a result of profit booking after the stock's significant run-up, or a shift in investment strategy, or even the profitability decline that we've seen that could have impacted. FIs, though, have shown a very volatile trend, and that is what you can see over here as well. From a 7.43%, it's actually come down to 3.09 now. So there is a notable decline in their stake, and hence, again, a very neutral rating on this one.
All right, the next one is Street Cred. Now here, in the past 1 year, the stock has not done much. In fact, has given a negative return of 35% to its shareholder. Year to date also a negative 8% return. But for the past 5 years, the stock has seen a growth of around 252%. So because the 5-year performance has been decent, considering the 1-year performance, we've seen the underperformance of markets itself, we've given it a neutral rating for now.
Okay, let's look at the valuations over here. It's going to be interesting to see the valuations, because it looks really exorbitant if you see the trailing 12-month right now. It is the most expensive as compared to peers as well, but this is mainly on the back of that volatility, that inconsistency that we are seeing in terms of where the earnings go. I mean, the EPS is the key over here, and that's what is reflected in the price to earnings ratio as well. So hence a thumbs down here on this one.
All right, the last one is the guidance and analyst recommendations. There are right now 4 buy calls, 2 sell calls and 2 hold calls. So it's even Stevens when it comes to your buy, sell and hold, an average upside of around 6.2%. In terms of where management commentary is concerned, they've said that premiumization, loyalty and customer experience will be the central to the growth strategy. Premiumization to improve share to almost 70% by FY26. Intune and Beauty remains their key growth engines, and focus on larger, more premium departmental stores is something that they're aiming at from here on. And lastly, ongoing cost optimization, working capital reduction and omni-channel integration will support profitability from here on. So this is the management commentary coming in quite positive in nature, but since the analyst recommendations as per Bloomberg do not suggest a significant upside potential in terms of where the return stands, we've given it a neutral rating.
So that's a neutral one on that one. Let's quickly look at the overall ratings, where it stands now, because that is going to be key. 2, that's income statement and cash flow, is a thumbs up. You have a balance sheet, which is a thumbs down. You have the return ratios, which is again a neutral. Shareholding, street credentials, street coverage, again a neutral. And your valuations are a thumbs down on the back of the way it is, expensive, and on the back of which a 4 on 8 is the KYC rating that NDTV Profit has given a Shopper Stop. But on the back of this, let's get in our guest. Kavindra Mishra, Managing Director and CEO at Shopper Stop, joins in. Kavindra, good morning and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Let's start off with GST, the benefits that you're seeing from here on, and the kind of demand surge that is expected, because you have the festive season that has already come in. Your auto dealers are already talking about huge numbers. Is that the situation at a Shopper Stop outlet as well?
So I think the GST Bachat Utsav, which started from yesterday, obviously it's only 1 day. But to give you a sense, the markets have been quite good. So we had a very good July and August. We have seen a much better tracking in terms of the like-for-like for our stores over the last 2 months, and we feel that with the coming up of the GST Utsav, and it's only 1 day, but we saw some very good signs yesterday in terms of the footfalls in the store. So we believe that we should all have a bumper Q3 and a festive and H2 going forward. And the demand has been quite good, by the way, in fashion and apparel lifestyle space. It has not gone down. It has been very positive for us for the last 2 months.
Right. Mr. Mishra, hi, Mahima also joining in. Just want to understand with regards to the kind of demand uptick that you're expecting because of this GST 2.0 and Bachat Utsav and festivities also kicking in. Can you give us a rough idea as to how much of a growth are you expecting from the last year's base?
So, Q1 for us was around 6% like for like. We should be a high single digit in Q2, and it should bump up from there. Exact numbers, it's very difficult to make an estimate, but I think it should be a higher single or a low double digit going forward. That's what my sense is.
Okay. With regards to the kind of margin trajectory that you've seen so far, just want to understand that because of GST 2.0 coming in, of course, this is on apparel that is below that 2,500 mark for you. My first question to that is that how much of your portfolio is covered under that? And secondly, if this is a large chunk of your portfolio, do you think from here on, for you, you'll of course be passing on everything to the customer, but overall in terms of margin trajectory, any improvement that you're expecting from here on?
So if I look at our portfolio, see, out of 100, if 100 is the pie, 40% of our business comes through non-apparel, which is basically not touched with the GST changes. If I talk about the apparel part of it, the 60% part of it, around 15% of that is anyway lower than 1,000. So that also doesn't get touched because that primarily are private brands and some of the categories which we have. For us, we feel that overall, while it will be margin accretive, few of the brands will be increasing their prices because the MRP goes more than 2,500. Few of the brands are obviously reducing it as well as us. For example, for our brands, we are also reducing the MRPs and passing on the benefit to the consumer. I think it will be net very, 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 it will be neutral in that sense, but the demand will pick up.
Okay. Kavinder, this takes me to my next question. You spoke about the way the portfolio is split right now. Do you see a shift happening on the back of higher disposable income in the hands of the people to the premium category? And if that happens, any margin benefits that could start coming in? And not only for a Shoppers Stop, is that the trend that could emerge from this?
So I think it's a great question. So what we are experiencing is that, and we have been talking about this quarter on quarter in our commentary, is that we are seeing premiumization really take an upswing, right? And premiumization is driven by categories. So categories like watches, for example, or fragrances or higher priced apparel are doing really well. So when I say that 6% is our like for Q1, our premium category is actually grew by 9%, and which is helping us in taking the whole pie forward. What happens is when you start selling more premium merchandise, the return on the space is much higher because the throughputs from the stores are much higher. So we typically see that premium to a non-premium, the upsurge in our GMROFs or our gross margins are around 1.3x. And we see that as we move in this journey going forward, we will see this interest, this coming in. We also see that besides apparel, I think there are certain categories like watches or fragrances or in beauty which are seeing a very, very positive surge. And as a strategy, non-apparel is something which differentiates us from a lot of our competition, and that's something which we keep on driving it. And we are seeing the same. And when you speak to our peers across the industry, we see that premiumization is a big trend and will continue to be very, very strong in that.
Mr. Mishra, with regards to the debt that is there on your balance sheet right now, just want to get a sense in terms of any reduction that you're planning this financial year, because you might have certain plans for store expansion as well, and that will also require some kind of funding. What's the overall view here?
So our view is very simple. This year we have decided to ensure that all the new openings are going to happen through internal accruals, and I think we are quite we have planned well for it. And my sense is we will also be paring down our debt. So this would be a year where you will see the debt coming down and all the new openings or renovations. And we are actually renovating quite a few of our marquee stores. We see that happening through internal accruals only.
Kavinder, this takes me to my next question when you talk about renovations of marquee stores as well. A lot of your stores, I would say in Bombay, for example, Bandra, your flagship store, the size has come down, right? What is the strategy on that front? What is the rationale where you're reducing the the area in terms of where Shoppers Stop was existent, And a lot of your brands also are coming down then. So is there a strategy with regards to focusing on particular brands, maybe increasing your sales per square feet? What is that going to look like? And how does it translate into accruals for the business then?
So I would take the example of Inorbit Malad, which is our flagship store. It used to be close to 1.3 lakh square foot in terms of space. We reduced it to around 70,000. We have just opened the renovated store. You would be happy to know that there is no reduction in revenue. In fact, we will be doing better numbers than when we had a larger store. So what we are seeing is you need to redefine your categories. You also need to reduce the number of brands, because as you premiumize, you don't need to carry so many brands. In fact, in our stores, what we are also doing is we are now creating corners for experience. And that's something, again, we talk about a lot in our commentary and actually do on the ground. So there's a kids play area, there is a personal shopper lounge. There are, not in Malad, but we also have coffee shops in our stores, because we believe that that's the kind of experience you need to give to our customers. The idea behind is that you need to right size your stores, and you need to ensure that the stores you need to keep lesser brands, but give brands a larger space to express themselves well. So that is one part of it. Having said that, in our newer stores, so in between we were opening stores around 20-25,000 square feet. In those cases, we have decided that we will increase the size, and going forward, the new stores which we are opening would be closer to a 40,000, which allows us to express the premiumization and the customer experience accordingly.
Okay, so Kavindra, what's the impact it would have on your average transaction value or your average selling price? And anything with regards to a change with your loyalty program? Because if I'm not mistaken, First Citizen has always contributed nearly 85%. So anything that changes on this front, taking your strategy with regards to stores into consideration?
Yeah, I think there are two impacts. One is, when you premiumize, you are able to drive your ATVs higher. So what we are seeing is, over the last quarter and maybe last 12 quarters, we have seen an increase in our average transaction value, which is very powerful, because, and this is not only driven by increasing the MRP of the product, but we are also able to maintain the items per transaction, which shows a very healthy connection with our customers. That's one. Second, if we talk about our Black Card, or we talk about our loyalty program, I think we are on a very, very strong trajectory there. In fact, when we spoke about Q1 in the last call, we said that Q1 is amongst the best ever quarters for us in terms of the Black Card contribution or the loyalty contribution. I'm happy to share that I think the numbers are only looking up north. But I think the key is that while we are getting a loyalty customers, we are getting a lot of new walk-ins into our stores. So we have been able to increase the funnel by which we are operating. So a lot of times people have spoken to us that, is the departmental store, is that a concept going forward or not? We used to have a lot of challenges in customer entry. We were flattish in Q1, but Q2 sees a very strong mid-single digit like-for-like customer entry increases. So if your funnel increases and you are able to drive more customers to your store, and then through operational excellence and through your loyalty program and your premiumization, you are able to drive the conversion. I think that's something which is working out well for us, and we see that, and we see that we'll keep on doubling down on that piece. That's a very strong piece of execution we are doing as we speak now.
Mr. Mishra, we've talked about the brick and mortar model that you already have. How's the online sales looking like? Is that the part of your portfolio that's seeing some kind of increase, and what are the trends that you're observing there in terms of premiumization as well?
So, I mean, two things. The customer, so we want to be the most premium omni-channel player in the country in the departmental store format. And what we are seeing is that the way we are able to drive higher throughputs and premium brands on our offline thing is the same way we are seeing on our app as well. It would be, in fact, we were quite surprised, because some of the most premium watches actually get sold across the country, where we don't have stores. So I think that's something which is very, very powerful. We invested a lot in rebuilding our Shopper Stop app and SS Beauty. SS Beauty has started picking up very well, and that's doing well. In case of Shopper Stop app also, we did the final rollouts by end of August, and we are seeing some good trajectory there as well. So I think we are very committed to that piece, because we understand that more and more when we speak to our customers, around 70% of the purchase decision or the brand search is happening online, and then customer comes to the stores and buy, and that's something which we are doubling down on as well.
Okay. Kavindra, a 30-second answer. You've already started passing on the GST benefits. How is the response? Good, bad, ugly so far?
Fantastic.
Okay, super. So that's a fantastic, and I think what's interesting is the way you've showcased the kind of savings and price increases on your website as well is very interesting, because it gives a clear picture to a buyer who's an online shopper, and you know, from apparels to footwear, with all the breakup that comes in, where, you know, any discount that you would see on your bill or any increase in price that you would see on the bill as well. But thank you, Kavindra, so much for joining us on the show and sharing an overall outlook with regards to GST benefits and the translation that could be happening from here on. But completely out of time. With that, it's a wrap on this edition of KYC from Mahima, the team that put that show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you answers to all of your personal finance questions. Whether that is saving and investing or spending wisely, we've got you covered. And today, I'd like to talk to you about a category of mutual funds that has been gaining a lot of traction. And I think the reason why it has is because of one of its allocations. I'm talking, of course, about the multi-asset category. And in the recent past, there are a few schemes from this category that have done incredibly well because they have an allocation towards gold. Now, even those schemes that had a significant allocation towards gold at the start of this year have reduced their allocation as gold prices have gone up. But the result is that the one-year performance of some of these schemes stand out and compare even quite well with even pure equity schemes. We'll talk about how this category is performed, how you should plan your investments in it, and whether you should run after recent performances and add them to your portfolio. Joining me today is Mohit Gang and Vineet Iyer. Both of you, thank you so much for taking the time today. Mohit, let me come to you first, just to give us a roundup of how these schemes have performed in the recent past. And I think a 1 year and a 3 year time frame would be good to look at.
Yeah. Thank you very much, Alex, for having me on the show. And as you rightly said, I think this category has kind of stood out for its last 1 year performance and has also caught on to the fancy of investors just because of the kind of investments the category is allowed to make. So look quickly, as per SEBI's definition, the category has to invest minimum 10% into three assets: equity, debt, and commodities. And as these funds stand today, most of the funds will have an equity allocation around 65 odd percent, some a little less than that for the tax advantage. Debt would be around 25 odd percent, 25 odd percent, and commodities is one allocation which has swung heavily in all these funds, and you can see major differentiation across the funds in the commodity allocation, which can range anywhere from 5% to as high as around 25-30 odd percent also in some funds. As long as performance stacks up, I think the range is from a 3% performance for last 1 year to as high as around 15-16 odd percent for 1 year. And the category average, I think, or the good performing funds stand around 15% to 11 odd percent range. So that's been the last 1 year performance, which is much higher than what your Nifty has delivered or a mid cap index or a small cap index has delivered in last 1 year. And that's sheer because of the gold weightage and also because of the fixed income weightage in these schemes, Alex.
Yeah, and the reason why we are focusing on that 1 year time frame is that quite a few of these schemes don't have a lot of data. They're not very old. So I want to come to you, Vineet, on what Mohit was saying and talk about the way that different schemes in this category have varied approaches to constructing their portfolios. There are some, as Mohit pointed out, that have a significant commodity allocation, and by commodity I'm specifically talking primarily about gold, and those that don't. How do you describe them? Would they fall into three broad buckets?
So if you actually, first of all, thank you for having me here, Alex. If you actually look at how this category has panned out over the last 3 years, I've got some data points here. So 3 years ago, there were only about 8 funds in this category. And in the last 1 year, this category has zoomed from being 8 funds to about 30 funds now. And one of the reasons why I see there is a increased interest in this category is because one of the pioneers in this category being ICICI Multi-Asset Fund, which they rechristened from a ICICI Dynamic Fund back in 2018. They are now getting about 1,200 to 1,300 crores of SIP every month, which means that there's a good amount of flow coming in. And the industry feels that when there is volatility, they have to come up with a new theme to attract new flows. So I've seen that this has actually encouraged most of the AMCs to come up with this category. And there have been widespread performances of the mutual fund schemes like what Mohit rightly suggested. And depending upon the gold allocation, there has been outperformers as well. For example, if you look at White Oak, which had typically 20% of allocation into gold, which was one of the highest in its category, has kind of outperformed in the last 1 year. In terms of the performances, the returns that it has generated is about 15%. At the same time, if you look at something like a Shriram Finance, which actually took that call wrong in terms of not having
a very significant portion into gold, they ended up delivering about a 1.8% negative return. So if I have to put into bucketing system, people who have got the gold call right, they have significantly outperformed the benchmark as well as the peer group. And fund managers who did not get this call right, of course, they have underperformed.
Yeah. Mohit, just to drive home this point, right, because ultimately, by my understanding, you need to have 3 assets at the very least in a multi-asset category. Otherwise, if you don't have commodities, if you don't have a significant allocation, and here I think you can throw in infrastructure, you can throw in real estate, you can throw in a couple of others, but real estate mostly through real estate investment trusts, and we'll come to that question in just a bit. But if you're not doing that and you're primarily allocating in equity and fixed income, then you're not truly different from a balanced advantage fund or certain other funds in the category, right?
Yes, Alex, I assume this question is to me.
Yes, Mohit, it is to you.
Yeah. So look, yeah, you're absolutely right. If it's only equity and fixed income, then it's like any other balanced advantage fund or a balanced fund. If you put in commodities in the mix, and which is what most of the fund houses have very astutely played on in last 1 year, which Vineet also alluded to. I think the entire mix changes, the entire risk reward matrix changes, the complete dynamics changes. Look, a White Oak having almost so they have reduced the allocation, but they went as high as almost 30%, if I'm not wrong, or 25% in commodities. They've now reduced it and trimmed it. But having gold and silver both, and there are fund houses which have also gone more aggressive on silver, has kind of changed the return profile in an year when equities were almost down, flat, or negative in some cases. Also, these schemes by nature can have REITs and InvITs. They have around 5 to 7 odd % allocation. Most of the fund houses will hover around 5 odd %, combination of REITs and InvITs, which also has kind of stood out because that gives you a fixed return on the overall portfolio, as compared to equities, which have just not given anything for last 1 year. And one important allocation category, which also is a part of some of the multi-asset funds, is the international allocation. If you see, Alex, there are few funds which also does around 10% odd allocation into international stocks, which also has kind of given a positive boost up to those performances. So the category is very varied. Any investor who's getting into this category needs to dissect it completely and figure out what exactly does he want, what kind of asset class does he want to hold, and what kind of risk profile of the fund does he want to get into.
Yeah, it's an important point. So let's take that forward. Before we get into some of these allocations and how the strategy has differed, particularly with commodities. And I do want to drive home that point on silver, because there's one scheme in particular that has gone overweight in the recent past on silver. In fact, we spoke with the head of that organization not too long back, and he did mention that they were doing it. But Vineet, a lot of people have gravitated towards multi-asset to shore up their allocation towards gold. Maybe that's that, or maybe they heard in the media, or they heard from their peer groups that this particular category was doing well, and that is because of gold to a large extent, as Mohit just pointed out. Do you think that the reason why people are getting into the multi-asset category may not be what should ideally be the case?
Sure. So typically, Alex, if you see, investor is like a herd mentality where, if something starts picking up, people would queue up in terms of getting exposure to this. And AMCs have also played out smartly by projecting the category where they are kind of focused most on the gold part. But in reality, if I look at the trend of gold allocation in the multi-asset category, that has not typically gone beyond the 15 to 20% mark. And although, it has been rated like a gold significant allocation. And if I look at the last 12 months trend in terms of the gold allocation, that has been coming down significantly. And today, if we see something like an ICICI is just holding about 3% odd, 6.5% odd with physical commodities and ETFs in gold, and silver also they're barely maintaining about 3%. So I think it's mainly the way the asset class has performed, and that has kind of boosted the multi-asset category in terms of attracting investors, is what I think has played well.
Okay, so let's talk about that gold and silver, right? Because, and I was referring to Quant, which has said that because of, and when we spoke to Mr. Sandeep Tandon, he essentially spoke about the gold-silver ratio. And it must be said that since that point, that gold-silver ratio, which effectively talks about the ratio between the price of gold and the price of silver, which at the peak was at 103 or thereabouts, where the equivalent of the same weightage of silver would you'd be able to buy 100 units of silver from the value of that 1 unit of gold effectively, right? And that has come down quite dramatically because silver prices have gone up, Mohit. But what would you say about that allocation and the way that fund houses have played this commodity allocation?
Look, Alex, I think one word, kudos to the fund manager and the fund house to have identified this opportunity. It requires a lot of gut and gumption to play this kind of a strategy. It's not very easy in Indian mutual fund industry to stand out of the way or out of the crowd and do something of this sort. Having said which, most of the fund houses did take a silver allocation, and they kind of increased the allocation also, but minutely. No one went oversized on silver, and you rightly pointed out the silver gold ratio was around 100, 103. It's now currently standing at around 86. If you check historical levels on silver, that's still very high. The historical levels kind of give a ratio of around 65 gold to silver. At 83, it's still very high, but that also means that gold prices can come down, not necessarily the silver prices go up to match the ratio. Right? But again, these are all tactical calls which perhaps fund managers can take it right on their account. But most of the multi-asset funds otherwise have a silver composition between 2 to 4% or at best 2 to 5%, other than the fund which you mentioned, Alex.
Yeah. Let's take a bit of a sidebar, Vineet, and talk about gold and silver, because ultimately that has been the focus of a lot of investors over the course of the last 1.5 years. And we've enumerated several reasons why gold and silver have done well. I think it's important to note that silver derives quite a large amount, 60% of its value, from industrial usage, and only a 40% or thereabouts from the investment angle. And it's interesting also that a couple of central banks, one in particular, has started keeping a silver reserve as well. But what, according to you, are the reasons why we've seen the rise in gold and silver prices, and do you anticipate that that is likely to continue?
Right. So first of all, I will talk about why silver is actually making so much of news. It's primarily because, like you rightly pointed, about 60% of the use cases is industrial for silver. And if I give you some stats, in 2024 alone, one of the best use of silver is to create the solar PVs. So the growth in solar PVs has actually increased the demand for silver by about 31%. So if I look at the numbers, it was about 257 million ounces that was required. And by 2030, it is estimated that approximately 546 million ounces would be required of silver for solar PV alone. And if you look at the countries which are going to be demanding this, China stands out, where they will be requiring about 20% of the total demand of silver by 2030, followed by India and US. Apart from this, if you see, the production of silver has been going down consistently. So over the past 5 years, the demand has been more than the production. Partly it is supported by the recycling that the industry has been doing, but it's not been meeting the demands at all, because of which also the demand being higher, supply being lesser, the price has kind of enhanced. If I talk about gold, gold historically has outperformed whenever there has been uncertainties both on the economic side as well as the geopolitical side. And we have all seen in the past 3 years, starting from the Russia-Ukraine war, how there has been a lot of geopolitical uncertainties. In the last 1 year or so, we are seeing a lot of economic uncertainties because of the US trade tariffs. And basically, these uncertainties have resulted in terms of people flocking to gold. A lot of central banks are now increasing their reserves, including India, China, Turkey, Poland. These are all stacking up on gold. Although the pace of stacking up has gone down, so we might see some reduction in demand by the central banks. But of course, the retail demand is kind of going up. So these are the two things. And the third thing why gold might continue to increase is because of the focus of US on weakening the US dollar, which means that if US dollar is weakening, of course, the demand naturally will go for gold.
Got it. Okay, and that's very well explained. Let's talk about ultimately what an investor should do. Mohit, you referred to their risk profile. And this is important to bear in mind because we've already described different strategies that are employed by fund managers in this category. So when you are going out to invest in these, should you watch for the way that these are constructed? Because it is possible that the tax treatment in a multi-asset fund could be different as well. Some could have an overweight on equity and so therefore will give you an equity taxation, while others will give you that 2-year long-term capital gains tax of 12.5% or thereabouts, right?
Yeah, absolutely, Alex. Look, I think each investor has to determine what his risk profile is and what does he ultimately want to achieve by having this fund in the category. To answer on front of diversification, look, I think if there is a category of investor which doesn't want to actively get involved in allocations between equity, fixed income, commodities, so on and so forth, and he's confused between all these categories, then multi-asset gives him a great choice. It's like a buffet served right in front of you, and you can then, and I think that also you don't have to manage, everything is in your plate, right? So you just have to pick up the plate. And from a taxation point of perspective, if an investor is looking out for equity taxation, then yes, he will have to do his due diligence to figure out which funds out of these are keeping a weighted average equity allocation over 65%. In that case, yes, the taxation is 1 year long-term capital gains taxed at 12.5%, and even then 1.25 lakhs is exempt, the first 1.25 lakhs of long-term gain, and short-term is 20%. But if your equity composition is between 35 to 65 odd percent, then the long-term definition changes from 1 year to 2 year. The taxation remains 12.5%, but the short-term gains are taxed at your marginal rate or the slab rate. And if there is a fund which has equity lesser than 35%, then it will be taxed as debt funds. But to my mind, there is no multi-asset fund which is taxed as debt fund right now. But you have multi-asset funds in the second category, which is equity allocation hovering between 35 to 65. So an investor, if he's not looking for a safer profile, but if he's looking for a equity kind of product or a synthetic equity product, which also gives him the benefit of equity taxation, then you have to be extremely careful to select a fund with over 65% of weighted average equity allocation.
Yeah, important point. And by the way, there are schemes in the category, and Edelweiss, for example, comes to mind, where they use arbitrage in order to meet that threshold of equity taxation, right? Or at least they have a larger allocation towards equity, not necessarily pure equity. They have arbitrage, which does not give you necessarily the same equity returns that you can imagine, but it does give you better than fixed income returns. So therefore, Vineet, in your opinion, and coming to the brass tacks, if you have to add some more to this, would you say that the allocation depends on, of course it depends on the investor, but what they have in mind. It is of course a long-term strategy. Nobody's investing in this for a period of 6 months or a year or even 2 years. You're talking about a long-term portfolio. But where does it fit in your opinion? And what are the schemes that you like in the category and why?
Sure. So first of all, depending upon the market levels, I think an investor, if he does not want to take too much of risk, but still have the equity taxation, they can go for portfolios which has a larger allocation to arbitrage, where they are protecting the downside. But of course, if the market starts zooming up, then you don't get the upside. But this is somewhere for someone who is kind of risk averse. But people who are okay with risk taking, then they can go for equity heavy, with of course the remaining amount going into a diversified commodity oriented allocation between gold, silver, and a couple of other rates and stuff like that. To my mind, a multi-asset fund looks well for a 3 to 5 year horizon. And from that perspective, I think equity-oriented multi-asset fund would do well. Of course, there'll be periods where commodities would outperform, and that will give some balancing result to the portfolio returns. So anything on the aggressive equity side would be my take in the fund, and ICICI fits well in that category.
Okay, ICICI Pru, and it's, as you pointed out, one of the older ones. Mohit, you want to change anything, or you want to have a different perspective on the schemes in the category, what to look for? And by the way, I didn't ask, but a recent notification from the Securities and Exchange Board of India changed the tagging of REITs to equity. Does that change anything from the perspective of the multi-asset fund?
Absolutely. I'll take the second part first, Alex. The categorization of REITs as equity will have a huge impact because now most of the funds which were demarcating REIT plus InvIT allocation to up to 10%, not just in multi-asset but in other funds also, can move the REIT allocation to proper equity allocation. So REIT will now become a part of that 65% allocation under equity category, and the InvIT allocation can also go up. Which was also a combination between REIT and InvIT. Now the InvIT alone combination can go up to around 10% in any portfolio. So my sense is we will see incrementally most of these funds having more and more of REITs, not just multi-asset but other equity funds also. To answer the first part now, which is my preferred choice, yes, I will kind of agree with Vineet now that I will go into equity heavy multi-asset funds standing right now. I think the commodity cycle has got largely played out, so I'm still bullish on gold and silver, but I'll still choose a balance between the two. And my preferred choices out here would be Nippon multi-asset, plus Axis multi-asset and DSP multi-asset. I think I'm going more by a 5-year rolling return performance, and I've seen these funds kind of stand out that their average returns have always been over in the range of around 10 to 12% and even higher for a longish period of time frame. So these are my three choices.
Okay, and the final question, which is amount of allocation. Of course, the suggestion is that you have a broad idea of how much you want your equity to be, your fixed income, and your gold or your commodities, gold and silver. But in this case, you're going to add something. In all probability, most investors have multiple schemes in their portfolios. They have pure equity. Sometimes they also have a pure fixed income, or they have other hybrids. So, Vineet, first to you, how would you position this as part of an investor's portfolio? And let's assume here that they're doing this not necessarily because they don't want to allocate themselves, but because they want to have diversification in their portfolio and they want a tactical investment.
Sure. So if I have to talk about the way we approach this category, we typically tend to allocate any money that is required between the 3 to 5 year zone, where we don't want to take too much of risk in the equity. At the same time, we want to also have a position in commodities they play out and kind of be counterintuitive to the equity at large. So that is the category we look at in the multi-asset space between this period.
Okay. And Mohit, so I know that you said that this is, according to you, meant for investors that don't want to allocate themselves, but what if you want a tactical investment in one of the schemes that you mentioned that is more aggressive maybe in the commodities space, and so from that perspective is providing you with a diversification and removing the requirement that you might have to allocate towards gold and keep investing in it?
Yeah, Alex, so I get that point, and I think it will all vary from investor to investor depending on the kind of profile he or she is. So if you are a retired investor, then perhaps this category serves great purpose because it is conservative in nature. It kind of hedges by itself by virtue of having 3 or 4 asset classes within the overall scheme. So it gives you a natural hedge and a conservative way of running your portfolio. So for any kind of conservative investor, I think anywhere an allocation of 10 to 20% could be a great allocation to have. For someone who's an aggressive investor, young investor, and can manage, then perhaps the allocation to this category could be negligible or lower. But again, as I said, it will all depend from an investor profile perspective and also from time horizon. As Vineet rightly mentioned, if your time horizon is within 5 years, then yes, a pure equity play might not be a great play to go for given the scenario at which we stand currently. Then perhaps a balance advantage or a hybrid or a multi-asset is the right category for you.
Yeah, in fact, both of these gentlemen have suggested that you look at a bucketing strategy. We will talk about that in future episodes. What they mean by that 3 to 5 year time frame is to identify why you would need the money and to plan your investments based on that. Gentlemen, thanks so much for taking the time. Always a pleasure speaking with you. I think this has been an enriching conversation. And that brings us to the end of this edition of Your Money Matters. Thanks so much for listening in, and let us know what you think. Do stay tuned. This is NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful
Let's get in an interesting conversation going. HSBC Global Investment Research came out with a note on an India multi-asset strategy wherein they say that while there are 4 factors or 4 variables that explains the performance of Indian equities, FX and bonds, equities look undervalued, government bonds and the rupee are undervalued to neutral. And a couple of catalysts could drive a rebound. One of the authors of that note, Pranjul Bhandari, Chief India Economist, Strategist, and ASEAN Economist at HSBC, Johnson, right now on the show. Pranjul, great having you. Thanks for taking the time out. And what's the genesis of this, the findings of this report? Because the overarching message from that note as it comes out is that a number of Indian asset classes are undervalued.
Yes, absolutely. Thank you for having me. We try to look at 4 asset classes altogether. This is something which is not really done in India. Either people look at equities or they look at bonds or they look at the rupee, but we try to look at all of it together and see if there are any common drivers. The reason why we were doing it was because we realized that across all the 4 asset classes, India had underperformed over the last year. At a time when emerging market returns were rising, India's returns were falling across these 4 asset classes. So some common problem was there and we wanted to get to the bottom of that. So when we looked at this, we started it, we were amazed to find that only 4 variables can explain much of the movement across all the 4 asset classes. 2 variables are global, 2 are local. In global, we have global growth, which should be supportive of Indian returns. We have the US dollar. Weakness in the US dollar should be supportive of growth of assets in India. And in local drivers, we had domestic liquidity, better the liquidity, more growth in assets, and expectations of potential growth. If people are expecting India's GDP growth to rise over time, then they want to be a part of that story. Between these 4 indicators, we explain much of the movement. Once we had this, what we did was we plotted it all, actual versus modeled. And it was very clear to us that given what's happening to all these 4 variables, equities has now fallen into the undervalued zone. FX is probably undervalued too. Rates is perhaps at the neutral zone. So this was the real takeaway. But the question to ask is, agreed, equities is undervalued, FX is undervalued. There is space and the case that can be made for a rally. But what will trigger the rally? What will be the catalyst? So we went out thinking of a catalyst, and what we found were 2 things. One, and there's no surprises here, if the 50% tariff on India is reduced, that could be a huge catalyst that can drive sentiments for this upward bound. And the second is a series of reforms. We've had the GST reform, but if we line up another couple of reforms, then sentiments towards India's growth could improve and we could see a rebound across all of these 4 asset classes. So this is, what we found. And I think this is heartening. After 1 year of very sluggish growth in returns, there is space for a catch up at this point.
Pranjul, hi. One line from your report that really caught my eye is when you say it's time to sit up, a turning point could be close by. And I found this interesting. It's apparent to everyone that at some point this 50% tariff will be halved. The question is when, and if it's not soon enough, what are the consequences? What is this turning point that you are looking at?
Yeah, look, I'm looking at 2 catalysts. One is not in our hands, broadly speaking, which is the 50% tariff. We don't know exactly when it goes down. It could be prolonged. But the other catalyst is in our hands, which is to basically say that, look, this 50% is not in our hands, but what we can do is we can really strengthen our economy with a series of economic reforms, GST being the first one, but will be followed up by many more. And I think that in itself can provide a huge stimulus to the economy. And I think that is what I'm sort of eyeing at this point more, what we can do in terms of reforms. Now, a lot of questions on what can we do. GST is one. I think it was just a starting point. But there is a deregulation drive going on across central government, states government, and I'm going to watch out for that because these can happen very silently, but over time they can have impact. And a final one is our attitude towards external trade. I think we are becoming a lot more open in attitude than we were in the past, be it trying to now quickly sign trade deals with US, EU, Middle East, Australia, or to actually woo other countries to get FDI, thawing of relationship with China, cutting some of the import tariffs we were putting in a lot of imports into India that was increasing cost of production. So I think we have done a lot of external trade reforms over the last couple of months. So my sense is all of this could come together and give us a growth boost over time.
Pranjal, is there some sense of when do these things come to the fore for India? I mean, you guys would have this global team which will be talking to other countries as well about their investment plans into India because of all the measures that you said India has done. Is there a sense of when all of this comes together?
Look, that's a good question. What we are seeing right now is that FDI flows across the world is on pause. Nobody is really investing into each other's countries simply because the rules of the games haven't yet been settled. My sense is, by the time we get to the middle of 2026 and a lot of the tariff rates across countries are known, there are also a lot of things we are waiting for. For example, some exempted sectors like pharma, semiconductors. What happens to that? We get a clarity on that. We got the visa news over the weekend. We hear a little more if anything else is planned out or not, but at least we know a lot of the things get known. I think at that point of time, FDI flows around the world will start again. And my sense is that's the time when India can actually raise its hand and say that we are more open to FDI than we were in the past. We've done all of these deregulation reforms, come and produce in our country. I want to quickly add a nuanced point here. For a long time, India was only attracting high-tech FDI, solar panels, green hydrogen, EVs. But, that is a very partial strategy because many people are wooing that, especially advanced economies who are giving huge subsidies. So all of this money may not come into India. But what we haven't done in the past and we can do now is try to attract more mid-tech FDI, textiles, furniture, footwear, toys, the kind of things which in the last few years ASEAN was making, Vietnam, Thailand, Malaysia, and on the back of that growing their economies quite a lot. We can start attracting a lot of that because a lot of that is also labor intensive. It'll get us our jobs. So my sense is that can be a new leash of life for India. If we become much more open to mid-tech FDI, it'll be good for growth. But my sense is we'll probably see most of this happening around the middle of next year.
Said that, like you said, middle of next year would be the earliest you'd have some impact on that. What have you penciled in as the GST cut impact? When Prime Minister spoke on Sunday, he talked about a figure, 2.5 lakh crore in saving. Now the question is, where does that saving that Indians, the average Indian will have, where does it go? What is the back of the envelope calculation you have in terms of which sectors benefit? We've seen the very obvious and direct impact on smaller cars, passenger vehicles, etc. But where else do you see this being distributed?
Yeah, so the 2.5 lakh crores, 2.5 trillion rupees includes both the income tax cut and the GST cut. So out of this 1 lakh crore is coming from the income tax cut, which was announced in February, and 1.5 is coming from the GST. This 1.5 amounts to about 0.4% of GDP. And I would say that is probably the consumer boost that comes out of the GST tax cuts. And my numbers are completely aligning with the numbers that were announced by the Prime Minister. So I'm quite happy that, my numbers are okay. But whether this will impact GDP growth fully or not will also depend what the consumers do. This whole 0.4, if they spend the whole thing, then it's a boost of 0.4 percentage points on GDP growth. So if our GDP growth was 6.5, it could become 6.9%. But sometimes the consumers don't spend it all. They save a part of it, especially if they are nervous about their wages and salaries, in which case the boost to GDP could be lower, say about half, 0.2 percentage points. So I would say that's about the range, 0.2 to 0.4 percentage points on GDP growth from only the GST tax cuts. In terms of which sector, I think the one sector that stands out a lot is, cars. In fact, a lot of the dealers that we talk to, car dealers we talk to, a lot of the channel checks that we do suggest that in terms of questions and demands and orders, they are completely bracing for double-digit growth in the run-up to Diwali. And I think we will see that in most of the other consumer durables as well. I think that will be a big increase. So my sense is, generally speaking, September and October, we'll see good growth numbers. There is a trade-off going on. Tariff is taking away from growth. GST tax cuts is adding to growth. I think over September, October, the GST tax cuts will win. On net, we will do very well. My problem is what happens once Diwali is behind us. What happens in November and December when we don't have a big festival to look forward to, and if 50% is there at that point of time, I think that's when things could start getting a little murky. But right now, over September and October, I think the sentiments will be good.
That's very well put, Pranjul. If we go by the estimated 8 to 10 week timeline that Chief Economic Advisor talked about, and he of course said this is my estimate, this is not a finality, then we should be fine. But it is on a razor's edge for the next few weeks or so. Thank you so much, Pranjul Bhandari. They're absolute pleasure to speak with you. As always, very lucidly putting together the points. And I think a few big takeaways from what Pranjul Bhandari has said, that equities, all four asset classes that she looked at, equity, rupee, interest rates, bonds, have all underperformed compared to the rest of the world in India over the last 1 year. India is yet to join the party, but there could be a change around the corner, and that is also happening because of the GST cuts. We should start making it attractive for FDI to come in. N. Jayakumar, MD and Group CEO of Prime Securities, with us on the show this morning. Jake's great speaking with you, and always a pleasure to have you with us here on NDTV Profit. You have this fantastic note on global volatility, which we'll talk about in a bit of detail. But I want to start with an overview from you, because we're speaking at the start of the Navratra season. You have these GST cuts coming in. Markets seem to have shrugged its shoulders and moved on. Why do you think so?
Well, actually, the good news is that a lot of the bad news is already in the price. A, our markets haven't been performing vis-a-vis their global peers. B, we've had the worst, I feel, of tariffs and tariff-related rhetoric, tariff-related bombast, which has been sort of played out. We've had sort of sobering noises in terms of people wanting to now talk about a deal that could happen. So we've gone through the full circle. We've had earnings disappointments, and now we have a situation where corporate balance sheets are as deleveraged as they've ever been. The private sector capex, in a sense, the greenfield capex is also beginning to start off as one of the things that was not there over the last several years. It was largely the public sector that was carrying the way forward. Keeping all this in mind, inflation is under control. Liquidity is very good. RBI is going all out to provide ample and more liquidity to the banking system. And in that context, I mean, really, I would say that it's a confluence of multiple factors, and especially the global tariff playout that's happened over the last several months. And I think paradoxically, providentially, whichever way you look at it, we could end up with one of the best deals, though that doesn't seem to be on the anvil in terms of case facts today. But I do believe that when the dust settles, India will emerge with a reasonably good tariff deal with the US. Apart from, of course, multiple bilateral FTAs and bilateral treaties with a whole bunch of trading partners, possibly this could mark the beginning of, and the final fling came in the form of some degree of fear amongst the IT majors, the H-1B issue, which may be the harbinger of other things to follow. Though the IT sector, I believe, is more beset with issues of how AI will disrupt it rather than many of the other issues regarding tariffs, etc. So in the short run, I think most issues have played out. We are still short of an all-time high, which the other markets have convincingly made, and especially the markets in the US, the Nikkei, for instance, the European markets are hitting new highs consistently and scaling new peaks. So from that perspective, India too should follow. The catch-up will be there. And with the GST moderation and the GST rationalization, etc., I mean, I can't think of a better set of circumstances. The FIs continue to be at the margin sellers. Their positioning is reasonably weak. Even today, they are far, far more short than they have been. So from that perspective, I think a contra rally is well and truly underway. We are about 1,000 points away from when we started at 24,200 or 24,300. We are about 1,000 points up from there, but we have some way to go is what I believe.
The contra rally is well underway, and Jake saying it is very, very crucial this time, because people really follow the path that you're setting. The portfolio you're talking about in this landscape, let me just come to that, the portfolio construction. And I noticed that pharma is something that you see as front and center, perhaps, if I'm not saying it incorrectly. Is this more of a defensive play, or is it untapped potential that you see?
Well, pharma, I think you could, you've put it better than I could have, which is front and center is pharma. It's even from an index weight reasonably low. It's still at a probably index weight of not more than 6.5%, and that was dominated by 2 or 3 stocks there. The ownership levels are very, very low in pharma still. Apart from which, I think the generics is actually a lifesaver for the US markets, for the US consumer. And I think, my own orientation is that of taking a contra bet in this from the perspective that people have viewed this largely as trading plays, and in many cases, event-led plays, like whether there are FDA approvals, etc. I think pharma has made, in the last several years, significantly more strides. There is an entire PLI orientation to some of the portfolios where the local manufacturing and the local self-sufficiency in areas like penicillin G, etc., is a step that the government has taken, which inevitably, as I see, they've already stated this, so this is not something that is completely out of the woodworks, that they will follow that up with minimum import prices. So domestic manufacturing of key inputs, key intermediates through PLI schemes is the way forward. That will supplement a lot of the generics and the manufacturing, the ecosystem that it supports, both from the manufacturing of generics and also other formulations, which I believe in the past we viewed these as not significant catalysts. But I think these are pretty major. And while they may be cozying up that India will do with China on certain trade aspects, but I think the Prime Minister's address a few days ago has laid to rest any doubts that we may have had about self-sufficiency and Atmanirbharta, as he calls it, that we need to manufacture what we want to consume. And if pharma intermediates, you don't want to be at the mercy of China. China recently has attempted to drop prices with a view to sort of shake up our industry. But if anything, it has only sort of added to the resolve that minimum import prices and other protection will happen where domestic manufacturing is being pushed. In addition to this, there are a lot of private equity-owned pharma portfolios in different parts of the world, which are up for grabs as these private equity folks come out. You must understand that many of these were acquired in low interest rate regimes 4 or 5 years ago. And the fund life may have played out, but more importantly, interest rates are up now. And therefore, many of these portfolios will be up for grabs. And I think as long as companies acquire this with prudence in terms of paying reasonable multiples only, I think Europe, especially Eastern Europe, will be a big play for pharmaceuticals, especially generics, as also, of course, the expansion of certain facilities that people may have in the US. So that's like a long explained explanation for why pharma. Apart from which, I think the other front and center, to use your phrase, would be the banking and financial services. I think there's going to be massive consolidation in the NBFC space, because the NBFC growth is largely predicated on leverage, and leverage comes with personal guarantees that most private equity stroke individual promoters do not want to partake with. Therefore, if there is no if there's no personal guarantees coming through, leverage is a problem, then effectively the growth in some of these NBFCs is a question mark. So these NBFCs will either consolidate with each other or, more importantly, consolidate into banks. Therefore, small
Jakes, good morning. This is Hiral Desai. That's a very interesting point that you make, where you're saying that your NBFCs will either consolidate with each other or consolidate with banks. If you could give us a few names and examples of what are the potentials that you see. I know you would not talk stocks, but just an idea of what is that size of NBFCs where you see consolidation happening, number one. And do you think that the FDI inflow, which is now expected to come back potentially, if that comes back, would it be BFSI as a sector which would then see this FDI inflow as well?
Absolutely. I think any country in the world where FDI is either encouraged or as FDI actually comes through, the BFSI is the first, if you will, destination for that capital. I see money coming into private sector banks, but to add to that point, I mean, when you see examples, there are NBFC portfolios that are being sold all the time. But recently, a company that got acquired by Ugro Capital, which is a first-generation entrepreneur-created NBFC, Ugro acquired a company called Profectus. It may have been at a multiple of 1.1 time because multiples in the NBFC space have also contracted. Now, Ugro effectively becomes a larger NBFC as a result of its Profectus acquisition. But this is the kind of play that there is. So there are multiple names in this space. I mean, names only illustrate, where deal making could happen, and that's not appropriate for me to talk about. But essentially, NBFCs to consolidate into each other or into banks, that's the theme. And foreign capital will come into private sector banks, which can effectively hasten the theme that I talked about, which is NBFC consolidation.
Jakes, I think the bus that we're missing is the AI boom. Look at what's happened with NVIDIA last night, and between NVIDIA and OpenAI and that whole, the sort of virtuous cycle or whatever you want to call it. That's the big push in the United States. India has perhaps missed that party altogether. Do you see a potential over there from the Indian context and the portfolio that you're talking about?
So I'll tell you what we may, in a sense, I think, I'm a great fan of what the IT services companies have created. And these companies have been actually created with a view to handling, services and, to put it loosely, to some extent, we may be uncharitable in saying labor cost arbitrage. But having gone past that, size and scale has been created, transitioning of systems from one to the other have been handled by them. Multiple geographies are being handled by them. Maybe the investment in pure product and pure research orientation, which multiple companies, of the Microsoft and the Google types have done, where they've invested, tens of billions of dollars in actually primary research, that may not have been done. But what that has essentially ended up doing, and DeepSeek has actually been a great champion of this, which is to say that maybe not the best product, but Me Too products are available where any LLM, large language models, are able to create a wonderfully sophisticated assistant for improving tasks which are done by rote. So if repetitive work is in a sense eliminated or made better with AI to that extent has now become, is almost getting commoditized in terms of the APIs or in terms of the agentic.
Very quickly, because I'm almost out of time with you. You started by saying you have a maybe more favorable view on IT companies in India than the market seems to have right now. A bit of a recovery, but nevertheless. Between AI, H-1B visa, do you think that there's scope there?
No, that's not the point I made. I think the point was that the disruption that AI can create is still calculation in the works. And I think the IT companies have far more to lose with AI disruption than otherwise. But where India is not missing the boom, if you will, is a number of user industries using AI to make productivity higher and to make their efficiency higher, if you will. So from that perspective, AI is still something that I think we are going to be using, and a lot of industries, a lot of companies are doing so. Maybe not IT services to the extent that we would like them to do.
Okay, fair enough. And Jay Kumar there, breaking it all down and making sense of very tough times. Thank you, Jay. It's always a pleasure to have you.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Good evening. Welcome to the big question on NDTV Profit. I'm Vikram Oza. Now, for over a year and a half, the Adani Hindenburg saga has cast this long shadow over India's markets and our regulatory systems. Yes, it started with a 106-page report by a little-known US short seller called Hindenburg that really wiped out more than $100 billion in market value and sent shockwaves through Dalal Street. But now SEBI has spoken. Its final report after a thorough probe and scrutiny is out. India's market regulator has dismissed the core allegations of stock manipulation and financial fraud against the Adani Group. Now the report is ruling that there were no related party violations, no siphoning of funds, no manipulation of share prices. Loans were paid back, disclosures were in order, and that's how the so-called smoking gun has fizzled out. Gautam Adani himself says this proves what he has always maintained, that the claims were baseless, an exoneration, which brings us to our big question this evening. Now that Adani is vindicated through the SEBI report, is it time to take on India's economic attackers? And that's what we're discussing tonight. We are going to be joined by political analysts, market experts, but right now we have Supreme Court lawyer Rayan Karanjawala, who's with us. Great to have you with us, Mr. Karanjawala. First, how do you... Yes, great to have you. But tell me, in your opinion, how are you viewing how the Supreme Court has handled this case? They appointed an expert committee. They sought SEBI's findings and then effectively allowed the regulator's word to stand. Did the judiciary strike the right balance in this case, according to you?
The Supreme Court has handled the matter with its usual sagacity. It interfered only as much as it needed to. It appointed an expert committee to see whether there were any prima facie violations, didn't find any, and then let SEBI, which is the regulator and which is the natural adjudicating authority, run its full course. And so it waited. As you know, in January 23, these allegations were made. Most of 23 and 24 and part of 25, SEBI went through all these allegations in detail, as you yourself just pointed out. And they have ultimately come to a simple conclusion that there was no wrongdoing on any of the allegations made against the Adani.
But Mr. Karanjawala, whether it was the Indian judiciary, you spoke about the Supreme Court and how it has acted in this matter. Whether it is the Indian judiciary, whether it's our market regulator, SEBI, whether it's our parliament or corporate India as a whole, everyone had to answer Hindenburg's allegations. Now the question to you is, shouldn't Hindenburg itself be made to answer? What is the way that that matter can be pursued now?
Well, I'm sure there are legal avenues open to the Adanis in case they choose to take it, which is that they can sue abroad and so on and so forth. But then you'll have to prove a very high level of, perhaps malice before you're actually able to take any real action against them. So Gautam Bhai's lawyers will, of course, advise him on what to do. At this juncture, I just want to make a small disclaimer, which I always do when I speak on this issue, which is that the group is a client of mine for the last several years, though, of course, they haven't consulted me in this matter. So I just thought I'd put it out there too.
Certainly, and we appreciate the disclaimer, Mr. Karanjawala, but shouldn't those responsible, I'm pursuing this matter as far as the allegations are concerned and what transpired because of it, the market saw a big crash, the kind of damage that was caused by that report. Shouldn't the people who put that report together and put it out face consequences for what seems to have come through in the SEBI report as baseless claims?
Well, I mean, at a sort of a emotional level, maybe you're right. But then in order to face those consequences, certain actions will have to be taken either by SEBI itself or by the Adanis by way of a suit against them for damages. So those are things which are out there. You have to understand one thing, that, when you are as big as Gautam Bhai is in terms of business, then a lot of this actually goes with the territory. I saw it with the Ambanis also right in the beginning when they were coming up.